Good morning and welcome to today's presentation with Nolato and the Introduce Investor Days. My name is Eric Castle and I'm an equity analyst at ABG covering Nolato. And with us today we have the CEO, Christer Wahlquist, and the CFO, Per-Ola Holmström. We'll have a 20-minute presentation followed by a short Q&A from me. With that, I'll leave it over to you.
Thank you and welcome. We will start our presentation on actually page 3, since you can see us in picture anyhow. So just to summarize Nolato in brief, we are of course working as a development and production partner of polymer product systems, founded in Torekov in 1938, been on the stock exchange since mid-80s, and latest thing was that we acquired a US-based company called GW Plastics, and it's now included in our earnings per 1st of September. Our group consists of 3 business areas. We have the medical solutions, approximately 39% of sales. We have integrated solutions, approximately 38% of sales, and industrial solution at 23% of sales. Some key ratios, including GW pro forma. We have then net sales of approximately 10.5 billion Swedish and approximately 7,200 employees. Turning to page 4, something about our business concept. Of course, a high-tech developer and manufacturer of polymer product systems. We are working in 3 different business segments as explained. They are completely different, but we have a lot of things that bring us together, creating a lot of synergies. Of course, we work with the same raw materials across all business areas. We work as a solution-oriented development partner and can gain knowledge and skills from the individual business areas and transfer them across markets. The production technology is the same across the different business areas. So we feel that we gain a lot by being in the 3 different market segments, but with the same core technology behind the scenes, giving a lot of advantages to our customers with transferring of technology and specific skills built up in the individual business areas. If we turn on to page 5, describing a little bit about our journey. We are on a long-term journey from, if we go back maybe 10 years, we mainly work with mobile phones, smaller industrial and medical, more of a supplier, and we had a leading position in Sweden, and we started developing our position in Asia and Central Europe. Today, we are a solution provider to partners that are global high-tech companies. We have a balanced group with medical, industrial, and integrated. Mostly work as a partner to our customers, supporting them with the strategic development and production of core things. We have a global footprint. We are strong in Asia and Europe, and we used to be weak in North America, but since the week, we have a strong footprint on 3 continents, and we have an overweight to medical, which is our direction for the future. Turning to page 6 to give some basic information about GW Plastic. This acquisition is all about delivering our strategy. We have this long-term strategy, and GW Plastics fits perfectly into that long-term strategy with a very strong footprint on the United States and North America, focusing mainly on medical. This company was founded in 1955, has been a family-controlled company since mid-80s. They have a headquarters in Vermont, total of 7 production facilities in the United States, Mexico, China, and Ireland. They are an industrial leader in complex injection molding of thermoplastic and silicone solutions. We see a high degree of innovation, extensive engineering, and technology know-how in this company, and it will fit perfectly into the Nolato corporate culture. Turning to page 7, showing the Nolato geographical presence following the acquisition. And as you see on this picture, we have now a very strong footprint, global footprint. with a very good spread on the North American market, European market, and Asian market. So we have a solid global position on the 3 key continents, creating significant market synergies for us. Turning to page 8.
Good morning. The annual sales of the GW Plastics is 1.8 billion with an EBITDA margin of 7%. The company has about 1,100 employees, and just over 4/5 of GW Plastics business relates to medical, and the rest will be within industry, which is mainly automotive. The company has a diverse customer base, the largest customer standing for about 20% of the sales. It is and has been a growth-oriented company, achieving an annual growth of about 10% over the past 10 years.
If we then turn to page 9, focusing a little bit on the medical solutions business area. In the medical solutions business area, we have a global expansion strategy, and we've been growing this business area continuously for the last at least 20 years, year by year, achieving a strong organic growth combined with, of course, some acquisitions from time to time. If we look on the 6 months, we have a little bit more than 1.3 billion in sales, an EBITDA margin of close to 14% for this year. Turning to page 10, going down a little bit deeper on the medical solutions. The position is we have good growth with maintained profitability. We have a very strong position with leading global customers, and we focus on the top pharma, top med tech companies across the globe. We have a global presence, and our customers, of course, you see a list here, and it's all major pharma and med tech companies. Q2 sales, 700 million Swedish, an EBITDA of 100, creating an EBITDA margin of 14.3%. And on the picture, you see the GW sites in combination with the medical solutions sites across the globe. If we turn to page 11, here are some of the focus product areas that we are targeting. One big area that we think is very interesting and has shown a good development is drug delivery systems for drugs, and it's an area where we think we will see continued growth with the large molecule bio-based drugs coming, creating the need for advanced auto-injectors and things like that. Another area which we are focusing a lot is in vitro diagnostics, which is, of course, automatic diagnostic test for all kinds of diseases, including, of course, COVID-19. Cardiology is very important. It's pacemaker, implants, and those kind of things. Continence care is a huge market, very interesting for us. And then, of course, pharma packaging. If we turn to page 12, focusing on integrated solutions. The strategy within integrated solution is to expansion for our business into new market segments. So formally, if we go back maybe 5, 6, 7 years, our market was the telecom market, mobile phones and networks. But over the last 5 years, we've been expanding ourselves into other areas of our interest with similar demands as the mobile phone and the networks. This year, of the accumulated first 6 months, we have 2 billion in sales, an EBITDA of 277, creating an EBITDA margin of 13.8%. If we turn to page 13, here is a brief introduction to the integrated solution. We are a development partner, a differentiator provider, and supplier of mechanical models and finished box build pack consumer electronic products. We are steadily growing within EMC and thermal solutions. Our position is we have a strong partnership with selected customers. We have a very unique expertise in technology and cosmetics, an excellent skill in product management and flexible production. And below you see some of the customers within this area. Our sales was then in the second quarter this year, a little bit more than 1.1 billion Swedish, and then EBITDA of 166 million, creating a margin of 14.4%. We have seen over the last year a strong growth in this area in what we call VHP, vaporizing heating products. If we turn to page 14, you will see a split up of the integrated solution business area. So the largest portion of this is consumer electronics, where we do a lot of box building and advanced modules for consumer electronics. The largest portion of this is VHP, the vaporizing heating products, but we have connected Wi-Fi systems, we have wearables, we have mobile phones, we have all kinds of different devices that we are producing and developing for our customers. And on the lower part, you see EMC and thermal business. This is shielding solutions for electromagnetic influences amongst electronic components and thermal management of electronic devices. This is an interesting possibility for us. We used to be 100% network on this, but we have over the last years in this area also spread into other areas. If we turn to page 15, the growth strategy for the EMC and thermal, it's new market areas. We see a lot of possibilities within the automotive industry with more connected cars, electrical vehicles, creating a need for those shielding and thermal solutions. So we see all kinds of different new areas. We are very strong in the mobile phone, the network and telecom industry, but now we are sort of building up a position in other areas. Turning to page 16, looking into industrial solutions business area. In this business area, we are in the technology and geographical expansion journey. Last year, first 6 months sales this year was approximately 1 billion Swedish, with an EBITDA of 58 million, creating a margin of 5.6%. We have had an impact during the first 6 months this year of the COVID-19, affecting mostly our automotive part of this business, which have had a shutdown during a period of time during the first half year. If we turn to page 17, look into the industrial solutions. So here we are a leading development manufacturer of products and polymer systems for customers within automotive, hygiene, packaging, gardening, forestry, white goods, furniture, and other selected industrial segments. We have a very strong position in Scandinavia and Central Europe. We have cutting-edge technology offering, and we have partnership with selected customers. And now we get a stronger possibility on the North American market with our GW acquisition. So second quarter sales, 459 million Swedish, and an operating profit EBITDA of 11 million, creating a margin in second quarter of 2.4%, strongly affected by the COVID-19 situation. Turning to page 18, if we look into the business industrial solutions business area, we have two parts. We have the general industry, which is the largest portion, with the white goods, the packaging, the hygiene sectors, and then we have the automotive, which is mainly then the Scandinavian automotive market, approximately 40% of the business area. Turning to page 19, and something about our strategy and positioning ourselves towards a global high-tech partner. And we have a process for partnership selections. So we focus a lot on when we select new customers on the growth potential, the long-term relation and corporate culture of the partner, the global reach, of course, geographical match. And we are expanding our footprint by expanding the addressable market and further potential with the existing customer and further potential with new customers.
Page 20. On the left side, you can see a summary of Q2 numbers. We had sales of about 2.3 billion and an EBITDA of 269 million, giving a EBITDA margin of 11.7%. On the right side, you can see our sales development for the group during a long time period, and during that time period we have seen growth of about 20+%. About half of that is acquisitions and the rest is organic growth. Page 21, we can see our 3 targets we communicate. We should have a target, an EBITDA margin of more than 10%. We have a cash conversion target, meaning more than 75% of our EBIT result, and we should have an equity asset ratio exceeding 35%. And as you can see, our 2019 numbers, the last ones, they are exceeding those targets. Page 22. These are our 3 headlines for our sustainability strategy: creating business opportunities by greener solutions, managing Nolato's sustainability aspects in a proactive way, and we should be accountable. On page 23, we show development of 3 important environmental figures, which is energy consumption, carbon dioxide emissions, and waste volume. And as you can see, the lines in all 3 of these, they are going in the right direction. Page 24. On the left side, there are our largest owners. The 2 first, the Jorlén and Boström families, are the founder families of the company. And then we have a list of a combination of Swedish and foreign financial institutions. About almost 40% of our shareholders are from foreign countries, and we have a bit more than 11,000 shareholders. On the right-hand side, you can see the share price development during the last 5 years and our dividend during 10 years.
On page 25, we sort of summary our journey. The Nolato is constantly on a journey, and we are right now, I would say, taking the next step in that journey by completing the acquisition of GW Plastic. And our future focus would be to be a worldwide solution provider with an overweight to medical and with a strong footprint on the 3 continents. So that's sort of summarized Nolato and our continuously journey.
Thank you very much, Christer and Per-Ola. So, firstly, I find it quite interesting that you have changed the forward strategy to overweight medical. Could you perhaps go into some more detail on why you have decided to focus on this segment over the others?
I think it's not a change. It's something that we've been communicating for a period of time, but the driving force behind that is that we see that the combination of the 3 business areas is excellent, but with our long-term focus, building step by step and creating a very strong medical for the future is the right thing for our corporate culture and what we can see. medical is very conservative, built step by step, very, how should I say, long-term business. And since we are an extremely long-term focused company, that fits our culture very good. And we have built over the last 20 years a very strong footprint and a reputation within the medical market, and we see that we will continue to do that.
All right, thank you. And medical solutions have consistently had a higher margin than the other segments. Could you walk us through how you have been able to sustain this?
I think with our partnership approach together with our customers, always trying to create win-win situation for the long term, being accountable and helping our customers to be better than their competitors by creative solutions and so on from our side. And then, of course, creating that value gives us the right to have those margins.
Okay, so one last on medical and margins. The acquisition in medical solutions of GW Plastics will initially be margin dilutive, but you have a goal of increasing it towards segment levels, I believe. Could you perhaps talk about what can be improved with the business and the process of implementing these improvements?
Yes, first I can do a sort of a historical back view. Over the last, I would say, 10-15 years, we have acquired a few medical businesses, approximately one every second year or something like that. And as a general rule, we have seen those kind of margins in those acquisitions that we now see in GW Plastics. And we have been able to sort of get the same, how should I say, Nolato standard margin on those companies over the years. And I think it's our way of creating value for the customer that gets us in that position. And also our strong focus on efficient manufacturing, always try to identify possibilities to drive away cost and share that with customers, creating possibilities to create, again, win-win situation and enhancing our margins.
Okay. You have a large volume volatility in the integrated solution segment. Why is this the case, and how are you working to combat this going forward?
Yes, we've been in what we call now integrated former telecom, and over the last 20 years we have seen this volatility. And it's consumer electronics is a much faster moving market than normal industrial and of course medical. Creating swings in volumes and of course stock movements and so on, creating this volatility. But we have also shown over the years that we can, with our flexible production structure, make sure that we make money even though volumes are volatile.
Okay, and also on integrated solutions, you've had high growth in heated tobacco products in the last quarters, partly due to inventory buildups, as you've stated. What's a more normalized growth for the heated tobacco products?
The market of this VHP, as we call it, it is a growth market on a global base where we see growth across. And we think this is an interesting market to be part of. Of course, there are different solutions, different type of devices supporting this. So how the market is growing in a good pace, and we will see individual swings over quarters with stock build-up and so on. But we think it's an interesting market, and the market is growing, and we have a good position in this market. But of course, which device and which partner will create which type of growth, we don't know exactly.
All right. And still, after this acquisition you made, you still have a very low net debt to EBITDA and significant room for acquisitions as we see it. How does the acquisition pipeline look at the moment?
We are continuously looking for acquisitions. If they create value and 1 + 1 is more than 2, that is our long-term strategy. And we are looking at other medical, of course, and also combination of medical and industrial. But it has to bring value to the total picture. That's always been the case.
All right, thank you very much. I think we have reached our time limits and we'll have to end right here. And again, thank you very much.
Thank you.
Thank you.
Swedish Garant, one of the leading developers of new smart electrical products. We are an innovative force with an internal strength and competence. Focusing on durability and design, we develop products that ensure energy saving.
Ja, men då ser allt väl ganska bra ut. Hur ligger vi till tidsmässigt? Vi är 1 minut kvar. Okej.
Kommer du gå någonting i kamera?
Jag?
Kommer du vända dig direkt till Patrik?
Jag vänder mig till Patrik, presenterar honom, sen sätter jag mig här. Sen kommer jag upp och ställer frågor, tänker jag. Om det går bra.
Och jag ska hålla mig i hörnet här borta.
Nej, du ska stå framför skärmen, annars står du i mörkret.
Jaha, jag ska stå framför skärmen. Jaha, jag trodde, ja. Yes.
Du ser bilderna på skärmen.
Jajamän.
Bra. Du ska titta det här, du kan titta in i den kameran sen.
Japp.
Nej, förlåt, i den kameran. Och så
I den kommer han, ja.
Det verkar vara bra.
Och då har vi... Ja, då ska vi köra igång. Då räknar jag ner här.
Ja. Okay, good morning and welcome to ABG Investor Days. Right now we're going to listen to Garo. We have the CEO, Patrik Andersson, with us, who will present the group, and then after which we will have a bit of a Q&A session.
Perfect.
So with that said, please go ahead.
Thank you, Oscar, and thank you for this. My name is Patrik Andersson, and I'm the CEO for the Garo Group. And I will present Garo for you. And we will start with a short movie.
Strong innovative power, great courage and a unique foresight has made Swedish Garo one of the leading developers of new smart electrical products. We're an innovative force with an internal strength and competence. Focusing on durability and design, we develop products that ensure energy saving, smarter control and simplicity in both assembly and usage. We are present throughout the construction with temporary electricity. We provide the completed building with a permanent power supply. We light up campsites and marinas. We build effective solar solutions. And we can charge all kinds of modern electrical vehicles everywhere, with a home charger or with an efficient fast charger along the highway. We take a clear overall responsibility because we are future smart.
Short introduction of the company. Garo has been in the business for over 80 years. So we were founded in 1939. We divide our business into two business areas. Sweden, which consists of our Swedish operations. And then we have other markets, which is Norway, Finland, Ireland, UK and Poland. We have 4 production sites, 3 of them in Sweden, 2 in Gnosjö, where we also have our head office, 1 in Värnamo, 30 kilometers from Gnosjö, and 1 in Szczecin in Poland. Then we divide our business into 4 product areas. The biggest one, electrical distribution products, which consists of about 3,500 products and half of our revenues. Then we have e-mobility. It's a fast-growing area. Have grown from 22% to 25%. Oh, sorry. Project business consists of 22%, and temporary power about 6%. And I will explain on the coming slides here more in detail in these areas. Electrical distribution products is the biggest area for Garo, consists of 47%. And we have 3,500 products in this area. It is consumer combination units, components, PV solutions, safety switches, terminals, and so on. And these products are used by the installers in many different applications every day. And this is a very important area for Garo. The second biggest area, we have one big area in the electrical distribution area is car heater. This area we could power supply a car heater, we could power supply camping sites and marinas in an efficient way. And in this area we have learned a lot how to run this type of system outside in tough climate, in rain, in snow, in heat and cold. And we have learned a lot of knowledge in this area. And we take all this knowledge into the e-mobility business in 2008. We launched our first e-mobility product there in 2008 with all this knowledge we have in this area. That's Garo as a market leader. And the e-mobility business we have divided into 3 different areas. We have the wall boxes, which you can see in home areas, apartments, industry. Then we have the public chargers that you can see to the right. You often see them in parking garages, parking spaces, shopping malls, and so on. And all these products are smart products, which means they could exchange information between the products. They could exchange information to the car. And for example, we have a smart system called load balancing, which means that all the energy you have on the site, the system can in a smooth way run the system without blow the fuses in the system. So that's a good and smart system. And we also have a software we call G-Cloud, which you can run your system, and you can also have fully control in your computer or smartphone. The third leg is the DC charger. The DC charger you often see along the highway, outside the fast food chains, which means you can charge all vehicles quickly, and you can also charge transport vehicles. And the beginning of this year, we launched our own developed product called Aktier, which is a fast charger, 50 kilowatt fast charger. Can charge all different cars. We have user friendliness, reliability, and sustainable material in this product. All the chasing is made in manganese, which is important in a sustainable way. The design is also important because all the wall boxes, public chargers on the DC chargers have the same design, which means that the customer could buy a complete solution with the same design, same software, and so on, a complete system. So this is really important launch for Garo. We have also launched a new twin box. It's a wall box with 2 outlets, which means that you can charge 2 cars at the same time. And also this one is, of course, designed to fit into the Garo range. To summarize the e-mobility business, Garo has products for consumer, we have products for the public charger, and we also have a charger for the transport vehicles, high power segment. And in the beginning of this year, we also acquired a company called EV Charge Partner for the service and support. So now we could offer the market a complete solution with all the products, all the software, and also this service and support agreements. So now we have a really, really strong and complete solution in the market. Product business. Here we have different customized products for power supply. Distribution cabinets, cable cabinets, and switchgear up to 2,500 amps. We have also here launched a newly product in the beginning of the year, a new cable cabinet. We have in a sustainable material, which is new in the market. These products have also a lot of synergies with the e-mobility business, because when you're buying 10 or 15 chargers, you need to power supply this type of solution. So we can offer this type of cable cabinet and an e-mobility solution in the same offer. And that's a big thing for us and for the customer. Temporary power, which have products during the construction site. Construction time when you have a construction. So we could power supply, we could lightning, we could heating, and we can drying the construction during the construction time. So when the building is ready or the property is clear, we move this product to the next construction site. So it's temporary power. Strong development. This has been over this 80 years history for Garo is very important for Garo to develop new products. We invest a lot of money to develop new products and to find new business for Garo. We have here a strong team with a holistic view and modern design, which is very important today. Of course, we have independent testing, a third part testing our product to see that we have the right standard, and it's a good thing for the customer to feel that these products are tested by a third part institute. So development is important, and I will come back to that later on in the presentation. Financial targets. Of course, we have long-term financial targets, and we have it on sales growth, profitability, return, equity ratio, and dividend policy. Here we also can see this is over a business cycle. And above that number, you can see the outcome for 2019. So we grow with 12% last year, profitability 11.2, return 26.8, equity ratio 52.2, and a dividend with 49%. Another area which is important for Garo is sustainability. We have picked up 7 of FN's global goals. Number 7, 8, 10, 11, 12, 13 and 16. And of course, we are working for a fossil-free society. With this e-mobility, we have the products and smart system to come to this quicker with a fossil-free society. So this is Garo in the front line enabling this development. We're also choosing a sustainable material. As I mentioned before, the Aktier has sustainable material, the new cable cabinet have it, and also this new twin box. So it's important for Garo to choose the right material for a sustainable future. Sales growth and development opportunities. Garo grow organic. That is our main driver, to grow organic, and that we have done for many, many years. But of course, we are interested to acquire companies. It could be a new product area, but it could also be some special knowledge in some area, as we did 2017 when we acquired a company called Webbil in Luleå with software competence. And as I mentioned before, we acquired EV Charge Partner with this special knowledge in service and support. But the main driver will be organic growth. And as I mentioned before, this product development is important to make this happen, to grow organic, that we have done for many years. The effect of the COVID-19. Of course, everybody talking about the COVID-19, and has it affected Garo? In Sweden, Q1 and Q2, it had limited impact on Sweden. But of course, we have done a lot of things in the company, working from home. We have digital meetings with our customers, and we have not traveled, no exhibitions, so we have made a lot of things digital. We have had negative sales in other markets, especially to these countries have had a lot of restrictions and lockdowns. So we lost a bit sales in April and May, but we saw it picking up in the end of the second quarter. So it's quite good. And of course, the currency, the Swedish krona and the Norwegian krona has deviation to the euro related. So we have lost exchange losses in the Q1, but we picked up that in the Q2. If we look on long term, beyond the COVID-19 virus, we have not changed our sight of the market conditions. We think the market condition is quite good. We know that the constructions, there will be less construction, but we think, and we have products that you need to run the property more energy efficient. You need to renovate and so on. So we think the market condition is quite well. If we look at the e-mobility, we see it's a high demand in all our markets to build out the infrastructure for e-mobility business. So all in all, we think it's good market condition beyond the COVID-19 virus, of course. Thank you for listening. I will show you our last movie about our newly launched product, Aktier, the DC charger. Thank you.
Okay, thank you, Patrick. Really interesting to hear about Garo, and I have a few questions to follow up. So, I guess starting off, Aktier here, the fast charger, you developed it this year and launch or having sales expected the current ongoing quarter, Q3 in 2020. But before this, you also provided fast chargers through a partnership with ABGSC, if I remember correctly. Could you just discuss, sort of why you chose to develop this yourself and how it differs now from the fast charger you provided previously?
Yeah, we think it's quite important to have our own charger because, of course, the design, as I mentioned before, is important. But the most important is the software, and we need to have that on our own to run so we could have the software in all our products, from the wall boxes, public charger, and the DC charger, because it's important for the customer to have one system, so to say. And we can also update our system our own when we want to update the product, so on. And we could also have a user-friendly interface on the screen, because it's important, because if you have a charger in Sweden, you should have a customer from Germany, from France, from Spain, from Norway. Everybody should understand the symbols and in the display. So we think it's important to have that in our own development to give the customer the right solutions. So that's why we develop it our own.
I understand. Obviously you're in every sort of niche here, so wall boxes, public, and then fast charging as well.
Yeah.
Could you discuss a bit how they differ in terms of maybe competition in the different categories, and maybe also pricing and sales and so forth?
If you look at the competition, of course, when we launched our first product in 2008, we were quite own. But today it's a lot of competition and good competition. And if we look that we have the most competition is in the wall box segment, and the wall box without any features, so to say, and an easy, simple, small box. That's a lot of competition, of course, price pressure. But then when you come to the public charger and the DC charger, the competition be less, because you need more system, you need more service and support, you need more of everything. But of course, we have in the DC, we have a good competition, ABB, Tritium, Detta, very good competition. But we are quite focused to do our thing, to do our products and solutions. But we have not so many competition in all these segments. But someone is in the wall box, someone is in the public charger, and someone in the DC. But we have decided to be in the all range, so to say. Yeah. But it's a lot of competition, and it will be.
Yeah, I understand. And so you acquired EV Charge Partner Sweden.
Yes.
And they're doing service and maintenance and that sort of thing.
Yeah.
Are they predominantly targeting home boxes, public charging, or how do they work, in what segment?
They are working with mostly, I would say, for 90% DC charger. Because when you buy a DC charger, this is a machine with filters, with a lot of parts. You're using every day, and you need to service this type of product. So when you are selling this product, you're of course selling a contract with service and support. So that's the thing why we acquired EV Charge Pod. But of course, when you buy a system for a public charger, we can also use EV charge personnel to service this type of application. But for 90%, it will be the DC charger they're working with, of course.
Okay, and in terms of, so, you know, you're very big in the Nordics here, you're also expanding into Europe. You have an initiative in the UK, for example, where you're building up a business. Could you talk a bit more about the UK business maybe? And also your plans for further expansion in Europe and how you're planning to go about that?
The UK business, we started in the end of 2019. And of course, with this COVID-19 situation, it has not been what we have planned, so to say, because they have had a lockdown here in April and May. So the business is not growing that fast we have planned, as I said. But we think it's a really interesting country, you know, with 250,000 electrical cars, so in a growing market. And if we're talking about Europe, as you said, in Nordic we are quite big. But in Europe we have a lot of contracts, as you know, with E.ON and Vattenfall and car manufacturer. That has been our way out in Europe. And of course, we are also interested to expand our business. As I said, in our growth plan, we are looking for interesting new countries, so to say. But I can't mention anything today, and we have nothing there. But of course, Europe is an interesting market, and these products with the standard for e-mobilities is no problem to sell to all countries in Europe, with some small local adjustments, of course.
And so e-mobility is 25% of the company today. You have the rest in more electrical installations and so forth. And you mentioned that you think maybe renovation and construction is sort of softish outlook, but you also have this trend then of being more effective in how you use the power at home and so forth. Could you talk a bit more about the specific products there and you know, the trends you're seeing there, more examples?
Yeah, we see when you're renovating an apartment or properties, so to say, you often put in a system to energy meeting to have fully control what's all the energy, where in the property you are using the energy. And all the people for renting an apartment, they are paying for their energy consumption in the apartment, but also when they are charging their car on the parking place or using the car heater, they have to pay for the energy they are using. And with that said, when you have to pay for everything, the energy consumption go down. And then you could have also smart system to for example, the lighting. Of course, you lock down the lighting during the night. You can run the ventilation system more smooth during the night, so to say, for the energy consumption. The car heaters we are selling today is smart system, feeling which temperature is outside and when are you leaving for work. So all the electronics, they are starting this car heater at the right time to use less energy.
Yeah, I understand. And just final question. I noticed you also mentioned solar PV briefly there.
Yes.
Which is also one of these structural trends where we're seeing a lot of growth. What are you doing specifically within solar PV?
Solar PV, we are quite small at the moment. You know, energy from solar in Sweden is 0.3% of all energy in the country. So it's small business. But of course, we try to find our place here. We think it's an interesting area. But it's at the moment an immature market, but we try to find our place, and we grow all the time, but on small numbers, so to say.
Yeah.
Interesting area.
And do you sell? Do you build your own solar panels, or what do you provide? What sort of products?
No, we have partners on the PV, both on the panels and the inverters. Then we have a lot of safety equipment ourselves with different safety switches and safety components we are selling with the complete solution. But we are not making our own panels or inverters. So we are selling complete solutions.
The whole package.
Yes.
Okay. I understand. Well, thank you so much for coming. I think we have to round it off there.
Yeah.
Really appreciate you coming here and presenting Garo for us.
Thank you.
Thank you.
Thank you.
Men varför... Hör ni oss?
Nej.
De ska ju höra oss nu. Det måste vara på deras telefon. Har vi någon...
Alltså, de har ju försökt ringa mig. Det är den här länken som inte fungerade innan.
Men det måste ligga på deras så att de får någon ljud eller någonting. För vi ser dem och hör dem.
Ska jag ringa upp honom?
Hur ska vi göra?
Ja.
Ringa han då och säga att han ska höra oss nu. Kolla så de inte har någon mute eller någonting på. Och i värsta fall, vi hör dem och ut i sändningen, då får de bara börja presentera liksom.
Hej, vi ser ingen... Hej, ring mig.
Jag kan prova gå ut och in en gång till i länken, men de ska ju höra oss. För det var ingen ny länk till bulten eller något, utan det är den här. De sitter ju där.
Oss nu?
Ser ni oss?
Nu hör jag er. Hör ni med oss?
Vi hör och ser er, men ni hör inte oss här.
Nej, vi hör inte er.
Ni har inte... Det är ingen mute eller någonting på sånt. Vi hör er och ser er.
Ni hör och ser oss?
Ja.
Jag ska höra med våran IT-kille här om han kan stötta oss här.
Mm.
De hör och ser oss, men vi hör inte dem.
Okej. Det är som om de är mutade.
För de ska höra oss. Vi har ju mikrofonen på här och allting. Det är någonting som...
Ser man inte.
Det kanske bara är bättre att göra så. De drar bara sin presentation.
Ja. Ingen Q&A eller någonting. Okej.
Men påminn om bara att säga till när man ska byta slides, för det måste du ändå sitta och göra.
Mm. Fasen då.
För att det blir, annars blir det bara...
Nu... Mm.
Säg åt dem att göra så då, att de drar igång och presenterar.
You can see and hear us, and the proposal is that we just go through the presentation. Hopefully you can see the presentation on your screens, and we run through it, but we cannot unfortunately hear any of the questions once we get to them. So I'll start with we can flip to the agenda slide, please. So what we're going to go through between Claes Lundqvist, who's the CFO, and myself, Anders Nyström, who's the president and CEO of the company, is Bulten in brief, the market development, the second quarter of 2020, and what's in focus for the rest of the year. So if we flip to page number 3, please. There's a brief history of Bulten. Bulten is an old company going on 150 years now, founded back in 1873. And it's grown to be a global provider of fasteners to primarily the automotive industry, but also to other industries. Currently, we have about 1,400 employees in 8 different countries and serving customers worldwide.
Next slide.
Next slide, please. Number 4. This is an overview of our customer base. And as you can see, light vehicle OEMs is by far the biggest customer group, followed by suppliers to the auto industry, heavy vehicle OEMs, and others. Most of the others came in through the acquisition of PSM, which was completed in February of this year. And it is a strength to be accredited suppliers to this many OEMs and suppliers in the auto industry. Once you have your supplier code, you have your audits done, then you're also a recipient of or a possible recipient of new business, which is a threshold to get over. So this is in our opinion, a very strong customer base, which will help us to grow in the future. Flipping to page 5, just to show some of the uniqueness of Bulten. There is actually nobody in our competitive set that has the geographical reach that we do. We're manufacturing in the US, in the UK, Sweden, Germany, Poland, Russia, China, and Taiwan, and with logistic centers and representation in a number of locations where our customers are present. Should add as well that one of the primary drivers of this being an advantage is that, as you probably know, our customers are developing global vehicle platforms, and being a one-stop shop to them means that they only need to choose one development partner, and they can source any part number to one supplier, regardless of where they build the vehicles coming off of that platform. So it's a major advantage. Moving to page 6. In February of this year, we presented our strategy that we call Stronger 24. It's a 5-year strategy stretching from 2019 into 2024. And we did that in connection to our Capital Markets Day in Stockholm in February. And as part of the Stronger 24 strategy, we also presented new financial targets, where we intend to grow the company from what was then about 3.1 billion up to 5 billion in 2024, and to take the EBIT margin up to 8% and the ROCE to 15%. And we'll come back to some of the enablers in the later slide. Just need to highlight as well, if we flip to page 7, that we still utilize our FSP concept, a full service provider concept, as a major growth engine. It's been driving growth for Bulten for a long period of time. In the last 10 years, it's been a major enabler for growth, and we continue to do that. And as many of you probably observed, we also won a major FSP contract during the summer of this year, in the midst of the COVID shutdown. And that was a contract that was transferred from one of our competition in that case, worth about 60 million euros in full pace. Flipping to page 8. And these are the sort of building blocks of our Stronger 24 strategy. To begin with, we do have a strong position with our heritage and our customer base, our financial platform, and the credibility when it comes to delivering sustainable solutions. Among other things, this is manifesting in the product family we call BUFO-E, which we presented earlier this year, which is a new product family that actually brings energy consumption down with about 50% and CO2 emissions from the manufacturing process down about 30%. We will drive growth primarily through organic growth. We have a strong organic growth momentum right now. We've also acquired PSM earlier this year, which also has an inherent organic growth in it, but it's by definition, of course, a non-organic portion of our growth as we acquired it. And this will take us to the 5 billion SEK in 2024. Our margin expansion is going to come from acquisition synergies, which we're of course harvesting as we speak. Strengthen positions in China and the US, which has been a priority for us as we are still, from a revenue standpoint, a very European-centric company. And we have all the intentions to also gain market share in China and the US. Economy of scale, of course, production and distribution efficiency is something that we've been focusing on a lot during the COVID shutdown, and we really utilized the opportunities as our plants have been running at a lower pace to make changes to our production setup in order to gain efficiency, both from capital and margin standpoint. And we're also looking deeply into our distribution network to make that more efficient. Technology is another cornerstone which we're investing in, and many of you saw our minority stake acquisition in Tension Cam Systems, which is one of the steps in that direction, giving us the ability to actually monitor clamp force in screw joints in a very affordable way. All of these building blocks will then take us to an EBIT margin of about 8%. And the strong financial platform that we do have still, even after the COVID-19 situation, allows us to invest, allows us to grow, and is not, maybe as opposed to many of our competition, it is not a restriction for us. So, talking about market development, we go to slide 10. I don't think this is news for any of you. You know very well 2020 is what it is in terms of vehicle sales and vehicle production. I think most forecast makers, and included in that group is LMC Automotive, which is our primary source of market data. There is consensus among the forecast makers, I think, that 2020 is going to be about 20% down. We see a strong rebound in 2021, but not up to the pre-pandemic levels from a market standpoint yet. And the same can be said for heavy commercial vehicles. Having said that, we are determined to grow faster than the market and rebound faster than the market by gaining market share, which we are doing through the new contracts that we've signed. Looking at second quarter then, the mitigation effects that we took during quarter two to protect ourselves and our cash flow in our business during the COVID-19 crisis was that we withdrew the dividend to protect cash flow. We applied short-term layoffs and utilized the government-sponsored support programs in various countries in order to support our cost structure. We did halt investments, and the biggest one of those was that we put a pin in the investment in our Polish facility that we've announced previously. That's about a 200 million investment that we chose to delay. During Q2, we also acquired a minority post and tension cam systems. As I mentioned, this is an important collaboration that we're now deepening together with tension cam to develop technology for clamp force monitoring. After Q2, Bulten was awarded an FSP contract of about 60 million euros at full pace from a major European OEM. We made some changes to the group management, introducing a new chief commercial officer, a new acting CFO, who's beside me, Claus Lundqvist, and a new COO, which is also a new position in the management team. And we made the decision to expand our manufacturing facility in Taiwan and sign a lease contract for a new building, which will give us both efficiency improvements and chances to grow. During the crisis, I won't go into detail on this, but of course we did what we had to do. We applied short-term layoffs for about 1,200 of our employees, in various stages, and as we speak, we're now that number is diminishing dramatically as we're now revving up our production again to meet the demand from our customers. So by that, we're into financials for Q2, so I'll leave the word to Claus.
Okay, thank you, Anders. Yes, I will not keep us looking into the financial figures for that long. The Q2 figures has already been presented and reported, and I take it you have all read it through. So let's move to the next slide, please.
And that'll be slide 15.
Slide 15, yes. As you can see, we have been affected by the COVID-19 situation, mainly started in April. The industry as such had major shutdowns on a global basis, I would say. Especially Europe and North America came in a little bit later than China. That came up running a little bit earlier. The slide down to the right is just giving a notice on the situation coming back from a really low volume situation due to the COVID-19. So there has been improvements in Q2. Okay, next slide, please. I also would like to introduce you to our key figures and especially guidelines, where we have a guideline of average net working capital as of sales between 20 and 25%. We are now running a little bit higher than that, but in a normal situation, that is our goal and what we're aiming for. Capex as percent of sales is between 2 and 3% in a normal situation. Not taking in capacity investments such as the building in Poland, for example, that was mentioned earlier by Anders. So that will drive that guideline up, of course. Depreciation as a percentage of sales is between 4 and 5%. And then also depreciation when you exclude IFRS 16 as percent of sales is between 2 and 3%. Tax rate between 24 and 28%. Okay, next slide, please. I would also like to mention our new financial agreement. As you all know, and that is reported in our annual report, our main bank, Swedish Handelsbanken, we have a financial agreement together with them with a multi-currency facility of 750 million. In Q2, we also introduced a new bank into the group, which is Danske Bank. And that is mainly a facility to support our Polish operations down in Poland. So with that said, I think we have a really strong financial platform And the last bullet also, it's important to understand that all our covenants has been met during the year so far, and as far as we can see, this will continue. Thank you.
So, looking into the rest of 2020 then, and flipping to page 19. This is a picture that those of you who normally tune into our quarterly reports are familiar with, but I'll explain it to you. What this really shows is the magnitude of the contracts that we have signed and that were not in our revenue stream yet as we left 2019. So when we speak about the inherent growth momentum that we have, it's not wishful thinking. This is actually hard contracts that we do have in effect, and that's either ramped up since the end of 2019 or about to ramp up. And the value of those contracts is 107 million euros per year in full pace. And between the end of 2019 and during 2022, this will be up and running full pace. So this is, why we have a lot of confidence in the growth momentum that we have. In focus then for the rest of 2020, well, of course, we need to continue to mitigate the current situation in the industry. We're not out of the woods yet in terms of the COVID-19, so we're monitoring that very closely, even if ramp up right now in our customer base is very steep. Apply strict cost and cash flow control. Of course, we will not release any of that pressure yet. Prepare for swift ramp up, which we can do. We are very flexible in our supply chain, and we can change production pace as the demand changes from the market. Capture PSM synergies, that's a big one for us since we acquired PSM, and we'll have a lot of good things coming out of that. Seize turmoil opportunities. What we mean with that is that we tend to see a crisis not as necessarily only a bad thing, but there's always opportunities coming out, and we are on our toes to make sure that we seize any of those opportunities. Increase innovation and sustainability activities. I think we've demonstrated that already this year that we are, and will continue to do so, and execute our Stronger 24 strategy as a whole. And I can boldly say that we've spent most of the crisis months and weeks of this year focusing on executing strategies rather than firefighting, which I'm very happy for. And that brings us to the end of this presentation. And for those of you who may have tuned in during the presentation, we cannot hear any of the questions. You can hear us and you can see us, but we have no visual and no sound.
Bryta bara.
Hej och välkomna allihopa till Introduce Investor Days. Mitt namn är Jesper Bick Jensen och jag arbetar som aktieanalytiker här på ABG. Och med oss idag så har vi ICFs vd Anders Segerström.
Hejsan.
Välkommen.
Tackar.
Så med det sagt så lämnar jag över ordet till dig.
Ja, tack. Ja, Anders Segerström är då vd för ICF Group och jag kommer gå igenom idag vilka vi är. Vi är idag ett life science-bolag. Vi har en produkt som heter Docell som underlättar patientmedicinering och ger dig som behandlas i hemmet bättre förutsättningar att bo kvar hemma längre med ett fullvärdigt och tryggt liv. En liten historia. Vilka är vi? Docell, som är en läkemedelsrobot, började 2008 som en idé av grundaren Göran Sjönell. Göran Sjönell sitter idag fortfarande i styrelsen som vår uppfinnare och den som har mest erfarenhet i Sverige, tror jag, på hembesök. Så att sedan dess så har vi haft en historia där vi 2018 gjorde ett förvärv av bolaget Sensec personlig säkerhet som höll på med säkerhetslösningar och larmdistribuering. Det var bolaget som jag då var vd för. Och sedan 2009 så döpte vi om allting till ICF Group och hade då 2 stycken olika områden. Det ena var trygghetslarm och läkemedelsroboten Docell. Och sen så hade vi säkerhetsdelen som då höll på med personlarm och larmdistribuering. Nu under sommaren 2020 så sålde vi av säkerhetsdelen till ett bolag som heter ABGSC. Och med hjälp av det så förstärkte vi vår kassa. Vi renodlade bolaget helt till att bli ett life science-bolag. Och vi har ett tydligt fokus på just läkemedelsroboten Docell här framåt. Varför ska man ha en digital läkemedelsdispensering med hjälp av en robot då? Tittar man lite på hur det ser ut i samhället så har vi utmaningar i form av att vi blir allt äldre. Det blir svårare att ta hand om alla äldre för att det som sagt blir fler äldre. Vi är färre som kan ta hand om dessa. Och dessutom så är det många delar att ha koll på. Felmedicinering är ett stort problem. Idag så är det cirka 4 dödsfall om dagen på grund av felmedicinering och 300 sjukhusinläggningar. Och det här är någonting som vi vill avlasta vården och hjälpa till med. Så att med hjälp av digitaliserad läkemedelsrobot så kan man underlätta medicineringen helt enkelt. Och vi tittar framåt här nu hur det ser ut. Så har vi då en åldrande befolkning år per år som i princip dubblas de närmaste 20 åren. Och det är så att alla personer över 80 år tar i snitt 5,8 läkemedel per dag. Vilket gör att det är ungefär 24% av befolkningen som tar minst 5 olika receptbeskrivna läkemedel dagligen. Då. Och med en ökad läkemedelskonsumtion så blir det också svårare att säkerställa de här delarna. Att de tar sin medicin i tid och verkligen sköter följsamheten. Det är den viktigaste delen i medicineringen. Och vi har valt att utveckla en läkemedelsrobot som använder sig av dospåsar. Dospåsar är det vi ser som det säkraste sättet att leverera medicin på. Det fungerar som så att alla receptförskrivna läkemedel du har paketeras i 2 veckors rulle av dospåsar. Och alla mediciner du ska ta den tiden du ska ta. Så att ska du ta medicin klockan 8, 5 olika läkemedel. Så ligger alla dessa 5 olika läkemedel i den dospåsen klockan 8. Det här gör att det blir lättare att säkerställa att man inte tar fel mediciner och att man inte tar fel medicin vid fel tid. Och hur ser marknaden ut då för läkemedelsrobotar och framförallt för vår läkemedelsrobot? Sedan vi valde en partnerstrategi här vid årsskiftet så har vi börjat internationalisera oss en hel del. I Sverige har vi idag 2 partners. Och dessa partners börjar vi successivt säkerställa att de tar över de kommuner som vi tidigare har levererat till. Samtidigt som de jobbar då för att säkerställa att ta in nya kunder. Och det som är fördelen med varför vi valt partnerstrategin, det är att vi säkerställer att vi har partners som annars levererar trygghetsskapande lösningar som gör att vår läkemedelsrobot blir en till produkt till övriga digitala eller digitala hjälpmedel inom vården då. Vilket gör att våra partners redan är erfarna av att ta hand om och supportera dessa typer av produkter och ha lokal kännedom. I Norge har vi 3 partners, varav den ena partnern Hepro vann vi en stor nationell upphandling i Norge med här i våren. 62 kommuner var med i den. Så att Norge är den marknaden vi ser ligger lite före Sverige i mognad att ta till sig sån här teknik i form av digitala hjälpmedel som läkemedelsrobot. Så det är en otroligt spännande framtid att se nu hur vi kommer rulla ut läkemedelsrobotar med hjälp av denna upphandling som har skett i Norge. Sedan har vi en partner i Finland som är ivrig att komma igång. Vi har än så länge inte verifierat klart dosell för finska marknaden, men den ligger nu näst på tur nu när Norge är klart. Och sedan har vi en partner som heter Simply Pharma i Italien. Och varför Italien och Simply Pharma är så otroligt spännande, det är att de idag inte har haft dospåsar på det, som sätt att distribuera läkemedel på. Vilket innebär att de kan göra rätt från början och säkerställa hela processen. Vilket gör att vi i det konceptet har med apoteken, vi har med sjukhus och vi kommer ha med bolaget som också producerar dospåsarna. Vilket gör att hela konceptet kommer vara att apoteken har en maskin för att producera dospåsarna. Och i de lokala apoteken så hämtar det dospåsarna. Och första gången det hämtar dospåsarna så ska det då även ha med en dosell. Och tillsammans då så kommer man även då ha ett totalt ekohjul. Vilket gör att man säkerställer att medicineringen kommer ut i dosellen. Och sen så kommer dosellen även generera data tillbaks. Vilket gör att man kan ha total kontroll och uppföljning på patienterna. Annars så ser vi att generellt att det här med dospåsar ökar kraftigt över världen. Och bara i Sverige så ser vi att apoteket har valt att investera både tid och otrolig marknadsföring och ta fram ett koncept för dospåsar för hela privatmarknaden och döpt det till Dospack. Och det är ju med hjälp av denna dosrulle som man kan läsa in då medicineringen i vår läkemedelsrobot Dosell. Vi ser även att Amazon investerat otroligt mycket i liknande bolag i USA, ett bolag som heter PillPack. Och PillPack är otroligt spännande ytterligare för att de är ett fullvärdigt apotek, vilket gör att du kan få alla mediciner oavsett om det är receptbelagt eller vitaminer eller icke receptbelagt i samma dospåse om du så vill. Sveriges regering satsade 430 miljoner i år på att se till att bidra till digitalisering inom vården. Och sen att Norge, första här i Skandinavien som har genomfört den största nationella upphandlingen då, någonsin när det gäller välfärdsteknologi. Så det börjar hända mycket, vilket är en kul och spännande tid där framför när marknaden börjar mogna. Ute på marknaden så finns det då 2 olika typer av läkemedelsrobotar. Det är de som hanterar dospåsar, precis som vår. Och så finns det de där man lägger lösa receptbelagda mediciner i maskinen som sen då tar fram de mediciner som ska levereras. Konkurrens är bra. Vi ska bara säkerställa att vi tar en tillräckligt stor del av kakan. Och vi har nischat in oss på att ha en otroligt bra och enkel produkt i form av att den ska hjälpa personer att ta rätt medicin vid rätt tid. Och tar de inte rätt medicin så ska det då larma. Så att vi ser att vi är både bra prismässigt mot konkurrenterna och vi har en väldigt bra produkt som är enkel och otroligt bra i form av att den är integrerad med andra partners välfärdsteknologi. Så tänkte kort låta Göran Sjönell på en video här presentera hur Dosell fungerar.
Dosell är en automatisk läkemedelsautomat för tryggare läkemedelshantering i hemmet. Dosell laddas med patientens ordinerade läkemedel som är förpackade i dospåsar. En laddning innehåller läkemedel för 2 veckors användning. När det är dags för patienten att ta sina läkemedel levererar Dosell rätt mängd medicin och vid rätt tidpunkt. Det gör den genom att avläsa dag och tid som står stämplat på påsen. När påsen ska användas klipps den av och ramlar ner i ett öppet fack på apparatens framsida. När dospåsen ligger i facket aktiveras ett ljus- och ljudlarm som påminner patienten eller vårdgivaren om att nu är det dags att ta medicinen. Om patienten inte tar sina läkemedel då larmar Dosell vårdpersonal och anhöriga som snabbt kan förhindra att det sker en skada. Därmed minskar Dosell risken för att patienten tar för mycket eller för lite eller fel medicin eller glömmer att ta sin medicin. På så sätt kan patientsäkerheten och tryggheten för anhöriga öka samtidigt som värdefull tid frigörs för vårdpersonal och hemtjänst. Dosell är helt enkelt en trygghet för dig som patient eller anhörig och ett värdefullt verktyg för dig som vårdgivare.
Ja, där har vi hur Dosell fungerar. Till Dosellen så har vi då utvecklat en app. Och denna app är till för både anhöriga men framförallt då för hemtjänstpersonal. Vilket gör att i den här appen så kan de då ha en bra kontroll över alla doseller där ute. Man ser alla olika larmhändelser, man ser vem som har tagit larmet och man ser när man har agerat på larmet. Med att vi har också en app i det här gör att vi kan otroligt enkelt integrera det här med andra bolags appar och system. Vilket gör att om hemtjänst eller en annan vårdinstans redan idag har den här typen av lösningar i form av trygghetslarm eller andra lösningar så kan man enkelt lägga till Dosell så att de inte behöver ha ytterligare en app eller system för att följa följsamheten. Yes, nya tider. Pandemin kom in. Det varit ytterligare en anledning som vi märker att vi måste säkerställa att hålla nere smittspridning så mycket det bara går. Och med digitala hjälpmedel så kan man i alla fall ta bort en del av besöken där man annars med digitala hjälpmedel kan genomföra dessa. Så att med hjälp av Dosell så skulle man kunna minimera antalet hembesök som där man bara enbart levererar medicin. Och på det sättet hålla nere smittspridningen. Och vad har hänt nu då första halvåret? När man tittar. Som sagt, den största delen är att vi har renodlat och sålt security-delen så att vi är ett life science-bolag här framåt. Vilket gör att vi blir en otrolig fokus för hela bolaget vad det är vi ska göra. Det kommer underlätta för både mig och alla anställda att säkerställa otrolig utveckling och försäljning av Dosell. Vi har fått patent beviljat. Och sen som sagt, vi var inne på upphandlingen i Norge. Och vi har påbörjat leveranser till våra partners i Norge. Och om vi ska sammanfatta här då, vad händer nu? Med ett renodlat bolag, närmaste 12 månader så är det fullt fokus med försäljning. Vi kommer självklart fortsätta anpassa och utveckla Dosell, att hela tiden ligga framkant. Vi ska vara det bästa och smartaste lösningen på marknaden. Vi kommer förstärka organisationen med expertis inom branschen. Både när det gäller inom vård och medtech-produkt. Vi kommer fortsätta att ha en tillväxt, både genom organiskt men även eventuellt via förvärv. Och då kommer vi fortsätta helt inom life science-benet. Och vi kommer förstärka ytterligare att Dosell ska vara navet i digitalt ekosystem för välfärdens teknologi i hemmet. Tack för mig.
Tack så mycket, Anders. Första frågan, du var inne på att Norge är den marknad där ni känner att de är mest redo att använda Dosell och prova Dosell. Men även att era partners i Finland var väldigt sugna på att komma igång.
Ja.
Hur ser du på den finländska marknaden kontra den norska i den bemärkelsen?
Jo, men vi ser ju, det börjar hända mycket där. Man börjar höra om att det kommer komma upphandlingar nationellt likt den i Norge i Finland. Så att nu behöver vi vara snabba på att komma in där. Och sen en av våra större konkurrenter det är ett finskt bolag, så att de har ju då varit på marknaden. Så att marknaden där börjar också vara mer mogen än i Sverige.
Och när förväntas ni komma igång? Kan du säga någonting om det?
Det är under hösten. Ja.
Som du också var inne på under presentationen så deltar ni i den största upphandlingen någonsin i Norge idag. Med 62 kommuner och potentiellt 1800 Dosell som ska levereras. Hur ser ni på möjligheterna att ta hela eller delar av den ordern?
Ja, men vi ser stora möjligheter. Det som är, som sagt, det är cirka 1800 så som det är idag. Då det fortfarande är, det som är positivt i det här är ju att när kommunerna väl börjar komma igång så kommer de börja hitta fler användningsområden till en läkemedelsrobot Dosell. Så att det kan likväl bli mycket, mycket mer än 1800. Men det är det som är den initiala uppskattningen på hur det kommer vara. Den upphandlingen som var här nu, den tanken var att de hade en förhoppning att beställa 500 läkemedelsrobotar totalt sett innan sommaren. Men det vart överklagan, upphandlingen drog ut över tiden. De har inte kommit igång riktigt. Så att än så länge vet vi inte. De har än så länge inte kommit igång och börjat beställa. Så att vi ihop med vår partner där ute säkerställer nu liksom att hjälpa dem att komma igång så fort det går i de här 62 olika kommunerna.
Och när förväntar ni er besked, om du får spekulera lite?
Nej, men det är som sagt det närmaste tiden här. Det är det som är fullt fokus i höst här med att få ut och få igång de här kommunerna att börja beställa läkemedelsrobotar.
Och kan det här vara en bra chans för er att liksom prova Dosell i lite större skala ute hos kund, eller finns det något behov av det?
Ja, precis. Vi har ju självklart testat här nu i Sverige Dosell, men vi behöver ju också få igång en större skala så att vi ser hur våra partners fungerar när de har många Dosell ute, hur deras supportorganisation fungerar. Så att det är många delar vi behöver säkerställa här nu utöver själva produkten Dosell. Och det kommer bli bra här att vi förhoppningsvis taktar upp mot en bra bas. Så att när vi stänger året så har vi en bra bas där vi vet att partners vet hur produkten fungerar. Vi har sett att produkten fungerar i stor massa. Och vi då går in i 2021 med helt andra förutsättningar.
Och jag la märke till i presentationen att du highlightade att ni kanske kommer att vilja växa igenom förvärv. Kan du inte förklara vilken typ av förvärv är det som skulle kunna vara bra komplement till gruppen i dagsläget? Och
så som vi ser är ju att Dosell ska ju vara någon form av nav som säkerställer att man tar rätt medicin vid rätt tid. Och kopplat till att man ska ta rätt medicin så finns det ju många andra värden man behöver ha koll på. Så att vi ser ju att Dosell som hela tiden är uppkopplad mot vår plattform som skickar data, även kan skicka data av andra värden som är viktiga för att veta vilken typ av medicinering ska man ha i hemmet.
Och har ni känt av någon skillnad på utbudet av potentiella kandidater under corona? För man har ju hört att vissa bolag kanske är finansiellt pressade.
Nej, det kan inte vad jag vet.
Okay. Jag tror det var all tid vi hade idag. Ja. Tack så mycket Anders för att du kom hit och presenterade ISAF.
Ja, super, tack så mycket.
Tack.
Okay, let's start off with the next presentation here. My name is Simon Granat, and I am an equity analyst at ABG covering IT and tech stock. And with us today, we have the pleasure of welcoming Per Holmberg, who is the CEO of JLT Mobile Computers. And with that said, please go ahead, Per, and present the company.
Okay, thank you, Simon. Let's see, yes, my name is Per Holmberg, and I'm the CEO at JLT Mobile Computers, and I've been here for a little bit more than 10 years now. And in my presentation, I wanted to give a brief introduction to JLT, what we do and what our mission in the market is. I will also talk about JLT being a growth company and cover kind of the strategies that we have to continue the growth of the company. And then I will finish with a little bit talk about the situation right now, the corona pandemic, and how we are managing through this as well. So JLT, I would describe JLT as a tech company. We've been in business for 25 years now. And we really have experience from developing our own products, our own rugged computers, and working with customers to deploying those in real situations. We have our own development team located in the headquarters in Växjö, Småland. And we have also chosen to do the manufacturing in Sweden. So we have that in Ronneby, about an hour car drive from Växjö. We are currently on the 6th generation of products, and since start we developed and delivered more than 100,000 computers around the world, basically. It is with our experience, long-term experience, and our knowledge about the products that we meet the customers. And today we do more than just delivering the computer. We really put everything together, including the hardware, software, as well as services, to really help the customer to address their problems and challenges. So our mission is to empower customers' operation by enabling hassle-free IT in very tough environments. And what is driving the need then for hassle-free IT? Well, it's coming from different types of macro trends, basically. Perhaps the biggest demand driving the need right now is the move from selling products over shops and through big central warehouses to a more distributed model and supporting online sales and Ethernet marketing and sales. But we also have environmental requirements that puts a lot of legal requirements on our customers to track goods, especially within food and beverage, basically from it's taken out of the ground to it's placed on the shelf in a shop or store. Challenging environments, well, that's really our focus. And what are some of those environments? Well, the biggest environment for us and the biggest market for us is really warehousing, where the computers are mounted on forklifts or different type of trolleys in a warehouse. And a warehouse can be challenging in many different ways. It could be very clean, it could be very dry, an even temperature around 20-25 degrees. But even in that environment, it is a tough environment. Typically, these forklifts are running across a concrete floor. There may be big tracks in the floor, etc. So there is vibrations, there is shock. And another big component of that is also to always have access to the computer via the Wi-Fi, for example. And setting up a Wi-Fi and a reliable connection to the network in a warehouse that changes from day to day. One day it could be filled with goods that absorbs the radio waves, and the next day it could be all empty. So it is a challenging environment in many different ways. And then, of course, you have warehouses where we store or customers store the goods in freezer temperature, for example, or it could be outdoors and indoors, it could be wet and it could be cold and rainy. So very different environments, really, warehousing, but that's the biggest segment for us. I would say about 60% of the computers and the revenue is coming from that type of environment. To that, we also have a couple of verticals that we are focusing on a lot. One is the ports, where the computers are mounted in the big cranes, for example, that offload ships coming into the port onto the port itself. And then the goods and the containers will be transported away via trucks or train, for example. Mines and mining is another area for us where the computers are mounted in the mining equipment itself. And agriculture, which is kind of a growing segment for us. Again, it's used in different types of equipment used on the farm or out in the field. JLT really has a global reach. Roughly half of the revenue we do is in Europe, and the second half is in the Americas. And we reach the customer by our own offices. We have a headquarters in Växjö, Sweden, as I mentioned. We have a small sales office here in Stockholm. We have a fully owned subsidiary in the US, where the US operation is headquartered in Chandler, in Arizona. And then we have the production in Ronneby for the European market and for the US market. But we also do some local production in the US in a facility in Atlanta. And then in addition to that, we work through a reseller network where we have partners representing JLT and our solutions around the whole world, basically. If you look at the revenue from 2019, about 45% came from the Americas, about 25% from EMEA, which is Europe, Middle East and Africa, about 20% from the Nordic region, and then we have one segment called OEM, where we sell our products into customers that then build their own solution on our products and sell that as under their own brand, basically. So they are not the typical reseller. So you could actually split up the OEM business into the different geographical regions as well. So about half Americas and half is in EMEA. What is it that makes JLT unique on the market then? Well, we do have really good products. I would say that we have the best products, and we are recognized in the industry for delivering the best quality, the best performance on the products we do. That's one thing. The other thing is that we develop our products ourselves. We don't just buy the electronics from Asia and put a hard shell around it. We actually develop the electronics, we develop the mechanics, and we put everything together within our own development team. So we have, over these 25 years, really built up a good expertise around how these products work in the field and what we can do to make them as reliable as possible. And we use that through what we call a high-touch customer-facing model. That means that we typically go out to the customer to really understand customers' operation and their environment. And by being there, we can address the customers with our products and our solutions. And we have a lot of flexibility through the fact that we own development and we own the production, so that we can adapt our solution to customer-specific needs. Our goal is to grow faster than the market. And we have been doing that if you look over the past 6 years. On average, we've been growing 17% annually. It's not an even line, as you can see on this chart. Some years have been stronger than others, but overall, we are growing if you're looking at this on a long term. In the environment where we are, we expect, or we see that the market that we are in have been growing about 5% a year. So we have definitely been outpacing the market. Today, we command a 10% market share, and that makes JLT, on a global basis, the 4th largest supplier in the market. And in the US, we are actually the 3rd largest supplier. We are on a growth path, and 2019 we reported a record level of revenue, and we did that with good profit as well. So the gross profit was also a record revenue, 65 million. Was also a record, and the operating result was 14 million. So how do we maintain and accelerate this growth moving forward? Well, we have a growth strategy in place, which we've been executing on for the last couple of years, and that we will continue on. And it really consists of 3 different components. The first one, which is really where JLT started, 1994, that is our own product development. And we're going to talk a little bit about what we mean by that. Around 2010, we really moved from just being a supplier to OEM customers to actually marketing and selling our own brand. And with that, we started to build our sales channel, both in Europe and in the US. And more recently, 2018, around there, we also saw that there is a lot of opportunity for JLT to sell more than just our own products. We are selling other types of products, accessories, and also services. And we're really trying now to build up the service part of the solution that we have. So let's take a look at these 3 legs of the strategy. So when it comes to product development, we have historically been very focused and very niche in the terms of products. So we've been developing vehicle mount computers that lasts forever, basically, that is mounted in different types of vehicles. And we do that with different levels of performance, different sizes, and different form factors. But in addition to that, our customers are also asking for hand-carried units and other types of computers that are used in different parts of their operation. And because we've been so successful with the vehicle mount computers, and customers are happy, they are asking us if we can provide also the other types of products. So we are today having a mix where we continue to focus on the products and the part of the products that adds the most value to the customers and makes JLT unique. And everything that is more commodity and that already exists in a good form on the market, we source that to complement our product offering. So on this picture, you see a couple of examples where the 2 right-hand computers here are the vehicle mount computers developed by JLT. And here are 2 hand-carried computers that we haven't developed, but we have taken in-house, we have made the qualification, and we support them at the same level as with our own products. Sales channel. There are really 2 objectives with developing the sales channel for JLT. One, of course, is to increase the sales. And then, in particular, I like to increase the broader basis of the customer base and the sales. We call that the running business. The running business consists of many orders, medium-sized orders, that together adds up the total revenue for JLT. And that is represented in this graph by the orange bars. And that has been growing over the last number of years consistently. The running business is really the part of the business that we can add on to from year to year. And we can add that sales by improving the channel and having more partners and more feet on the ground, basically selling JLT. On top of that, we also have specific, discrete, so to say, big deals or big orders. And of course, we like to have those orders as well. The challenge with that, though, is that it's not an even flow of that type of business. They come in, and if you look at 2016, for example, we had a number of those big deals closing in the same year, while in 2017, we didn't have as much. So that's really putting on top of the running business that determines the total revenue of JLT. And that's why you don't see this even line from year to year. It jumps a little bit from quarter to quarter and even from year to year. But the underlying business, which is really the momentum that we have, is growing consistently. The other part, of course, with building the channel is that we need to strengthen our local presence on the different markets, and we need to get closer to the end customers. Because we realize and we know that in order to develop the products and develop the total offering with services included, we need to sit next to the customer and have those discussions. So it's a combination of selling through a partner network and having access to the end customer as well. And then I mentioned JLT services. This is a very important part of growing the business for JLT. Today, most of the services we are selling are contracts on the equipment that we sell. So we sell a service agreement, could be 3 years or 5 years or even 7 years with equipment. We call it a no questions asked service agreement. So different from a typical warranty, we actually service everything related to the product, even though it could be made by the operator himself or herself. We do that with a guaranteed level of 3 days in the factory, and then the equipment is out again. It's very popular. Many customers and more customers are buying the equipment with this service agreement attached to it. But we're also expanding in other parts of the services. We do some consultative services. We do customer adaptations of the products and the solutions. We do kitting in our factory to make it ready for the customer to install when it arrives the customer site, for example. The service-related income in 2019 was 13 million, and that is up 21% from 2018. So the services component is growing faster than the total revenue for JLT. That also creates an interesting thing in the balance sheet. Don't know if you've noticed, but the customers typically, when they buy a new computer, they buy the service agreement and pays for the service agreement up front. But the way we put that in our books is that we amortize that revenue over the period of the service agreement itself. So we don't recognize the whole service sales in the first year as revenues. It's spread out over the 3 years or 5 years or 7 years of the agreement. So that means that we have, over these years now, built up an amount of prepaid service agreements in our balance sheet. And 2019, that was 18 million. So that means, theoretically, if we don't sell anything more next year or the next coming 3 years, we at least have 18 million that will come in as revenues over these years. And that grew from 14 million the year before. So right now we are still, I would say, in the middle of a corona pandemic. It's not over yet, and I think that it's still very hard to predict what the impact is on the global economy and how that will impact JLT moving forward. But this is how we manage through this, for now at least. So my priorities, of course, is to keep my staff safe and to keep my staff productive and being able to do their job. And when I did this slide, more than half was working from home. Today, a few more have come into the office. But the tasks that most people at JLT do lends themselves to be done anywhere, basically. So it's no big problem for most of the employees to actually do their job from home, and we have a very flexible policy of doing that. We are a very distributed organization already, so we are used to working through video meetings and other ways. The second part there is to create stability. We already in Q1 had a few measures that we put in place to reduce the cost. And to secure delivery capacity. I'll talk a little bit about that. But also to keep the most important strategies and the most important projects for JLT in place and continue that so that we are strong when the pandemic turns and the economy is picking up again. So we are definitely ready to accelerate when we see the signs in the market that allows us to do that. The good thing is for us is that we are financially prepared. We have a very strong balance sheet and we have a net liquid position in Q1 at 50 million, and I believe it was around the same in Q2 as well. That is, as a comparison, about the total expense in 2019. So we have a stable position financially, and that allows us to be ready and invest where we see opportunities, even though we are in a downturn, and to keep the most important strategic long-term projects alive in the company. We have secure delivery capacity. Of course, it could be that our suppliers are having issues and will not be able to deliver. We are buying components from China, for example, and other places on Earth. We took a decision to increase our stock levels to create a little buffer, both of components and ready products. And we have backup processes in case people are sick in the factory or things like that would happen. And the good news is that today we haven't failed on any commitments to our customers because of delivery issues. So we're doing fine there. Cost reductions for Q1, we started in Q1 to implement a few measures. We discontinued projects that we felt is not so strategic right now, so we can put them on ice and push them into the future. We pulled back on marketing and sales to some extent. We were reducing the working hours on the whole staff. The executive team agreed to reduce our salaries with 10%. And we actually had accelerated in Q1 and made some investments specifically in the marketing and sales. And when the pandemic hit us, we decided to, okay, let's postpone that. So we pulled back the additional cost, basically, that we took on in Q1 back to where we were in 2019. And that's what you see in the result here as well. You probably already have heard that as a precautionary measurement, the board also decided to withdraw the 2019 dividends. So how are we doing then? Well, this is now the second quarter that we reported a couple of weeks ago. The first numbers is actually for the first half of the year. So order intake, 58 million. It's lower than what we had 2019, but it's actually higher, I must say, than my expectations or my fears, basically. So we are actually doing a little better than what we had planned for, which is a good thing here. Revenues, 56.9 million. The operating profit, 0.9 million. We made a loss in Q1, you may have seen, but we made a profit in Q2. So now we are on the positive side, which is definitely our goal throughout the pandemic here. So a few comments on the second quarter per se. The corona measures we put in place, the cost reductions we did, is playing out exactly the way we wanted. And it's actually going even a little better, perhaps, than we thought. Order intake was 29 million for the quarter, which is in parity with previous quarter. So we haven't seen a further decline in the market. Revenue 30 million, operating profit 1.8, which again was enough to compensate for the loss we did in Q1. We will keep the programs, the cut-downs that we have done until we see further signs that this will turn around. But the future-oriented projects are still in place. We are still developing product portfolio and other things. And I feel that we are definitely ready and we have what's needed in place to accelerate when we see the signs that we can do so. So key takeaways, 2019 was a record year for JLT. We're managing through the corona crisis in the second quarter. It's still hard to predict, so we have some cautions still in place. But we are in a strong position. We are financially prepared. We have taken measures to create the stability we need throughout the crisis, and we are definitely ready to accelerate when it turns. Thank you. That's all from me.
Thank you, Per. And as you know, we are running a bit of a tight schedule, but I believe we have time for some questions, at least one or two.
Yes.
And I believe that one of the most exciting part of your business and your strategy going forward is to increase the services sales. Can you tell us, try to educate us a little bit, what does this mean for your business? What is the rationale behind this move, and what could this mean for your financials in the long run?
Yeah. So there are a couple of reasons why services is important to us. One is first of all, we definitely see the opportunity. So when we are out with meeting customers, we realize that just selecting the right hardware is not enough to really get the operation reliable and to get the efficientness that the customers are looking for. So there is a lot of opportunities to sell services around that. That's one thing. The second part is that services to us create some stability. So when we sell a service contract, we really have a contract with the customer for the period of that contract. That could be 3 years, could be 5 years. So it creates stability to our business, and that it has been a little bit of a challenge before when we didn't have as much services, where you get a big installation with a customer one quarter and then you don't have that next quarter, so you get more lumpy type of business. So that's important to me. And then the third thing is that we actually make good profit on services. The products we develop has very good quality and they are very reliable. That means that we don't have that much cost related to the services that we have. So even though it's what is it, around 10% of the revenues today, it actually have a bigger impact on the result. So that's the third reason why we do this. Yeah.
And as a second question, I believe that's all we have for today. Could you mention anything, what is like the customer activity post the summer, and also how you would assume it to be prior to the summer?
Yeah.
Just some comments about what are the customers doing right now.
So I would say it's still very difficult to predict what it becomes in Q3 and Q4 for JLT, but we have seen some good signs at least. This summer, which usually gets pretty quiet, at least in Europe, has been fairly active. And I don't know if it's because customers have chosen not to take the vacation in August like most of our European customers are doing, because they have a lot of catch up to do. But there has been quite a bit of activity for us even during the summer. Now, this is not orders that will turn into orders or business today or maybe next week or next month, but at least we see the customers are still active. And that's very different from March, April, May, where a lot of customers were more or less paralyzed and things were just put on hold and we couldn't get hold of people and so on. So I think we have found kind of a new normal, so to say, where we actually have the dialogue again with the customers and things are moving forward. So that's a good sign, I think.
Sounds like a bright future.
Yes. Yes.
Thank you, Per, for that presentation.
Okay.
And that was all for me.
Thank you, Simon. Thank you very much.
Okay, let's start off with the next presentation here at ABG Introduce Investor Days. My name is Simon Granat and I'm covering tech and IT stocks here at ABG. And with us today we have the pleasure of welcoming Lawrence Flynn, who is the CEO of Artificial Solutions. He is with us here through a remote connection. And with that said, I'll leave the word over to you, Lawrence.
Thank you, Simon. Appreciate that, and welcome to everybody. If we run through our short presentation, as Simon said, my name is Lawrence Flynn. I'm the CEO of Artificial Solutions. We've been listed on the NASDAQ First North Growth Market for approximately 18 months. If we move on to the next slide, please, Simon. So the field in which we operate is called conversational artificial intelligence, or conversational AI for short. Specifically, we operate in the enterprise sector, which means that we sell to some of the world's largest companies, particularly large B2C companies who have needs to communicate with their customers. And the conversational AI is used across various applications, including their websites, in their call centers, whether it's voice or text, to automate the communications that these enterprises have with their customers. So if we move on to the next slide, please, Simon. Here I'm talking about a couple of examples of customers that we have today that are using our technology. Our application is called Teneo, and it is used by these large companies to automate conversations. So here's an example of the Swiss telco, Swisscom. Swisscom use our technology in 4 languages, and they use it in our speech-enabled and text versions. And they use it for different use cases. The one use case that they started with is supporting their customers. So this is the circumstance in which you as a Swisscom customer may have a problem with your mobile phone or your broadband, and then using a chatbot on their website, we will guide you through a dialogue-driven problem resolution system in any one of 4 languages as befits their customer footprint. But that's not the only use case that they have. They also have a set-top box that controls all of their TV, home entertainment, and lighting and home security solutions. And that's a fully speech-enabled application. So both applications are driven from the one application that we provide, Teneo, even though the use cases are entirely different. Next slide, please, Simon. Just to give you a little bit more color and one more example of a customer really using the solution. This is a brand that you may well be familiar with. It's Circle K. It's actually a Canadian company, but their center of excellence for artificial intelligence is in the Nordics. And thus they started with us, deploying solutions in Danish, Swedish, and Norwegian as their first choice. And what Circle K use our application for is a lot of different things, ranging from supporting their customers' loyalty programs, fuel cards, and so on and so forth, to IT support inside the business, and also supporting all of their many thousands of franchisees. They develop the applications in conjunction with us themselves, and they have a range of benefits depending on the individual use cases, including a 40% reduction in their call center, which has enabled them to focus on doing other more value-added services. If we move on, Simon. So I hope that has given you a flavor of the sorts of customers that we have and some of the example use cases that we put it to work for. To talk a little bit about the benefits for us as consumers of this, I think we can all get to grips with these quite straightforwardly. Perhaps principally it's simplicity, in that we don't have to learn any of the jargon, know any special buttons to press. We just use our own natural language. It's personal in that the applications are tied into the back-end systems of Swisscom, Circle K, Folksam, and so on and so forth. And therefore, the data that is presented is personal to you. So it knows about your account, it knows about how many minutes you've left on your program, and so on and so forth. And thus it can be highly accurate. It has the two twin benefits of speed and availability. It's available 24/7. The robots obviously don't need to take vacation. They don't need to have rest. They can work 24/7. And it's fast. You never have to wait in a queue for a robot because we can scale up an infinite number of robots. As I've already mentioned, it's also a very convenient way for us to interact because it's available on every single channel that we might wish to engage with, whether it's a mobile device, a website, a set-top box like we've just seen there, or the traditional telephone channel. And all of the data is secure, which is one of the unique selling points of our proposition in our marketplace. We enable our customers to keep their data private and secure, fully GDPR compliant, and in many cases within their own call centers. So moving on, if that's the benefits for us as consumers, next slide please, Simon, then is this slide changing? Can you hear me okay?
Yeah, I think it changed.
All right, thanks. If that's the benefits for us as consumers of the applications, what do our customers get from it? Well, in the first case, an important thing for them is that they have leveraged successfully technologies like the internet and mobile technology. And because of that, they've been able to enjoy operational savings. In many cases, they've shut down offices or branches or shops or so on and so forth. But one of the unintended consequences of that was that they only had one means of communicating with their customer, which was the call center. And that was not something that the customers appreciated. So what the conversational AI applications enable them to do is to re-engage with their customers using voice or text, just like they would have done in the old days, but at the same time, not have to employ lots of people and reopen lots of infrastructure. And thus, since the robot can do the job much more cheaply than we can achieve the same goal by paying people to do it, we can actually reduce the cost for the business. So they can service more customers, they can look after them better, but they can do it more cheaply. And we know from studies that customers appreciate this. We know that things like net promoter scores improve as a result of deploying these technologies. And that means that our customers can look forward to longer relationships with their customers, lower levels of churn, higher levels of value per account. But in addition to that, they also collect all this valuable data. And that means that using the tools that we provide as part of the overall platform, they, the company, can learn lots and lots about their customers. Lots and lots of things that they can express in the voice first person singular, which they could not get by tracking eyeballs on websites or people pressing buttons on mobile phone applications, which means that our customers can build suitable products and individually personalize them to the people with whom they are talking. The system will remember all the dialogues and can greet people personally and offer individual upsell and cross-sell opportunities where appropriate. And in many cases, they can use the robot as the embodiment of their brand and provide vital market differentiation. The example I always cite of this is a US fast food company called Jack in the Box, 2,500 outlets across 16 states in America, serving 300 million burger orders a year. And we've developed with them an automated ordering for their drive-through experience, so that you can drive into the environment. It will remember you from your number plate. It will suggest to you things that it knows that you like. It will suggest cross-sell and upsell opportunities, and it does so all in the voice and using the house style of Jack in the Box. So it is really an embodiment of their brand. So if we could move to the next slide, please, Simon. So that's what we do. We offer conversational AI as a software technology to the world's largest enterprise companies who use it to interact with their customers in an automated way for the benefit of the customer and the benefit of the enterprise. And in so doing, we're a software company. We're headquartered in Stockholm, but we're a very international business of about 110 people. Our route to market is principally through strategic partnerships that we have signed up with some of the world's largest systems integration companies and business process outsourcing companies. We also have a number of technology partners that help us engage to fully automate the whole path to customer service, including RPA providers like UiPath and Blue Prism, who can take care of the back-end processes once the robot has determined what steps need to be taken with the next client. So as a small company, we're fiercely proud of our partnerships, which punch well above our size and stature, as we are of our blue chip clients, many of whom are household names and have been with us for some considerable time. So if we move on, how do we convert this into models? Well, basically, our approach has been originally to secure reference accounts. And you can see from the logos there that we have a good number of those already onboarded. And we have recruited a channel of global systems integration companies. And we've proven the technology in the field, which means that the technology is infinitely scalable. Our route to market is more or less infinitely scalable because companies like Accenture have 300,000 consultants in the field dealing every day with the world's largest enterprises. And they have a number of C-level contacts across those enterprises who can help with digitization initiatives on behalf of those customers and realize applications built on the Teneo platform. And because our systems integration partners deliver the much needed professional services to bring the software to life as applications on behalf of the customer, we, as a software company, can focus on our most profitable and highest gross margin revenue streams. So if we move to the next slide, it's hard to see any post-COVID research, but pre-COVID, the conversational AI market was expected to grow roughly 30% compound aggregate growth, which by anybody's means is a fast-growing market. I'm sure that in the immediate short term, the COVID crisis has sent a number of large enterprises into crisis mode, but we now see that very much changing and emerging. And if we move to the next slide, you can see that this is from MIT, that one of the outcomes from the pandemic is that call centers, the traditional medium that enterprises had for communicating with their customers, are being emptied. That is to say, they may have been emptied because during the height of the pandemic, they didn't have access to them, especially if they were offshore in Manila or Mumbai or somewhere like that. But now, with social distancing measures, they can't get the density of employees in there, and they're struggling to cope with managing their customers' interactions without deploying technology. So in actual fact, although there may well be roadblocks along the way, it is expected that conversational AI as a technology will in fact receive an acceleration effect in the medium to long term as a result of the pandemic. And we are already beginning to see those borne out in our internal statistics. And I'll give you one of those in just a moment. So if we move on to our next slide, slide 11, please, Simon. What we focus on from our business point of view is our high margin revenue streams. And basically what they are our license revenues and above all, our usage revenues. So the way that we charge for our products is that we license them to our customers, typically over a 3-year period. And in order to keep the license fees modest, we share in the benefits of the return on investment by charging for usage of the software. This is a highly repeatable, highly scalable and a self-seeding model as customers enjoy success in one area, do not have to increase their capital costs, and then can roll out to other applications, just as you saw with Swisscom or indeed with Circle K. And we have seen dramatic growths in recent times in the usage of our platform. And this is the result of signing contracts through our partners and directly in 2018 and in 2019 that have gone live and are scaling the usage component of our revenues. And to give you some scale points there, at the end of Q2, we were up 550% on the same quarter as last year. So a very dramatic increase in usage usage volumes, which ultimately, over time, although not today, will be reflected in our pure play revenue numbers. So if we move to slide 12, as I mentioned, we're listed on the First North growth market. Our latest results, as you would expect, were at the end of Q2. Revenues were up 22%, which we're pleased with, especially in the COVID peak quarter. And that's testament to the robustness of our model, our business model, where license fees and usage kept ticking on. Our usage revenue was up 80% on the previous quarter and 113% on the previous year, reflecting an enormous uptick as projects go live. And we anticipate more and more of those to fall to revenue as we go forward. As I said, our goal is to do business through partnerships and alliances. And our partner revenue increased to 53% from 34% the previous year. And because our partners delivered all of the services, our gross margin went up to 69%, 9% up on the previous year. And as I said to you, we've seen some early stage evidence that the conversational AI marketplace, specifically in the enterprise, will benefit in the long run from an acceleration factor driven by the COVID pandemic. And we see this when we track our earliest stage of leads, which we call MQLs or marketing qualified leads, which are up 58% Q1 to Q2, which is quite dramatic for us. And the vast majority of those are coming from inbound sources, people looking for solutions. So the final thing for me on slide 13 is just a kind of repetition of our market guidance. We anticipate that the company will enjoy growth. We've seen that, it's been registered, and we monitor growth in order intake and in revenue. And we predict and we believe we're well on track, despite the COVID challenges, to maintain order intake growth at or above that of the generic marketplace in which we operate. Because of our partner channel focus, we anticipate that our gross margins will trend towards 70% by the end of this year. And at the end of Q2, that we'd already reported a gross margin of 69%. The company has predicted positive cash flow from operations at the end of this year. And the advice that we've given to the market is that we will monitor that situation. Because even though the company has done very well through the COVID situation, there are still material uncertainties at the global economic scale, which make confident predictions trickier in terms of operational cash flow. But the big story is not just about us turning cash flow positive, which is a relatively short distance away, but it's also about the scalability of the business model and the focus on the high gross margin revenues. And we're predicting that by the end of 2022, just over 2 years away, we will see usage revenues exceed 80% of all revenues. And that is because we see an exponential growth as we can deploy more and more solutions in more and more languages at more and more customers across more and more channels. And that growth is coming from our highest gross margin, which typically is a 90% gross margin business. So we see a very bright future for the company in terms of growth, profitability, and cash generation. So I think that's it from me today, Simon. I don't know if there were any questions that you want to solicit from people, or maybe you have yourself.
Yes, thank you, Lawrence, for that presentation. And I have a couple of questions coming from my end. Initially, perhaps we could talk a little bit about the rationale for why enterprises should invest in conversational AI. I think you lay out it very well, why people should invest in conversational AI, saving costs, increasing efficiency, etc. But the market at the same time is relatively immature. So what are the real obstacles in terms of for this market to take off? How do you overcome these obstacles in order to to convince the customer that they should implement AI's conversational solutions?
It's a good question, thank you. I mean, I think it's highly topical as well, because if you'd asked me that question 6 months ago, pre-COVID, I would have had to explain a different set of benefits, make sure that companies felt secure that the technology was up to the job of replacing humans. Today, because of the COVID crisis, a lot of businesses have been so negatively impacted that they simply don't believe they have any choice but to automate those channels, because they cannot get back to the scale of operation that they had before. And therefore, what we're actually persuading them of, yes, as you articulated, there is a very strong business reason to do this, both all of the benefits that you get now in terms of traditional return on investment and all of the benefits that acquiring the data can bring you as well. But what we have to prove to them is that Teneo is the best. And it's the best because it has everything in the tin that the CIO needs to deliver complex dialogues. Because the challenge for an enterprise is not answering the simple questions. It's actually now, post-COVID, it's managing people through complete complex buying cycles, ordering airplane tickets, booking hotels, looking after their home insurance and their telco accounts. They're non-trivial, multi-turn dialogues, and that's where one of the cases that Teneo absolutely excels.
Could you tell us anything about the market activity post the summer? What are your customers feeling? Are they starting to implement and start to, lift up their restrictions? Are they starting to implement more AI solutions or invest overall? What are the customers saying after the summer here?
So it depends a little bit on the geography. In some geographies, the COVID situation is still, in the first wave rather than the second. Here in Europe, we are returned from the holidays, at full steam, basically. We're still seeing companies rolling out projects. We're still seeing companies implement solutions and make buying decisions. Admittedly, it's taken sometimes longer for those buying decisions to go through because companies want to make sure that they look after their own cash resources, because in many cases they've been negatively impacted in their core business by COVID. In North America, the situation is a little bit more fluid. And it kind of depends very much on the industry that you're in and whether or not you're impacted. We had an airline prospect in the US who is no longer in a position. Their business is much more critically damaged than focusing on conversational AI. But then again, we will announce a go live at one of our customers who is one of the fresh food delivery companies, and they're going live with their production application in September. And they're at the other end of the scale. They simply couldn't cope with the demand that came at them as soon as people didn't want to go to the supermarket and so on and so forth. In Asia, the travel bans are still heavily in place in a lot of nations, but things are returning in some of the more developed economies, I would say. So I think we're not out of the woods as far as COVID is concerned, and the situation could sour again, but we are really seeing the wheels of the global economy start to rotate again.
That sounds very exciting, actually, for the future here, Lawrence. Unfortunately, we're running out of time as we are running a bit of a tight schedule. So I would like to send my big thank you for your presentation and also for the Q&A session and for answering those questions, of course. So big thank you, Lawrence.
Thank you to you as well, and thanks for hosting the session. Much appreciated.
Hello and welcome everyone to Introduce Investor Days. My name is Jesper Birch Jensen and I work as an equity research analyst here at ABG. And with us today we have the CEO of Net Gaming, or Acroud, Robert Andersson, and also the CFO Gustav Wadenbring. So with that said, please go ahead, Robert.
Thank you very much. And I think we go to the next slide where we have the agenda and the presenters. So I thought I was going to share a little bit of my overall reflections and to start with, and that also is a good segue into the introduction. So my name is Robert Andersson. I've been the CEO now for roughly about 6 months. So I joined the company in early March, which is... Well, now I've been here 6 months, and we have had certainly a very interesting time during these 6 months. It was a couple of weeks before Corona really hit. And before that, I was the CEO of N-Labs, which we'll also present later in the day here. And now I'm a part of the board at the N-Labs, and I'm also part of the board in a company called Saveland. Before that, I was the CEO of Catena Media for 3 years. So that's a little bit about me and what I've done before in this space. And Gustav, now to introduce him.
Hi, my name is Gustav Adenbring. I'm the CFO of Crowd. I've been in the company a little bit longer than Robert, almost 2 years now. I have a short background, 30 years from Deloitte and Touche, where I've been an M&A expert and plus 200 transactions in the background. Also been CFO for private equity in companies owned by private equity companies and putting them on a stock exchange. So I worked a lot within TMT, media, gaming in fast-growing companies.
All right, so the agenda then is a bit reflection on what we are, some highlights, and then Gustav's going to do the financials, and I will then do a short summary, and then we'll go to Q&A. So we go to the next slide, which is overall reflections. I mean, we can probably pass that introductory slide and go to the actual reflections. So this company has been fascinating me for a while, and I had the opportunity to come in as a CEO when I started feeling it was time to move on from N-Labs and was offered to move into the board instead. This appeared, and it's certainly a company that, if you look historically, has had its challenges, especially in 2019, and I felt that it was in need of quite drastic change and a new strategy in order to kind of spur on the growth. So since I've come in, we have worked really hard on change management and driving a cultural change. Part of that is that we have changed the name of the company, so Net Gaming is no more, which is important to understand. That's a legacy. Part of that name change also came because basically Net Gaming consists of one company, and that company was called Highlight Media. So it's a listed entity. Now we have kind of put everything under one brand, which is much more clear both to employee branding and also investors. What we have in this company and what I saw is that there is clearly talent that is not misused, but has not had the right driving force behind it. It also has some extremely strong assets in poker listings, probably one of the biggest affiliation sites within poker in the world. And then some other really strong domain names that can be built out to further the company's growth. We have done a lot of restructuring on the Q2, where we took a lot of one-off costs. We basically shut down our Swedish office, and we've shut down satellite offices in other places as well to kind of streamline the costs, which was quite easy when we streamlined the processes. Another big reflection is, of course, what's kind of impacted everyone is the COVID and what happened for us. We saw significant growth in the beginning when everybody went into lockdown, but we were really humble in understanding that, you know, it's not because all of a sudden after 3 weeks with me at the helm are doing fantastic, but it coincided with COVID. And what we're seeing now during the summer months and the ease of lockdowns is that we are normalizing traffic levels, so to say. And with that comes like normal challenges, but we were always aware that it was a bit of a boost with that. So we are really now focusing on North America and the opportunities there, but also in other fast-growing emerging markets where we see then strong organic growth. So what we are doing now in 2020 is adapting the company for further growth. So we're kind of putting all the building blocks in place so that we can grow really fast in 21 and 22. So this is, let's say, the foundation for that growth is being built and changed around during this year. That's been the focus so far. We are moving on to the next slide, which is ongoing operative initiatives. So really focused on operational efficiency, and we have done like a competence switch in terms of staff, where we have we are not more or less people, but what we have done is kind of remove irrelevant knowledge and replaced it with kind of really solid, strong knowledge that helps us to go where we want to go. We've strengthened the US team significantly. We have submitted a lot of license applications finally. They are being processed now, and we are hoping to have a fair bit of approved licenses quite shortly. We have managed to recruit some really leading key account people to the team, so that's going to strengthen our sales. And of course, we continue to develop our own platform, and we are in also a transition year where we are putting old assets onto the new platform. And of course, we are developing our sports betting offering. It's something that we historically have been weak in, and something that there was an acquisition prior to May. But let's just say that we have only dipped our toes into sports betting so far, and that's a huge upside down the line for us when we go into 21 and 22. So moving on to the next slide. Then a little bit about what is a crowd, and you introduced us as net gaming, but we are a crowd, and I just wanted to dig into this a little bit. First of all, what is a crowd? Well, we're a company that works with lead generation. We're an affiliate company, especially in the iGaming space. We have a small finance vertical as well in the States. But we are an affiliate company to the likes of Catena Media, RakeTech, Better Collective, although Better Collective is very focused on sports. We have poker and casino as our predominant verticals. But when you come down to, if we go to our manifesto, it's something that is now a little bit about internal culture, but I believe this is really relevant for when you are trying to build a company. You really want to not say only what the crowd is, but who is a crowd. So this is something that should drive how we think, and how investors also should kind of take with them in how to understand the culture within the company. So I will read this. We are a challenger on a quest. We are adapting, and we are here to disrupt and claim what hasn't been claimed. We are here for the challenge, for the joy, for the pride of giving people guidance in their everyday life, and people and brands, supporting brands, building their crowds. We are here for the challenge because that's our motto on how to enable synergies between people and brands. We are here for the joy because it's our motto on how to attract and nurture existing and future talent. We are here for the pride because that's our motto on how to build confidence and long-lasting relationships. We are a challenger on a quest, and the journey has just begun. We are a crowd. Join the ride. And this is, for us, a kind of new start. This is actually quite an old company. It was founded in 2003, and it's been around for a long time. So it's really important to really get the fresh start and start thinking in a much more entrepreneurial way than has kind of been in these walls here before. So it's a full reset that we are aiming for here, where we are going into much more of a startup culture and really kind of going for the win, so to say. So we are a crowd, and we are reinvigorating the brand, and we want you to join the ride. So that's actually on the next slide. I do apologize, I didn't say that, dear moderators. So we go again to the next slide. This is a little bit of the visual of how we want to communicate visually. Then now done with that, we move on to the highlights. And we can go one more slide. We have the actual highlights. So if you compare Q2 2020 to 19, you see that we have slightly increased revenues, and there has been an organic growth. If you look at EBITDA, just normal EBITDA, it's actually quite a bit lower than in 2019. But looking at adjusted EBITDA, it's actually completely in line with the margins that we have when it's normalized. Q2 20 was a quarter where we took a lot of one-off costs. We took adjustments for staff being let go, as well as shutting down the Swedish office, and we took other costs as well that was related to all of this restructuring in Q2. So therefore, we had a lower EBITDA, but the adjusted was as expected, so to say, and with the continued very, very strong cash conversion. Moving on, I just want to mention that before that we did also a successful refinancing where we extended the bond until 2022, so finances are secured. Significant events, well, I talked about the change management. We are focusing on North America. Refinancing is secured, as I said. And we continue to improve our capital structure and have been buying back our bonds, and we continue to do so. So after Q2, on the next slide, we did change the name, and we have adopted even more measures in order to adapt to the Dutch market and other regulations. This will, though, result in a short-term impact on revenues, especially revenues in the Dutch market, where we are seeing that we are positioning ourselves to be the leading affiliate of regulated revenues and are expecting opening in Q1, Q2 2021. Once that happens, it's going to be very good for us. And now I will give this over to Gustav to go through some of the financial details.
Hello. I will try to give a very fast 5-minute recap about the financials and give you a flavor of our financials. So you switch page to revenue and earnings per development, please. Before Robert rounds off. And if you look at our financials as an affiliate company and as a crowd as we have a relatively stable EBITDA and revenues the last 5 quarters. Revenues fluctuate between 3.2 to 3.5 million euros and EBITDA around 1.8 to 2.2 million euros last 5 quarters. We operate with a strong EBITDA margin around 55-60% historically. And we also see in the graph to the right that we've been going through a quite significant strategic shift from CPA to rev share, which is our 2 different revenue models within the affiliate industry. So now we're operating with more sticky revenues, so to say, around 55 to 60% the last quarters, which we think is a strength. If we change page to revenue mix and mix by vertical and geography, we can see that we mainly run 3 different verticals, as Robert said. It's the poker, it's the casino, and it's sports betting. And sports betting is going to be one of our development growth areas. where we just dipped our toes. The poker is one of our strengths. We have a long poker history in this company from pokerlistings.com, and we see now in Q2 it's increasing to almost 21% of our revenues, partly through World Series of Poker. It's partly through the situation with the COVID around the world that has also generated a poker boom. So that's one of our strengths. And the big vertical we have is historically it's casino. We operate 3 different markets as we classify them in. It's the rest of the world, it's Europe, and it's North America, where we see significant possibilities in North America onwards. If we switch to the profit and loss, please. Just to give you a short flavor, you can read much more in our quarterly report, but it's when looking on the figures, it's important to keep in mind that Q2 was impacted by quite some initiatives. It was both our refinancing, we had huge change management processes with reallocation of offices and restructuring. So that's impacting the P&L in Q2 quite a lot. But as an affiliate company, the revenues comprises affiliate revenues, of course, and then we have a cost base. The operating cost base mainly comprises personnel costs and other external costs, and also support costs. And what I want to emphasize, which is unique with this business model, is it's very, very scalable. So we can have a relatively stable support cost, and we can increase the top line quite significantly without adding much more support costs. If we go to page with the cash flow development, please. What also is unique with our affiliate business and our company is that we have a very strong operating cash flow. And the cash conversion is around 85 to 90% in general. And we operate with very limited net working capital. We don't need to tie up a lot of money to run our business. In a normal state, around 10% of our revenues would be in working capital, mainly in accounts receivables then. And then also to add on is that our capex is also relatively limited. So that's causing that we have a very high cash conversion in this kind of business model. And the capex is mainly related to building sites and rollout of sites. If we change page to the net debt to EBITDA. So our business, as Robert mentioned in the beginning, is financed via partly a bond, and we have been working the last year with leveraging the company and also decreasing the bond. So we repurchased during several occasions parts of the bond, and we're operating there now with around 2.8 in net debt to EBITDA ratio. We just switch to the last page, financial targets. We have 4 different targets, and they should be seen over 2 to 3 years time from where we stand. And we work with a growth in earnings per share. It should be above 20%. Organic revenue growth around 15 to 25%. That should be our steady state where we're going to work on coming years. And we should have a capital structure with net debt to EBITDA below 2. That's what we're working after as a target. We won't make any dividends the coming years. We're going to invest as much as possible in our operations and deleveraging our capital structure as well. That was a very fast recap of our financials. So I leave for Robert for final words.
Yeah. So let's wrap this up a little bit and then go to Q&A. So if we have then the outlook and growth initiatives on the next slide. So as we said in our Q2 report, we do see a more challenging H2 this year. 2 things there compared to the spring here. We have a much more normalized player behavior in the sense that people are not in lockdown in certain markets. Sweden isn't a really big market for us, and we have also, but although Sweden isn't a really big market, the new rules in Sweden with deposit limits, etc., are gonna be felt, especially for the operators, and as a side effect of that, it's going to be felt for us a little bit. And then we have the Dutch market as well, where we did adjustments to be compliant before the regulation. But we of course have to counter that and then really boost our growth in 21. It's the US initiatives, which are now gaining speed, and it's something that I'm really looking forward to towards the end of this year. And we are actively working on having changed the strategy for boosting growth. I'd say that before I came in, this company has been spread a little bit too thin on many assets. So we have now isolated where we will have our big push, and it's much better to push 5 to 10 brands than to try and push 200 brands at the same time. So we have a much more focus on our key brands, where less is more, in the sense that we focus on really building up key assets. And then, of course, we want to continue to grow sports betting. We see huge opportunities there. As we said, we've just been dabbling in it so far. So there is something that I would like to see a huge boost. And then continue to optimize our capital structure, which is decreasing our debt, which is also a focus for us going forward. So with that said, and decently on time at least, leave it for some Q&A.
Thank you, Robert and Gustav. To start off, I'd like to ask, if we look into Q3 and Q4 here, the comps might look quite tough sequentially, given the fact that casino and poker activity has been boosted by COVID-19. But I was wondering if you could give us some color on the general demand, and also how casino and poker stacks up on a year-to-year level.
The only thing that I can of course comment on ongoing operations at the moment is what we see in certain aspects is, of course, summer is all usually categorized by no matter COVID or not, by a little bit lower player activity, and nothing has changed there. But the effect that we saw during COVID, I think we have seen a little bit of an effect as well, where people are trying to be outside more than they potentially have during a normal summer. So we have seen a little bit of drop in player activity, but that was to be expected. And then for us, the reason why we believe that H2 will be a little bit challenging is the adjustments that we are doing and the initiatives that we have taken now to be able to boost growth in 2021. Simply, there is a lot of things changing, and we are moving things around, and you won't see the effect immediately, but I'm confident that we are in for a really good ride in 21 and 22.
Thank you, and I think we have time for one more question here, but obviously there's a lot happening in terms of regulations in different geographies, and I was wondering, if you look into 2021, we know there's new regulations in Germany and the Dutch market per se, and I was wondering if you could elaborate a little bit on the net effect of these regulations from the Netherlands and the Germany.
For us, from this point on, we just wanted to be regulated as soon as possible, since we are compliant, and we have taken these measures in order to be live with regulated operators from day one. We have assets that has incredibly good visibility and rankings in these markets. So for us, it's just to get it live, and then it's pure upside for us as soon as it's regulated.
Okay, thank you, Robert and Gustav, for presenting a crowd and answering my questions.
Thank you. Have a good day. Bye.
Okay, good afternoon and welcome. Now the time has come to listen to Sdiptech. We have a CEO with us here today, Jakob Holm, who will present the group, and after which we will have a little bit of a Q&A session. So with that said, please go ahead.
Thank you very much. So we're happy to be here to have the opportunity to present our company to all of you. Normally I start off by doing a very short introduction of Sdiptech, and if you are familiar with companies such as Indutrade, Lagercrantz, Addtech, Lifco, serial acquiring companies, that we have the same underlying business model as these companies. So that's one way of understanding how we work. We've also decided to do some things differently, and two things I would like to point out particularly. One thing being that we believe it's value adding for us at least to have a focus and a theme for what we do. Our focus that we have selected is infrastructure. So infrastructure is what we do as part of our business and what we look for in acquisitions. So it's value adding to us, for us to have that type of competence and knowledge that we build up within the group. The second thing that we've decided to do differently is how we pursue acquisitions, or rather how we work on identifying interesting prospects that fit into our strategy and infrastructure sector. So we do that differently as well, with an in-house team that focus on that type of work. So that was a short version, and then we will move on to the version more for 20 minutes, which we have here today. So starting off, we are an infrastructure technology group, and we had at our latest report 1.9 billion Swedish crowns in net sales. Our profitability margin at 15.7% has gradually been improving over the quarters, and that is due to, on one hand, the acquisitions that we do are normally at a higher profitability level. So that means that every acquisition adds to an increased profitability for the group, but also that we've seen a good organic underlying growth, sales growth in several of our companies, where we also have a scalable business model. So if you add net sales on top of a scalable business model, then the profitability levels also increase. So it's a combination of acquisitions and organic growth. Our primary growth target is to grow our operating profit, EBITDA, at about 40% over the past 12 months. Part of that is organic. We delivered at about 8% organic profit growth in 2019, and so far in 2020 we are above 10% in organic profit growth. So that's well in line with our financial goals, and the additional profit growth then comes from acquisitions, as our business model also is designed to do. 34 business units. We have a decentralized operating model, and currently 34 business units. The majority of them are in Sweden. The second largest market for us is in the UK. Moving over to the brief agenda for today, we will have a look at the market infrastructure. There are challenges within that market, but that also possesses growth opportunities for us. Then briefly over our business model, and finally to have a look at the market situation with specific regards to the corona pandemic. So we chose infrastructure as a focus and theme for us because we believe in the infrastructure sector as a market. The underlying growth drivers are very solid and they are fundamental, and that is really on the basis of that there are challenges that need to be addressed with investment to come today and in the future, over the foreseeable future. One of the aspects is that the infrastructure surrounding us is aging. There's a substantial amount of capital needed to invest to ensure that the infrastructures deliver accordingly in terms of modernization, repair, service, and so on. The second point is that the consumption of water continues to grow. The consumption of electricity and energy continues to grow. Our society becomes increasingly electrified and digitized, so the consumption will continue to grow. Transportation's volumes in the same way. However, the capacities within the infrastructure assets are not growing at the same pace, so it's an increasing gap. So there's a substantial investment need within infrastructure. The fourth point is rather about technical development and enhancements that really comes from the societies, but also from individuals and communities' drive for increased sustainability, increased efficiency, safety, and a lot of that desire to improve in these areas. As a result, politicians make decisions around increased regulations that then are implemented into infrastructure. So that really calls for an technology advancements which needs to go on all the time and over foreseeable future as well. And a lot of the technical development is also done within smaller companies. So the acquisitional market is also good. There's plenty of high-tech companies within the infrastructure sector that we are looking at, and it will continue to be so over a long period of time. And to give you some examples of what is happening within the market, the example starting from the left, that 23% of the fresh water within the pipe systems is leaking, and that is substantial loss. We have a company, British company, Auger, which is focused to fix those leaks. Auger's customers are insurance companies, so whenever there's a leak, the insurer contacts the insurance company, and then the claims management of the leaking pipes is outsourced to Auger. So very steady and stable type of business. The underlying drivers is of course the aging infrastructures, and the revenue model is also very stable since it's outsourced model. The second example there is about improving traffic safety and traffic security. Speed cameras have a positive impact, substantially positive impact. Our UK-based company, Red Speed International, is focused on developing and providing traffic monitoring cameras, for instance, speed. And the typical customer there is communities. So the largest customer is Traffic for London, for instance. So Red Speed International provides these traffic cameras. And on top of that, of course, there's always service and maintenance contracts that are associated with each camera. The third example, Unipower. That's really Unipower's business is driven a lot by the switch over to renewable energy sources. So Unipower offers power quality metering for energy suppliers and energy companies. So the more sustainable energy that is added to our power grids, the poorer power quality actually. So with the use of Unipower's products, the energy distributors can monitor the power quality and ensure that they can take any necessary actions and measures to manage the shift over to renewable energy sources. The fourth example, Cryptify, is based on the increasing malwares that I think we've all experienced that in the PC world, but it's also coming into the mobile world, and also it becomes increasingly important to be able to communicate in a encrypted way. So Cryptify offers then encrypted mobile communication, and they do it at a high security level, military standard level actually. So that's also an example within the communication side of infrastructure, where the underlying trends also creates a growing demand for our products and services. Moving over to our business model. I've touched upon it initially, so just to repeat it a little bit. So our business idea is to offer products and services to critical needs within the infrastructure sector. You've seen 4 examples of it. All in all, we've got 34 business units, as I said. I presented 4 of them. Our growth model is really based on ensuring organic profit growth by developing the companies that we acquire, and then additionally, in a systematic way, look for interesting, specialized and niche companies within infrastructure sector so that we can acquire that, and then continue to do that in a value-adding way. And we focus a lot on the market position of each company that we look at for acquisition. So strong market position really enables a company to deliver the products and services with a weaker competition than if you have a more commodity-based type of offering. So the market positions is very important to us. One example that when we filter out companies, we always look at the profitability level of at least 15% operating profit, because we believe that if you are below 15%, then you have a too weak market position, the competition is too strong, and then we will not invest in that type of company. And then when we develop the company, we develop it to increase the strength of that market position, to increase the competitive edge. As an effect, then of course the profitability margin is something that we focus a lot on when we acquire and when we develop our companies. The fourth point is around our organizational model. Same type of organizational model that the other serial acquirers have. So it's a decentralized model, ensuring that the most important decisions when it comes to client proposals or to product development or any type of questions related to personnel or suppliers and so on is always taken at the appropriate level, decentralized level, local level. Three business areas: water and energy, special infrastructure solutions, and property technical services. The first, I will actually start off on the right-hand side with property technical services. That is typically installation type of business, technical services type of business, where the customers are property owners. That's where Sdiptech started the journey, and we've acquired in total 9 business units there. However, we have not done any additional acquisitions there over a couple of years. And that is because we believe that the market positions in the other two business areas are stronger and that they are more sustainable in the long run. And one example, if you have a look at the profitability margin, it's a good example. You could see that it's a different type of businesses. In the property technical services area, is a labor-intensive business, a profitability level at about 8%, which is fairly good for an installation type of business, but it's difficult really to achieve any higher profitability margin than that because the competitive situation is rather effective. However, for the other two areas, as I said, different types of stronger market positions, hence the higher profitability margin. Special infrastructure solution is the area that has over the past 2 years grown fastest, and that is mainly due to that the acquisition activity has been higher there. So it now currently stands for 45% of our profits. The water and energy area is a very important area. The underlying trends in water and energy are very strong. And we focus a lot on acquisitions there. Of course, naturally, it's a strategic area for us. So the future prospects are also very good in that area. Profitability-wise, we've guided water and energy at 17% to 20% for 2020. Currently at the higher end of that scale. Special infra we guided at 22% to 25%, so also in the higher end, slightly above actually. And property technical services 8% to 10%, so there we are rather in the lower end. And to some extent the profitability levels in the group after the second quarter are higher than you could expect in a normal situation. Going into the pandemic, I think no one really knew what was going to happen. So as a measure of security, we did a couple of actions that in the hindsight wasn't really necessary. But we took on a strict cost control and some investments that go over the P&L. We also withheld for a period to ensure that we came out of the pandemic in a good way. However, we've actually managed the pandemic in a good way, and especially some of the investments over the P&L we have started to open up again. And some of the cost measures that we have done, they were temporary. However, some of the cost measures that we have done also will have a sustainable impact. It comes natural when you enter a crisis, you do things differently, and some of the changes are absolutely the right thing to do, and those kind of cost improvements will also be sustainable. Having looked at then our financial development on revenue and the profits, the yellow bars illustrate the past 4 quarters. The growth there, as we saw in the first slide, operating profit has grown at 41%, the combination of organic and acquired growth. The top line has grown slightly at a slower pace, and that really comes back to our focus is really is on profitability. So we develop our companies towards stronger positions, improve profitability, because what we're doing is really that we are building a group of companies that where every building block should be strong, and therefore the market position and profitability is really the best thing to focus on for the long run. The improvements here also, as I said, comes from done acquisitions. Our targets is to acquire companies corresponding to 90 million EBITDA per year and have organic profit growth at 5 to 10%. We've delivered on the organic profit growth. Good chance to achieve that this year as well, of course. Going to the acquired growth, we still will stick to our goal, 90 million acquired for 2020, although we only are at 37 million currently. But we stick to the target. Acquisitions, we've touched upon that. 3 acquisitions so far this year. Hilltip, a Finnish-based company providing equipment based on hardware and software to deal with roads with slippery winter conditions. An excellent company with a great product offering, but also with a broad and well-established distribution network. So the combination of strong products based on software, hardware, but also strong distribution network really enables them to have an excellent market position to build additional growth on top on that. Stockholm Radio is about the coastal radio and previously we had the radio communication for commercial airline traffic, so we have acquired the assets within also the coastal radio, which we will include as an add-on acquisition to our existing business. So from the same operating control center, we will not only handle the commercial airline traffic, but also the coastal radio traffic. A small acquisition, but interesting acquisition. Alerter Group, we concluded in July. Alerter Group provides products that ensures disabled people to have the same escape routes in terms of emergency in places like universities, hospitals, and so on. So it's specifically tailored products for disabled people. Very interesting company. Moving forward, over to the market situation, specifically then focus on the corona pandemic. We entered the corona pandemic in a certain way, and we started to monitor some important KPIs so that we would understand where on the curve will we be. And as a result, we got a good grip of that, but also we decided then to share one of the KPIs to the market, and that is to understand the percentage of how much of the planned deliveries that we in each specific point in time that we are we're delivering at. As of the 8th of July, we delivered at 95% in total for the entire group. And back in the late April, that same figure was 85%. So it has been a gradual improvement along the line when restrictions are being eased up in our markets, where the most important is, of course, Sweden and the UK, based on size. Currently, the restrictions are at the same level as they were in July, so you would perhaps expect the same type of delivery percentage as well currently. Okay, and the nature of the effect is really that the majority of our deliveries are being delayed. So it's not that we are losing out of deliveries, the order book is good, but we are prevented to deliver the products and services to our customers because of restrictions. So the backlog is building up that we have started to deliver on, and we will continue to do so as soon as the restrictions enable us to do it. And that's my final slide for today. Some questions?
Yeah, thank you, Jakob. Yeah, so to start off, I thought it'd be interesting to hear a bit more about your M&A process. You mentioned you have your internal team.
Yeah.
And you mentioned some of the things you're looking at in terms of profitability, but could you maybe describe a bit what sort of size of the companies you're targeting? Is there a sweet spot there, or how do you...
Yes, we believe a sweet spot from a size perspective is between 10 to 50 million Swedish crowns in profit. In that, there's plenty of companies within that size, but also the competition, the larger company, the higher acquisition competition that there is. So, but between 10 to 50, that's a good sweet spot. And the larger companies are expected then to be acquired in the UK, whereas the smaller companies will be in Scandinavia.
And why is that? Why is it different?
Well, the difference there is that the competition is higher or tougher in Scandinavia, specifically in Sweden, actually. So, however, in UK, the competition is a bit different. It's more from private equity, from other industrial buyers. So we have a more unique proposition there. So we have the ability, you could say, to buy the same quality of company, but at a larger size for the same multiple as we would need to be pay in Sweden.
And what is your average multiple paid, or more or less?
Average is about 6.5 times EBIT. That's what we had 2019, and that has been also the average historically.
Yeah, and so it's interesting. So Sweden, big part of your end market, so almost 50%, and then UK is reaching 30% almost. What's the next frontier, or what other geographies are you looking to expand into, and why?
Yeah. Okay. Well, Scandinavia, UK provides plenty of opportunities for us, but of course we want to look, in the next chapter, couple of years ahead. So we believe that markets such as the Dutch market is interesting. Same type of characteristics as UK and Scandinavia, highly regulated, good tradition of engineering, good tradition of entrepreneurship. So there's plenty of highly qualitative infrastructure companies within Holland. So we have started to develop that for over 1 year's time now. So we'll see how it turns out.
Yeah, and in terms of more organic developments, you have a earnings growth target between 5 to 10% organic EBITDA growth. Splitting it up between the segments, where do you see, maybe over the coming 3 to 4 years, the higher organic growth versus the other segments? And
okay, so then going back then to the lowest pace of organic growth we would expect in the property technical services area. It's a mature area. Our market positions are stable, so we will expect some organic growth there, but not in the higher end. The higher organic growth would probably be expected in the special infrastructure solutions area, where the solutions are highly tailored to specific needs. So I would say special infrastructure solutions where we would expect the highest organic growth. Second in line, water and energy. Third in line, property technical services.
Yeah, and just to finish up with the last question. So back in 2017, when you IPO'd, the property technical services or the elevator segment did not really perform as expected.
Yep.
Could you just walk us through, what has changed today and what's different behind in the group today?
Yes. Okay. So what happened then in 2017? That it happened to become an increased price pressure. So the demand for modernization services within elevator came down due to the high activity within the new construction area, but also the costs, personnel costs increased. So it was a bad combination really. And then the existing strategy was to focus on large customers, large contracts, but those contracts, of course, were those that were most exposed to price pressure. So we changed the strategy, and now the portfolio of customers is different. So rather we have smaller customers that pay better for good service, but smaller customers, more customers, the total level of revenue is lower now than it was back in then, but the profit levels are higher.
Yeah, I understand. I think with that we will have to round off here. But thank you so much, Jakob, for coming here today and
thank you very much.
Stiptech. Thank you.
Hi and welcome everyone to today's presentation of Empir Group. My name is Stefan Knutsson. I'm an equity analyst here at ABG Sundal Collier. And with me today I have Lars Save, CEO of Empir, and Torbjörn Skog, CEO of subsidiary Frontwalker. Welcome.
Thank you.
Thank you. Yes, my name is Lars Save. I'm the chairman of and the CEO of Empir Group since 2015. And we are chosen to present this year the group in the mother company and with the two operational subsidiary. So just to catch up with the group, we have two subsidiaries that we consolidate in the mother company. It's Upnode, application development, and the Frontwalker group, which is a consolidated group that Torbjörn is in charge of, and Torbjörn will explain in detail what we are doing there. And this minority holding here in a listed company called Exavitec has a special story that I will connect to later on this presentation. Very quickly, if you haven't studied our annual reports, the Upnode group and its subsidiaries in terms of development companies in application. Primarily, we have a quite big investment, and we are going into black numbers now after many years, and that is in fleet management systems for operating a substantial number of cars in different kind of pool and share economy kind of applications. So, Torbjörn, the floor is yours.
Thank you. So today I'm going to tell you a little bit about Frontwalker Group. Frontwalker Group is an IT company. We have operations in Sundsvall, Uppsala, Stockholm, and Malmö. We're about 120 employees. We have about 130 million in sales and an operating margin of about 10 to 11%. Our offering can be divided into three parts. First, we have the traditional on-site consultancy service. This is where we have highly skilled IT professionals that we send out to our customers. So they're working together with the customer staff under supervision of the customer. And that is the traditional way of doing IT consultancy service, and our companies have been doing it for as long as they've been around. And it accounts for about 40% of our total business. Then we have something that I would like to describe as a full system maintenance offer. And that we do it the other way around. We keep our consultants at home in our offices, and we bring home the project or the system that we are maintaining for the client. So we're utilizing the same resources, but in a different way, which we believe have really strong merits both for the client and for ourselves. And I will talk a little bit more about the distinction between these two ways of providing IT services in a minute, because it has impacts also on our business model. Then finally, thirdly, we have something slightly different. We have we sell IT support services. That is, the manning or staffing of a client's IT support desk. So what we do is that we agree to man X number of chairs in the client's support desk. We pick the people and we send them over there. And it's a slightly different kind of business. Typically, the people that we deploy in this area, they are younger, less experienced than the IT or system development professionals. And although, of course, they have to be knowledgeable about IT and they have to be good problem solvers, but this is a service function. So it's really important that the people that we deploy here are able to provide a good service experience. We do this both on-site at the client and we do it remotely. And we do support for basic infrastructure. We do support for general PC, Windows, Office things. And we do also support for proprietary applications at the clients. As I said, we believe there's a big and really important fundamental difference between these two ways of selling system development services that I just mentioned, the on-site consultancy and the full system maintenance offer. Traditionally, the companies in Frontwalker have been all about on-site consultancy, but as of late, we have been doing a sort of transition. We're trying to transition more and more business into the full system maintenance offer, because we believe it's a way of us to distinguish ourselves on the market with a competitive advantage. We believe it has some really strong benefits for the clients and not the least for ourselves and for our business model. And if we would just dig a little deeper into this, we have on the left, we have the traditional on-site consultancy. That's about providing a resource. On the right-hand side, we have the full system maintenance offer and the IT support. That is about providing a service. And if we look at this and the differences between these two, first from a customer relationship perspective, you can say that in general, if you're an on-site consultant, you're a rather exchangeable, generic resource. The consultant is sent to the client. He stays there for a period of time. But when the contract is ended, he goes off to another client. And the next time this client wants a consultant, well, maybe you get the benefit of going there again, but might as well be someone else. The full system maintenance, on the other hand, then you tend to develop a really deep and strong bond with your client. You get to know the client's organization, its business, the systems, and so on. And you become a long-term, more strategic partner. Also, a quite important difference, when you do on-site consultants, there is often an intermediary between you as a supplier and the end client. That normally you don't have when you do the full system maintenance. You have direct access to the client. If we look at this from a pricing perspective or a cost perspective from the client's point of view, when you do on-site consultancy, price transparency is complete. It's 100%. It's just about you provide a resource that has an hourly rate. And competition is mainly on price, or price is really, really important, which of course is bad for business. The full system maintenance offer, that is a packaged offer. We do development projects, but we also supply a lot of other values for the customer. We have the availability, we have flexibility of resource, and we maintain knowledge about the client's system and business over time. We package this into an offer. Client normally pays a fixed fee, monthly fee. And the thing is that these extra values are not strictly interrelated to this limited resource of hours available in a day. So that allows us to have better margins in this kind of offer. And if we look at the perceived customer value and the basis for charging that we have, on-site consultancy is just time and materials. Number of hours spent at the client's office, that's what we can charge for. In the full system maintenance offer, well, we have all these values. We have the availability. The client can call anytime. We have the people at our office. They will be available with short notice. We have the flexibility. We can scale up or down resource utilization on a more or less weekly basis. We do the knowledge management of the system, and a lot of clients, they really appreciate all these values, and they're willing to pay for it. So much better customer value and a much better value proposition, we believe. Last but not least, the resources we are working with in this industry is a scarce resource. Skilled IT professionals are really, really difficult to get hold of. The problem when you do on-site consultancy is that the people, well, they don't only have to be skilled, they have to have documented merits on their CV. Because the CV is actually what's being sold. And if the consultant doesn't have 3 to 5 years of experience, the CV goes in the bin. On the other hand, when we do the work from our offices, then we take full responsibility of the delivery. So we can recruit junior talent as long as we can see that these people, they will be able to get the job done. We can recruit them. We can sit them next to a more senior person, and deploy them in our operations. And obviously, junior talents are, they doesn't cost as much as a senior consultants, but I think more importantly, they are available to a larger extent than more senior personnel. So it's a huge advantage when it comes to recruiting. If we take a quick look at our customer base, I would say it's quite diversified. About a quarter of our business is in the sector of e-health and life science. We have, for instance, a long-term customer that is the trade agency for the pharmaceutical industry in Sweden, Läkemedelsindustriföreningen. For them, we have built and we maintain the National Registry of Drugs, FASS. We have other clients there as well. We're also quite strong within the public sector. So we have, for instance, the Swedish Civil, what's it called, Myndigheten för samhällsskydd och beredskap. And we have the Swedish Company House and many other clients. And then in descending order, we have clients in retail, H&M and IKEA, for instance. We have clients in construction and heavy industry. We have clients in media, especially gaming, not gambling, but gaming, and so on and so on. And as you can imagine, when COVID hit, we felt quite fortunate that we had this structure of or this profile of our customer base, because so far most of our clients, they haven't suffered really bad from COVID, and of course that has been beneficial to us as well. And I come back to COVID at the end of my presentation. No single client counts for more than 15% of our total revenues. Top 5 clients combined make up for less than 50% of revenues. Top 10 less than 65%. So I'd say we are quite diversified. If we take a look at our organizational structure, I would say we are quite a decentralized company. So operations is run in independent daughter companies. So we have real decision power close to operations, close to the market. And then on top, centrally on group level, we provide functions that all daughter companies can benefit from, like administration, accounting. We have the resources and the competence about public procurement, and so on and so on. Also, we can coordinate the combined resources of the whole group so that we can take on larger commitments as a group. So in this way, we believe that we kind of get the best of 2 worlds. We have all the benefits all the benefits of a small company: the flexibility, the swiftness, the being close to market, being able to grow a culture based on the people that are actually on site. On the other hand, we also have the benefits from belonging to a larger corporate group and the power that comes with that. So this is an Investors Day. And you're all investors, so I thought I would talk a little bit about the financial side of the business as well. End of 2019, the board of Frontwalker Group adopted the following strategy and financial targets. It was said that Frontwalker should mainly have an organic growth and maximizing profits and dividends. And I want to stress that it was mainly organic. Acquisitions is not at all ruled out, but focuses on maximizing profits and dividends. By the end of 2022, we should reach sales of 170 million and earnings before tax of about 20 million. And what we earn, we should pay in dividends to our owners. And that's one of the beauties with this business, that we tie up very, very little capital, so we can have a really generous dividend policy. Now, all this was, as I said, was end of 2019, and shortly thereafter, COVID hit. And what we've said is that COVID has raised significant, what do we say, uncertainty around the financial goals. But we still believe we are able to reach these goals, but we can't really tell how the odds of doing that, how much less favorable the odds are of actually succeeding. And at the time, it's really, really difficult to assess this situation. So until the market situation is stabilized and we will be able to assess the situation, we will not adjust these targets. The next slide is to give you a rough idea about our financial projection. Main takeaway here is that this is a stable company. We expect steady but moderate growth, mostly organic growth. But it's not a hockey stick, but it's a stable, profitable business. We have some uncertainty on top because of COVID, but we will still be profitable, and what we earn, we will pay in dividends to our owners. So finally, I guess we have to relate to COVID on an occasion like this. When COVID hit in January, we immediately realized that the immediate effects, the short-term effects on Frontwalker because of COVID would be limited, and that has turned out to be pretty accurate. I mean, we have noticeable effects, but rather limited, I would say. On the other hand, the prospects of growth for the second half of 2020 they are worsened due to COVID, because total activity on the market is much lower than before. So that is something we have to relate to. And as I said, in extension, this has led to some uncertainties regarding especially the timing of our financial targets. On the other hand, if we look beyond COVID, we still believe that this situation that has been for many years now, that demand of IT services outweigh the supply, it will come back, because the digitization process that is underpinning demand, that has only started. And the lack of IT resources, of people knowledgeable in IT, that's a structural problem that hasn't been solved. And also, we are opportunistic enough to say that, well, COVID also in the short term may bring some opportunities for us. For example, a lot of our competitors have suffered quite hard because of COVID, and we haven't. So relatively, we have a stronger position on the market now than before, we believe. Also, when the market bounces back, maybe from a really, really low activity to slightly higher, that will give us opportunity to put a foot in the door at new clients, which we'll be able to benefit from later on. COVID has brought a widespread adoption to remote collaboration. Almost all companies are really used to remote collaboration, and that, we think, will benefit us a lot when we are trying to convince clients to work with our full system maintenance offer, because most will see the advantages, but some will be a bit skeptic about, well, will it really work, working remotely and so on. That is I would say is gone with COVID. Everyone knows that will not be a problem. And last but not least, we expect that we will see opportunities for acquisitions in the near future, and we are geared for doing acquisitions. We have an overhead in the group that we will be able to handle 3, 4, maybe 5 more companies with only marginally extra cost. So that is also a thing. And when those opportunities show themselves, we will be really quick to act. That was actually what I had to say about Frontwalker Group today. So I will leave it to you, Lars, to wrap it up. Okay,
Thank you. I don't know about timing, but I think we have some minutes to go, and questions, of course. Yeah, we just published the quarterly 2 report, and that is the second report for more than 10 years that this group ever have shown a profit at the bottom. So 2 quarterly reports in a row, despite the virus effects on the market. So I'm very happy that we already 2019, before we knew anything about this, took this decision to create the 2 consolidated groups, Front Worker Group and Apnode Group. They are totally independent, its own management, and are operating its different targets. And I think it's important also to notice all numbers we have said here has also been published, including the financials for forward-looking numbers, if you read our published material. And I think really the most important page is page 25 in the quarterly report, because that's new, the segments. In this case, the segments are totally legal entities with its full resources, and the mother company has been stripped down on every operational assets. It has been pushed down, and it's a pure owner company from 1st of January this year. Then you see profit after financial targets, Front Worker Group, and it goes in line with the numbers that Torbjörn was talking about. This business is, as we said, rather mature. Therefore, we are optimizing operation and earnings and dividend. You don't bind many dollars in capital, so you can divide it out every year. And that's why we have consolidated that in one group. That is easy to measure. Apnode Group is a developing company. We have put in a lot of resources up to now, and they're now on black numbers, also for the first time since we created this 5-6 years ago. And the reason to keep 100% ownership is, of course, that you go with the profit cash flow from the consultancy business, and you can finance your product development cost. And that's why in total, MP Group has not been very successful in terms of generating free cash flow, because we have poured that into our developing business, which is now ready and is outselling and is catching up, and you will see this growing month for month and quarterly report. At the same time, we have the shared cost, the mother company cost, the cost of being listed, the cost of me, who is not needed any longer, so to speak, in the operation. And we are trimming that down even further to a minimum cost. So we have 2 different strategies for this now. We had a strategy for MP Group that has been communicated 2016. That we said we are going to expand from 30 million SEK to 500 million SEK, mainly through acquisition. And now we spread this out and we say, hey, these guys can do it organically. They have enough material. They know that they can manage it. And they are then doing mainly organic and high dividend strategy. The development we have done here, we can continue doing, because they are now self-generating its own cash flow for keeping up its product line, mainly one telecom product line and one fleet management, as I said. And we are stripping down the operational mother to be just an owner and looking after this and make sure that we starting a successful dividends policy. We started for the first time to pay dividend from MP last year. The board decided for a dividend even this year, but then Corona said, okay, because we still think we are able to deliver, we did not push forward for a dividend. But that might change when and everyone else are looking on this issue. But what I would try to say is that since 1st of January 2020, the last 6 years of work is now coming out to daylight in terms of these two units, and you can follow it best by looking here on the segment reporting. So a quick word around Exavitec, which is an empty company, so to speak. It's listed on NGM list, and the main asset is 49% ownership in Frontworker. It's the only asset. And as you understand, of course, is that over time, Frontworker will consolidate in Exavitec at some point, keeping the consolidation more than 51% ownership up here, and therefore it will be part of it. And there is many reasons for this. Liquidity-wise, it's of course better because as we can pay out dividend more rapidly in this company than we can do up here, and higher dividend. And we don't need the cash flow over here as we have done historically. So now we have two subgroups, and they are self-propelled forward. And we get dividend up here, and we have a very slim operation up here, so we pay out most of that dividend to our customers. So we can restart dividend hopefully next year, latest for MP Group.
Thank you, Lars and Torbjörn, for that presentation. I think we're running a bit behind the schedule, so I will be short. But Torbjörn, you talk a lot about being a more strategic partner to your customers, and your full system maintenance offer stands at 35% of the business revenues today. Where was it, say, like 3 years ago, and where do you think it will be 3 years from now?
I don't have the exact numbers. 3 years ago, Frontworker Group didn't exist in its current configuration, because if you know the history, this company was kind of brought up within MP Group, and we formed Frontworker Group as only 1 year ago. So I don't have the exact numbers if we're looking back, but it was say 35%. Maybe it was 20%. That's my best guess. And if we look forward, I think it will. I mean, half would be, or let's say 45, 35. I think that is because there are a lot of clients that we will never be able to convince that this is a good idea of delivering this kind of services. They are totally geared for on-site consultants because they want to supervise their consultants and they want to learn from consultants and so on. So we will always have that part of the business, but the combination is really strong to have.
And you also mentioned that you have higher margins in that part of the business, and that you currently are at around 10% EBIT margin. Do you see a potential to go even higher than that, or is that sort of a ceiling or aim?
Yes, I do. I think if we really manage, we can do that. But it's difficult to do services in this kind of way. I mean, that's why not everyone is really focusing on it. But I know from experience, because I've done this before in other settings, that you can have really good margins this way.
Okay, perfect. Then I would like to thank you again, Lars and Torbjörn, for coming here and present for us today.
Thank you for listening.
Thank you.
Hi and welcome everyone to today's presentation of NLabs. My name is Stefan Knutsson and I'm an equity analyst here at ABG Sundal Collier. And with me today I have CEO of NLabs, Gjorts Ustinov. Welcome.
Thank you, Stefan. Hi, everyone. Greetings from Riga, Latvia. My apologies for not being able to be in Stockholm now, but we'll try to do it in the best possible manner. My name is Gjorts. I'm the CEO of NLabs, been together with the company for 3 years, and I'm in the position of CEO now for half a year. Time flies quite fast. This is NLabs. Yes, thank you for shifting the slides. We can go to the next one. Perfect. NLabs is the largest online gambling operator in the Baltics, best known with the flagship brand Optibet. If you wonder what a gambling operator is, we are a customer-facing B2C operator, and effectively customers come to our websites and gamble online. So that's an online gambling operator. Our licensed Baltic online market share is more than 25%. We are the largest online licensed operator in Latvia, second biggest in Estonia, and fourth biggest in Lithuania. We focus on regulated or soon to be regulated markets. More than 90% of our revenues are coming from local licenses where we pay local gaming taxes and comply with local regulations. So we call these revenues sustainable. We are executing a multi-brand sales strategy, focusing on various customer segments, and we own our own technology, the gaming platform and sportsbook product, which enables us to achieve high margins in our operations. On to the next slide. I will briefly comment about our brands. Currently, we have 3 of them. Optibet is our flagship brand, and Optibet is positioned as a one-stop shop where all kinds of players can find any type of product they want. So the idea with this brand is to offer the richest possible content available to an online gambler. So we have casino, live casino, sportsbook, live bets, daily fantasy, sports, esports, virtual sports, bingo, poker verticals, you name it. Yeah, you can find everything on Optibet. Our second brand, Limes, is basically a recent addition to our portfolio, which we made as different as possible from Optibet. Limes offers a gender-neutral mobile-first casino with also a bingo vertical. It's made hyper-local, specific for Latvian market. Even the brand name in itself, Limes, stands for luck or happiness in Latvian, also for Limes fruit. And, you know, this is a very local brand approach. And in the future, it will also be equally relevant in Lithuania. And Best Poker is our global poker-focused brand. The brand name itself kind of communicates the purpose of it. And the evolution of this brand with time will happen through adding casino and live casino verticals. On to our licenses. Yeah, as I said, for us, we focus on regulated or soon to be regulated markets. On the left-hand side, we can see the 3 Baltic licenses, Estonia, Latvia, Lithuania. In total, these 3 markets, the gambling market is worth 1 billion euros. This is online plus retail. Now, online penetration in these markets is still quite low. It stands at around 20%. And also within online, still 1/3 of the market is unlicensed. Yeah? So what is inherent to these markets has been growth of more than 40% for the last 3 years. And why it has been like that? Effectively because customers are switching from retail to online and from unlicensed to licensed, because the regulator is taking quite active actions for protection of the licensed market. So these have been markets with really high growth and at the same time with quite high barriers for entry. All three markets have been regulated for quite some time. Latvia was the first one to regulate in 2008. Estonia followed in 2011 and Lithuania most recently in 2017. So regulation is quite established. And when I talk about barriers, for example, in Latvia, you need 1.4 million equity just to register, to be able to apply for the license. The license itself costs 200,000 euro. You need to certify the platform, which is not new. But in Latvia, the biggest limitation is that it's not allowed to advertise gambling whatsoever in the country. In Lithuania, to get an online license, one would need at least 20 betting shops or one fully functional casino to get to the kind of online environment. And Estonia is a bit more liberal. It requires 1 million in equity and also platform certification. So this is our core arena. We have a Maltese license on which we run our kind of locally unregulated operations. We have a license in Belarus. Currently, that is a retail license which allows us to start also online operations, and that is in the process. And we have a Swedish license. Our operations currently in Sweden are almost non-existent. We haven't been focusing on Sweden that much, but that also will change in the future. On to the next slide, please. Our markets, so this is a logical continuation of the previous slide of our licenses. Our core kind of region is the Baltics. You can see the market positions once again: number 1 Latvia, number 2 Estonia, number 4 Lithuania. We are active in Finland. We are active in Belarus. In Belarus currently only small retail operations, but in the future we'll also go online. And our markets of interest, we highlight that is Sweden and that is Ukraine. So we are kind of successfully growing in our basically time sphere plus minus 1 hour, going to the north and to the east. And for us, why basically we are now able to talk about this geographical expansion is because we have reached the level of operations and the level of our technology that in the Baltics we now feel very comfortable. And it's time now for the company to take next step and kind of go beyond the Baltic markets. And these are the neighboring markets where we feel we can definitely succeed. Next page, please. On to the operational updates. So now I will comment a bit more on what happened during the second quarter. So we start with stabilized regulatory landscape. So for us, second quarter of 2020 was quite turbulent, especially in our main market, Latvia, where during the COVID crisis in late March, the government decided to suspend all gambling licenses in the country. Definitely a rushed decision. Once emotions settled down, we were able to talk through the situation and explain that licensed operator is way better than unregulated operations. We provide protection for the customer, we contribute taxes to the state budget, and online licenses were renewed on June 10. And what is interesting that right on the next week after the licenses got reactivated, we broke several daily activity records. So our expectations were certainly exceeded by how loyal our customers are. And with this 2 months pause, they returned basically immediately to OptiBet. And interestingly, in a few of our retail shops, customers even came with flowers to greet the cashiers. So we were very positively surprised, and business has recovered very fast. In Lithuania, retail operations were suspended from March 18 till May 18, and there was an agreement to stop marketing communication. And in Estonia, there was also an unwritten agreement to stop marketing advertisement, and we have no retail operations, so we're not affected by that. The main probably takeaway is that as of Q3, our operations are not affected by any COVID-related limitations. On to the next one, please. Very briefly talking about the numbers. So very important that second quarter is not representable of our kind of normal quarter, because we had 2 months pause in Latvia, in our largest market. Our revenues amounted to 6.1 million euro, 35% decrease year over year, which is definitely not a normal situation. At the same time, total active customers have been on par with the previous quarter, highlighting that this recovery at the end of June was very active. And we also demonstrated that our business model is very flexible. By losing a big portion of revenues, we still remained profitable on EBITDA and net profit level, and also delivered profitable, positive, I should say, operating cash flow. Next, please. Key activities, key events during the quarter. Once again, Latvian suspension of license, which is now kind of reactivated and everything's completely fine. We acquired 29.9% stake in company Global Gaming. Global Gaming stands behind very successful brand Ninja Casino. And as we speak now, we have acquired already 54%, so have become the majority owners. We launched new brand Limes, which I briefly commented, and we made a bunch of important product updates. Events after the period, very interesting news came for us in the form that Ukraine adopted a new gaming law, which effectively means that doors are open for us to start operations there once the final details are clear. We have launched Optibet brand in Latin America, in Peru and Chile. We have continued making product improvements. And very importantly, in July, we can say that gaming revenues have been up 11% year over year. So Enlabs has returned very successfully to a growth trend. Next, please. Multi-brand strategy in motion. So here I want to elaborate a little bit more about Limes brand. It was launched on the 10th of June. We started out from Latvia. And here I want to share just a few highlights, a few KPIs, how this brand has performed during July. Effectively first full months after the launch. And we compare it with our previous launch of Optibet brand in Lithuania. What can we see? We can see that customer acquisition numbers have been 10 times higher for Limes, 6 times higher deposit amount, 75% of revenues are coming from mobile device. We have achieved our objective with building a gender-neutral brand with a 50-50 male-female split in terms of registered customers. And very importantly, this brand took off profitable from the start. And by profitable, I mean not only gross profit level, but the whole bottom line. How did we achieve that? That's the beauty of the business model, that we can onboard new brands without increasing any fixed costs. That's about Limes. Next page, please. New market development. So we have 4 markets where we currently put our focus on. Latin America, in July, we launched in Peru and Chile. Launched very slowly, very carefully, very prudently. We established a small local office with the local support, and basically, we want to continue with these operations in the same prudent way. We make one step at a time. We're searching for effective sales channels, understanding local customs better with every day, and being able to provide locally relevant product to the customers in Latin America. Once we figure out these 2 markets and become profitable there, we will consider expanding further in the region, with Mexico and Brazil being massive, very interesting markets, but we still need to get there. In terms of Sweden, we are now focused on improving the product. The site, which is now Optibet.se, is an absolute MVP. That's not a kind of demonstration of our capabilities. We haven't been focusing on Sweden so far because we're getting high ROI in the Baltics. But the time we feel has come for us to bring also our Swedish product to the competitive level and become kind of much more active on that market. We are adding local knowledge to the team and focusing a lot on compliance. In terms of Belarus, we have decided to push online launch to 2021. This is, to a large extent, I should say, impacted by the current political development in the country. There are still constantly ongoing riots after the presidential elections on August the 8th. It's very hard to travel to Belarus, so we decided to kind of refocus our energy currently on other projects and activate Belarus in 2021. We also feel that that's much more adequate timing. We are happy to see that there are already 3 online licenses granted in Belarus, proving that it is possible to launch there. And we also see that those companies which have launched are heavily focused on sportsbook. So for us, that's an indication that we should go with casino first approach. And Ukraine, as I said, very interesting news. Market became regulated. There are still final details in the law which are unclear. For example, how high the gambling taxes and duties will be. And it's currently unclear when exactly the first licenses will be granted. But once we'll be legally able to get a license, we'll certainly pursue that opportunity, and we're currently establishing a legal entity in Ukraine. Why Ukraine is relevant for us? Firstly, we speak common language in the form of Russian language. We have a database of Ukrainian players playing with us on optibet.com. We understand the mentality, and it's a very big country, 42 million people. Online gambling market estimated at 300 million, bigger than the whole Baltics, much bigger than the whole Baltics. So a very interesting opportunity for us. Next, please. Product updates. It feels we have been very busy on all fronts during the second quarter. When I talk about product, I mean 3 components. I mean the platform on which all the content is sitting, I mean the content itself, and also the service which we provide to our customers. On the platform side, we have completed migration of Best Poker brand onto the new technology. And for those who are new to the company, we have the old platform and the new platform, which we started developing in late 2016, and now have brought that platform to the stage when we are migrating one brand at a time to new platform and becoming single platform, a very lean, multi-brand, multi-market company. And the big migration of Latvian business is now planned for September, and by end of the year we'll complete all migrations and will really be operational on one platform. What does it mean for us? That will eliminate a lot of duplicating processes within the company and become much, much faster in terms of rolling out new brands and new markets as well. On the content side, we joined Playtex Poker Network. With that added also Playtex Casino and Live Casino games. We launched daily fantasy sports product from Scout Gaming in Estonia, launched esports from Avery Matrix, launched virtual sports from Leap, and exclusive PG soft content in Casino vertical. So quite active there. And in terms of service, this is where we really believe we are making the difference compared to our peers. We are now working on automated withdrawals, which means that customer basically receives withdrawal immediately and no person in between needs to participate in that. We have started outbound calling project to improve conversion from registrations to deposits. And very obviously, we have catered for local payment solutions when entering Latin America. Next, please. Thank you. M&A update. Here we have also been active during the quarter. Now we have acquired, as of now, basically 54% share in Global Gaming, the company behind Ninja Casino brand. For us, this is a very strategic acquisition and move towards becoming a powerhouse in the Baltic Sea region. We have 2 common markets, Finland, where Global Gaming is very strong. We are making first steps, and Estonia, where we are very strong and Global Gaming is making not first steps, but starting its path in the market, so we can contribute each other a lot there. We definitely like the Ninja Casino brand in itself. It has global potential in our eyes. We like the pay and play technology, and we like a very strong team behind the operations. We believe that this acquisition between the two groups can unlock, and merger between the two groups can unlock extensive amount of synergies. We bring on our own technology, gaming platform, also sportsbook product. We have licenses where we can onboard Ninja Casino brand, and we can eliminate duplicating processes within the group and optimize costs. And we have communicated that we are going to make a public offer for the remaining shares in Global Gaming at 11 SEK per share. Currently working on the bid documentation, and very soon it will follow. And next, please. Reaching new heights. Our financial targets for year 2021. Where do we want to be? In 2021, Enlabs will deliver at least 20 million EBITDA with an earnings per share growth of more than 40% annually through a combination of organic growth and acquisitions. That's basically pretty clear, yeah, and I feel at this stage very confident about us achieving those targets. Next, please. Yeah, since we started talking about the numbers, let's continue with that. Once again, Q2 2020 is not representable of our normal activity. Yeah, I will explain, shortly the trend. In Q4 2019, everything perfectly fine. Q1 2020, in March, we started feeling impact of COVID quite actively, especially on the sportsbook side. Yeah, immediately revenues dropped, which made us kind of deliver slightly lower result than in Q4. And in Q2, we really suffered from 2 months suspension in Latvia, from complete lack of sports activity, also from closed retail operations in Latvia and Lithuania. While in July, everything is completely open up, and no regulatory restrictions, and we see that in July our gaming revenues were 11% up year over year. So we are definitely back on the growth trend. Next, please. Yes, here I want to highlight that basically the gap between our EBITDA and net profit margin is actually quite lean, and what I didn't mention on previous slide, that we are stably achieving more than 30% growth per year with more than 30% EBITDA margin, which in my opinion is quite exclusive. And our 30% EBITDA margin translates into 25% net profit margin, which is also quite impressive. Why the conversion is so effective? Because we don't have any debt, we don't have any interest expense, we have very minimal foreign currency exposure. We operate more than 99% in euro. We have favorable corporate taxation regimes in our core markets, and this kind of jointly allows us really to achieve very strong bottom line returns. And on the right-hand side of the slide, we can see our EPS dynamics. If we exclude Q2, basically we have been showing close to 40% annualized growth rate as we have in our financial targets. Next, please. And to finish off the financial part, we have a very strong balance sheet, no debt, and no interest-bearing liabilities whatsoever. 25% of our total assets are cash, and we have very strong equity ratio of 90%. Next. The closing slide. The sun always shines after the storm. Yes, Q2 has been tough, but the exit from Q2 has been very smooth and pleasant for us. Regulatory landscape has stabilized. We have demonstrated that we have a flexible business model and can quickly adjust to external circumstances. We have rolled out a new, very successful brand, and we are back to growth in July. Thank you.
Thank you, Gjorts, for the presentation. We're running a bit behind schedule here, so I will be quick. But the acquisition of Global Gaming and the Ninja brand, what would you say are the main purpose behind that?
As I said, I mean, there are many purposes basically, yeah, but we see that two groups are doing very similar things and can do them better jointly. That's in a nutshell.
And how would you view the Ninja brand in comparison to your other main brand, Optibet?
Optibet is a one-stop shop, yeah, so Optibet offers all possible gaming verticals, while Ninja Casino has been pioneer of pay-and-play technology, yeah. Casino focused, very fast registrations, everything happening fast. So brands are very different, and that's what we actually like a lot about them.
And if you see the potential to go, like geographic potential of the brands, do you see them as similar or?
I would say that Ninja Casino, in the brand name itself, it kind of wants to go to the East and Asia, yeah, and Optibet is much more generic brand. It can go all over the place.
And I know that you've talked previously about that you need one more acquisition to reach your target. Do you think that this was the acquisition that you needed?
Yes.
Okay, perfect. Thank you for today, Gjorts.
Thank you, Stefan. Thank you, everyone. Bye-bye.
Hi and welcome everyone. My name is Stefan Knutsson. I'm an equity analyst here at ABG Sundal Collier. And today we have a Gaming Innovation Group here and we'll have a presentation from their CEO, Richard Brown. Welcome.
Thank you very much, Stefan. Good afternoon, everyone, and thank you for joining me here today. My name is Richard Brown. I'm the CEO of Gaming Innovation Group. Very briefly about myself, I worked in the online gambling industry for the best part of 12 years now. I joined GiG around 4.5 years ago. I initially built up the media division before moving to the group COO position and then recently took over as CEO in September of last year. GiG is a company providing iGaming solutions based on innovative technology throughout the value chain of iGaming. Some brief information about the company. We're approximately 470 full-time employees through three main offices, Malta, Spain, Denmark. The company is actually dual listed on the Oslo Bourse and the Nasdaq in Stockholm. We have a global presence, licenses in multiple regulated jurisdictions, from core European markets all the way through to Latin America. We have licenses in UK, Malta, Spain, some in Eastern Europe, and we're operational in 2 US states of New Jersey and in Iowa. Our media business has primary assets in over 25 countries. If we move to slide 3, give you an introduction into the divisions within the business. GiG focused its strategy this year to become a global tier 1 B2B provider in online gambling. Our strategy is centered around 2 customer-focused business areas, what we call the media and marketing, and then our casino and sportsbook platforms. These are supplemented by offering clients fully managed services across both of those divisions. If we can now move to slide 4, I will just cover some of the headline figures in the Q2 report. Adjusted revenues for the quarter and the business came in at 13.2 million euros, increased by 23% versus the previous quarter, and EBITDA hit 2.8 million, which was up 93% year over year and 382% up versus Q1. This corresponds to an EBITDA margin of around 22%. On the next slide, I just want to touch on some key takeaways so far this year. The company has returned itself to sequential quarterly growth. In April, we completed the divesting of our B2C vertical to Betsson Group as part of that strategic move to focus entirely on the B2B segment of the industry. As part of that transaction, they've also signed a long-term agreement to keep the brands on the platform, and we've improved the balance sheet as part of that transaction, repaying 300 million SEK bond. There's been a much focus on the operational improvements and efficiency. We've managed to bring the costs down and continue to keep this as a focal point within the company. In the last months, GiG's platform and sportsbook have also signed 5 new long-term agreements, and the pipeline remains healthy, and we expect to deliver further signings as we move through the rest of the 2020. I would like to now move to introduce and to elaborate a little bit more on our strategic position and target customers, in particular for that platform business. So if you move straight into slide 7, at GiG, we have the mission and vision to become industry-leading platform and media provider, delivering world-class solutions to our iGaming partners and customers. We drive sustainable growth and their profitability of our partners through product innovation, scalable tech, and the quality of service. To achieve that strategic intent, GiG has moved through what can be described as a transformative last 9 or 12 months in the company, which we believe will enable and create value, real value within the business and place the company on a much more long-term sustainable growth pattern. Over the last 12 months, GiG has completed an overhaul of strategic business review, focusing it entirely on the B2B through that sale of the B2C segment. Balance sheet improved, as I mentioned, and reduction of the debt. We've returned media and the platform divisions to growth. We've started an important technical infrastructure migration, which will provide annualized savings in the region of around 3.5 million euros once that is completed, comparative to the run rate in Q3 of last year. We've also overhauled our sportsbook strategy and cost centers to bring the segment towards a sustainable position. And operational efficiency continues to be at the forefront. And we've dropped this number of staff from 720 in Q2 of last year to 500. As part of that, we closed non-core unit of the game studio. On slide 8, I will now speak around the growth opportunities that present themselves to GiG The online gambling industry itself is expected to grow in around 9% over the coming years, outpacing that retail and land-based segment, which is anticipated to grow by only around 1%. There are two main drivers behind this growth in online. Firstly is the regulation. An example of that would be the US, where you have a digitally mature market. However, the legality of online gambling has been slow comparatively to Europe, and regulation has started kicking in over the last year or two. This drives that growth in online gambling. Secondly, you have market digital adaptation. This is more true in emerging markets. An example here is in Latin America, where in Colombia or Mexico, and some Eastern European countries such as Romania, which have had gambling regulation for online for several years. However, the growth has actually been driven by the fact that the market, the consumers themselves, are turning away from the retail business onto the online offering. So as you can see on slide 9, you can check there some comparable growths for the various markets or market groups. And you can see, for example, where digital penetration is high and in regulation is mature, such as the Nordics, you are anticipating there maybe a growth of around 4%. If you compare that to the emerging markets, such as Latin America or the US, growth is anticipated at well above into double digits. Our digital offering is actually tailored to capitalize specifically on this transformation of retail customers or customers moving into the online space. And therefore, our product positioning and services are there for that area as well. If we move to the next slide, you will also see the growth in digital also increases the amount of spend per consumer. So by positioning GiG towards that market in markets in early regulatory process or kind of pre-digitally mature geographical territories, we are able to capture early market share and grow with the market. And we combine that with our high quality and tailored product offering. We can then capture even further markets in those particular areas. If we move to slide 11, you will see there, I want to talk a little bit about our customer breakup. In essence, you could break up the customer into 4 blocks or groups, what we consider big brands and new entrants. This happens post-regulation in the majority of cases where we see larger gambling entertainment brands or media brands move to have online offerings as the legal situations become clear or markets actually locally regulate. This trigger of regulation is also paramount in what we call locals, often who have land-based presence in that jurisdiction, who will wait until digital gambling's regulation is very clear, then they will look to move online. These two kind of target customer groups, this is where we see demand for our products and where we will believe we will get the most returns in conjunction with that. And therefore, we focus the product and the services specifically on enhancing that offering. The third and fourth segments are what we would consider digital challengers, companies that have been online for a couple of years and often have their own tech stacks. So perhaps our platform business is not as suitable for there. So we target them in particular with our media business and with our supplementary products. On the next slide, slide 12, you can see that the local regulation is complex. The landscape is broad and quite intricate in many countries. However, GiG is very well positioned to capitalize on that regulation. We are already active in some of the most regulatory environments with the most scrutiny and the most difficult technical regulations to implement, and we're already active there. And we continue as a strategic item and focal point is to continue to have the platform regulated and certified in multiple regulated jurisdictions. If we now move to slide 13, just a summary on the strategic points and positioning. GiG's core strengths are positioned to capture those target markets. We have an end-to-end product, service and solutions, first-class modern technology and product offering, operational knowledge and experience, often valuable to those who are looking to move online from retail offerings, and a strong track record both in partnership and media performance in multiple territories. That we combine with a very strong omni-channel experience that we can tailor specifically to the customer's needs. Now, if we move to the next slide, just to comment on what is obviously a key growth driver for the platform business and for the whole business is the number of clients that we have operating on our platform. The sales pipeline was somewhat delayed during COVID, especially for our target audience of customers, their retail gambling. who dealt with the shops and venues closing over that kind of 2-3 month period through March. But we also believe that this mid to long term is actually going to have an accelerated effect, where you see that this will cause, as with many economic trends, this global pandemic has caused that acceleration, and we believe that that will be beneficial for Gaming Innovation Group going forward. We've signed an additional 5 clients throughout the year, and we expect to sign further signings throughout 2020. These contracts are securing further reoccurring revenues, and as I said, in multiple jurisdictions. If we now look at slide 16, it will be able to provide you a very brief update on the different divisions. Our media division had a strong Q2, where revenues were up around 5%. As a result, I'm very happy with this, given historically we actually had an exposure of around 20% of our revenues within the media division. And during Q2, when the sporting calendar was put on hold, that obviously disrupted normal revenue streams, but we were very quickly able to adapt, and so therefore believe it a very strong performance. First-time depositors, or FTDs, which is the main kind of KPI aside from financials, were also up 22%. On the next slide, slide 17, we see that the revenue from the platform business jumped, and we're up on an adjusted basis 22%, with EBITDA improving up 41% versus the first quarter of 2020. There are currently 34 brands operating on the platform, and now we have 13 brands in the integration or pre-launch phase. If we move now to slide 18, the sports betting division is part of the business that's in its kind of earliest part of the life cycle if you compare to the media and platform businesses, which are slightly more developed. COVID obviously had an impact on the sporting calendar and therefore the revenues. However, a various number of cost-saving initiatives have improved the EBITDA results quarter on quarter materially, and we expect those cost savings initiatives to continue to drive that unit towards a sustainable long-term position. We've also signed 2 new sportsbook customers during the quarter. The latest was actually signed on Friday with BetGenius, who is a leader in data and odds provision globally. And we've, as a joint project, as part of that partnership, have signed head of terms with a major Latin American operator. We believe that that new partnership with BetGenius will not only enhance the actual product offering that GiG has as a sportsbook, but it also provides real opportunity as a partner to combine with to win new contracts going forward. If we move to the next slide, we continue to look just briefly at our cost control. The business has, as I mentioned several times, we are focused very much on our own efficiency. In Q2, tech costs were down 33% versus the previous quarter, and we continue to push that down as we move the technical infrastructure over to the new setup. The headcount is declining, and if we look on a like-for-like basis, OPEX excluding marketing was down around 12% year over year, despite incurring restructuring costs. If we now move to summary of the presentation on slide 20, GiG has delivered quarter-on-quarter growth, both revenue and EBITDA. Media business is delivering growth in all KPIs for a second consecutive quarter, a testament to the agility and the robustness of that business. We have signed 5 new platform agreements in 2020, in addition to 2 contract extensions as well. We have secured this geographical, regulated and diversified future revenue streams. And as I mentioned, the sales pipeline is strong, and we anticipate further signings before the end of the year. We continue with the initiatives implemented to significantly reduce that burn rate in sports, and in conjunction with our partner with BetGenius, we anticipate this to place that part of the business in a sustainable long-term position. Our revenue guidance for continued operations, B2B only, for 2020 is now increased to 52-57 million, and on an adjusted basis, and with an EBITDA range of around 12-15 million. GiG is a diverse B2B company, well positioned for future growth and in a transformative online gambling industry. I want to thank you very much for your time today, and I believe we should have some time for Q&A now.
Yes, we will. Thank you, Richard. And first up, you mentioned the deal with BetGenius. Could you elaborate a bit on your expectations for this deal and how much potential it has?
Yeah, it's a very interesting deal. It's multifaceted as well. So one of the main elements is that we will replace our own trading team that we had internally with Bet Geniuses. They're one of the highest regarded outsourcing what is called an MTS, managed trading service and risk. So that we will also combine with an integration of their own risk and trading platform, which enhances the sportsbook offering as a total package significantly. We've signed ahead of terms with a large operator on this basis, and we believe that there's significant potential to collaborate further on other contracts as well.
Okay, perfect. And then in general, when looking at the B2B platform, could you give us some flavor on the general demand and the pipeline if you compare it to, say, 1 year ago?
I think overall, as I said, the COVID acceleration, and particularly our target customer of retail-based businesses moving online, there is an increasing demand, therefore. I think also some regulations have accelerated over the last 12 months. We have Germany, Holland, and some others, Eastern Europe and in Latin America, that have somewhat accelerated their own regulatory status. And that in itself also creates demand. So I believe we're well positioned in the sales pipeline. We have a healthy development there commercially. And as kind of touched upon, we expect to sign more contracts this year as well.
And your affiliate division continued to improve sequentially in Q2. Looking into Q3 and Q4, sequentially the comps are quite tough given the fact that casino activity has been boosted. Could you give us some color on the general demand there?
I think within demand for media provision or an affiliation, it tends to be pretty high, especially in Q4, as we enter the kind of peak of the seasonality of the year. Our assets have developed well. We're confident that we'll continue to deliver results in those in the media segment. As I said, I think Q2 showed the resilience and the robustness of our ability to switch the different offerings that we have away from kind of a relatively almost quarter of the revenues exposed to sporting events, to be able to switch that and still grow sequentially. I think I'm very pleased with. Also, our paid media division has performed significantly well. I think we've had 2 or 3 quarters of continued growth in the paid division. While the margins are slightly lower in paid versus publishing media, it's generally a little bit more sustainable. And also when regulation comes, that often opens up new kind of channels in the paid marketing, and that's not available to us today. And we've managed to grow that well in quite difficult circumstances. So I'm very pleased with that, and I believe there's a real future there to continually drive that business as well.
Perfect. And then one region that often gets overlooked is Latin America. Brazil is set to regulate, for example. Could you perhaps elaborate a bit on the growth prospects, and where do you see your positioned if that markets open up?
Yeah, so Latin America is a very interesting market. It's large. It has a large gambling culture associated to many of the regions or many of the countries. However, it's very much in its early kind of development in terms of digital adaptation. I talked earlier in the presentation about that being a key growth driver for online, and we start to see that growth. But it's still also in early phases, and we would anticipate a couple of years to reach market maturity. We've already signed now 2 customers in Latin America, one in Argentina, a land-based Grupo Slots. They have around 50 properties throughout Argentina, actually, and we will enter the regulated Buenos Aires city with their digital to provide their digital offering. I believe that Argentina is obviously a large market. Historically, kind of offshore operators have struggled due to payment integrations. The fact that we're going in with a local partner there who has retail experience will help, we believe, accelerate significantly. So we're very happy with that contract. And then now recently, the other one we signed now in conjunction with the Bet Genius contract provides a real, in one of the larger markets, is obviously we mentioned that it's a major player in LATAM. And we anticipate that market size to grow significantly over the coming years as well.
Okay, perfect. And then lastly, Richard, looking into 2021, there will be a new regulation in Germany, and the Dutch market is set for regulation in Q3. What do you think will be the net effect of both these events for you?
We have, both play key roles in the markets. I think one of the important things to consider when looking at Germany and Holland and how it perhaps differentiates from recent regulations such as Sweden. In Sweden, there was a very open market pre-regulation where advertising was fully allowed on television, print, digital, everything was kind of as you please. So there was perhaps a bit of a constriction of the environment. You also have kind of the ex-monopolies there as well, then having a digital offering. So there was almost a constriction, I think, in Germany and in Holland. TV advertising, for instance, is banned completely. So I think that and both markets are also slightly less digitally mature than Scandinavia, especially when it comes to online gambling, at least. And therefore, I do expect there to be a growth in the actual total market, addressable market size. I hope the regulators always consider that they should always put the customer's interest best and not be too prohibitive, that causes them to then find offshore non-regulated rooms. I think for us at GiG in particular as well, this is exactly what we talked about earlier in the presentation, that this regulation will drive demand for our products as some new companies, retail, for instance, or local brands look to actually move online who haven't in what is more of an ambiguous legal situation. When the regulations are clear, I believe that we will see, or now that they are clear, we will see a demand for products such as ours to go online as well.
Perfect. Thank you, Richard, for presenting with us here today.
My pleasure. Thank you very much for your time. Goodbye.
Good afternoon and welcome everyone to introduce Investor Days. My name is Jesper Birch Jensen. I work as an equity research analyst here at ABG. And with us today we have the CEO of Safeture, Magnus Hultman.
Nice to meet you.
And CFO, Linda Kaneva.
Hey, hi.
So with that said, please go ahead, Magnus.
Thank you. My name is Magnus Hultman. I'm the CEO since 1 year for the company Safeture, previously known as GVS Production. So I'm here to tell a bit about where we are today and those strategy changes that we have done in the company going forward. But I will bring you back to what this company is all about. It started with Professor of Medicine Lars Lidgren and his first-hand experience during the SARS epidemic, actually. Now we're thinking about the COVID-19 situation. But during the SARS epidemic, he was the first foreigner in China on place sent there by the HWO to evaluate the situation. And he said, this situation cannot be solved without having the proper information being sent out to people, without the ability to communicate with lots of people, and thirdly, be able to locate where those people are. And that is very much true today. And based on this, he founded Safeture. And it's all about unifying employee communication, information, and location in one platform. So we're actually 10 years old. But before I will continue with the presentation of the company, I will show you a video that explains what we do.
Many companies still spend more on the safety of their buildings and equipment than on their most valuable assets, their employees. The Safeture platform is the best choice for companies that want to protect their employees from risks and act professionally when something happens. When an incident is detected, you are informed which of your employees are present in the area, and most importantly, if they are safe. The employee is immediately provided with the relevant information via the phone about what has happened and advised on how to act. Our team of analysts assesses all important events like terror attacks or influenza outbreaks around the clock and compiles reliable information about what has happened. The Safeture platform is the best choice for companies that want to protect their employees from risks and act professionally when something happens. And it can provide you with a wide selection of functions. Our travel module, for example, keeps your employees updated on their travel schedules and gives real-time updates of flight status, delays, all the way down to gate information. And on your end, you can locate, communicate to, and inform your employees wherever they are. Always updated, helping you to quickly take control of the situation and make informed decisions. In fact, we provide a big number of useful modules that can be easily integrated. Through world-leading technology and innovative solutions, we help companies to protect what matters most: their employees.
So, with that said, that is what this company is about. Today we work with more than 3,000 companies all over the world. We have users in more than 200 countries, and we work with every single segment or vertical in the market, from manufacturing companies to FMCG and services companies, and even governments. And why has so many companies chosen Safeture? Well, this is a trend that started a long time ago, and we call it the always out of office. And it's a great mobility trend that's been going on for a long time. And the mobility trend is about the globalization. Everything is globalized. The value chains are globalized. You have the factories in other countries or offices or stores or warehouses. Increased mobility is also that those people that work in the company not only are located at one place, but they are at all the different facilities of any given company. Digitalization has made it possible to work with digital tools, helping to protect the most valuable assets, the employees. And of course, we are now at a knowledge-based economy. The knowledge-based economy has increased rapidly from 20% of a balance sheet just 20, 30 years ago to more than 70% today. That employees are more valuable than ever and will continue to be so. So that is the trend, and this has been extremely accelerated just the past couple of months thanks to the corona crisis that we have, the corona pandemic. Anyway, when me and Linda, when we were here the last time, we said that we are just newly recruited to the company, me as the CEO and Linda as the CFO. And we said that we have a couple of things that we wanted to accomplish the coming year. Now we're here, 9 months later, telling you a bit about what we have done. The first one is a bit about our positioning strategy. So many of these companies that we work with, blue chip companies all over the world, where our platform has been of very, very high individual relevance for frequent business travelers. And what we see is that, yes, it's really relevant to those, but also to all the employees, making sure that you could communicate with the employees, you can inform about the right information, and then you can locate them in an emergency or in a crisis. So being able to have that modularized based on the needs of a company, we are doing a strategy shift and a positioning shift over to corporate relevance and for all employees of the companies. And this has been going on now for 9 months, and a couple of months ago we had a very nice receipt that this strategy shift is working due to the fact that we signed on one of the biggest company in Germany and one of the biggest companies in the world, Siemens. And right now we're rolling it out to more than 50,000 employees in their organization. So what can we do with our technology? Well, it's pretty cool because it's a lot about data. When you can take the data of all the employees, where they have been, where they are, and also where they intend to go. Mix that with the location of facilities that they belong to, and also with the global alerting system that we have. And we saw that. So in the beginning of the corona pandemic, we found an opportunity to create something that was absolutely world unique and got us a lot of attention. And it's called the SafeTracker Corona Exposure Tracker. By combining this together with some sharp minds and creative thinking, we created the Corona Exposure Tracker. And what that did was we could make sure that the company's employees, wherever they have been, they were, or they were heading, we could match that together with outbreaks of the coronavirus and thereby giving extremely valuable information to companies all over the world. So they could decide who they should put in quarantine, what types of trips that should be cancelled, etc. We know that this helped prevent the outbreak of COVID-19 at many workplaces. But 4 weeks after we launched this product, we also saw that we had a fully fledged pandemic. So the product was, or the report was pretty much dead after 4 weeks. But then in April, we had the President of the United States, Donald Trump. He had a press conference that became quite infamous because it was about how you should use certain types of drinks and UV lamps and other things. But also said, we must open up for business. And yeah, we agree on that. We must open up for business.com. So we registered this site, and with the intel and the intelligence information that we have, we were able to create a platform available for everyone to go in and have all the data regarding quarantine rules and about flights and hotels and everything in one interface. And that will be enabling people to schedule their business trips or their family vacation. All of this has generated quite a lot of interest. So we see just for the past couple of months, we've had more than 2,500 press clippings all over the world, generated 500 million exposures or potential reach for our products. And this is a couple of them. The second one, scale up of the SaaS business. Well, this is the core. It's one thing that we're becoming more well-known out in the markets. Remember, we are still a pretty new brand out there, and we're doing a shift of our positioning. But if you look what we have conducted for the past months, it's been a massive work, because it was a company that considered itself being an IT company, delivering projects to customers. But nowadays, we are providing a software as a service platform that has the ability to scale indefinitely. We work a lot with our standardized offering and packaging in the company. So tighter package modules, no consultancy sold. And also decreasing the lead times, for example, through simplified sales agreements and others. The sales organization has tripled in the past 9 months. From a small team doing enterprise sales to a fully integrated sales and marketing team. And today we have 2 full software as a service sales teams in Northern and Central Western Europe. And in total there are 14, right, in the sales team. And we're continuing by adding more of the salespeople to the team, but also adding new markets. Today we work with partners all over the world, but we have on our roadmap to also establish new offices, for example, in the United States and Southeast Asia. Our partners, we have a very big partner network all over the world with assistance companies, security companies, insurance companies, and many others. And we have started a partner program for them to help educate them and certify them, so make sure that they're selling the right stuff. For marketing, marketing is a lot about our knowledge, the knowledge that we have shared on a case-by-case, provider to customer. But we also know that we have something that is absolutely unique. The data we have in our databases and all the knowledge we have accumulated. We have started working much more with helping whoever wants it to take part of this knowledge, and thereby increasing the possibilities for us to get noticed and being acknowledged as a leader within this field. We have a very clear funneling on what we do. Those projects I showed you before with the Corona Exposure Tracker and Open Up for Business. That is part of the funneling we do. Building awareness for companies all over the world, and then having marketing qualifying them until they are ready to be sold to. So having market qualified leads to the sales teams. The development. Since long we know that we have some of the best developers in the world, and the platform we have built has been acknowledged as the best platform out there. It is quite outstanding. Even though we haven't been that well known, we still know that continue to building on the development to continue to be leading this market. Organization. I will not go into details. That is pretty much what we do every day at the office, right, Linda? And then the data we are working with. There are a couple of things that we have not introduced in the company, such as automated billing, a billing platform, and doing more of self-service and online sales. That is one of the next projects that we are gonna start working here going forward. Customer development. As mentioned, we have 3,300 customers roughly. Many of those customers, very big and well-renowned customers, but many of them have very few users. And we believe that going from few users to each company to actually have them being aware that every employee should have part of the SafeShare platform. That is a big work. That is a big task that is ahead of us. And having a very clearly defined customer development is one way of doing this. And we're working really hard with this, to having more intuitive in the platform for the customers to decide to add more licenses, to add more modules, etc. But we also have a customer development team working with the customer, taking a customer from one level to the next, being there that they feel that they are solving real issues for their employees, because we can be sure that we are in a world that is quite uncertain, and security is now top of mind in many companies. And that means that having technology tools facilitating for them is just a given. It is something that every company must have. It becomes part of a compliance. we actually believe that whenever there is a big event, a major event happening in the world, whether it's a 9/11 or a financial crisis or a Cambridge Analytica scandal or whatever it might be. Now we are in a corona pandemic, and governments all over the world are now looking into whether they need to put legislation in place. We believe that the field we are working in is something that needs to be acknowledged as something that all companies need to have a policy for. And once again stresses how important and interesting our position is in this marketplace. So with that said, I will hand over to my CFO, Linda.
Thank you, Magnus. It's great to be here, present the CFO perspective of SafeJur. When I joined SafeJur a year ago, I started to read a lot about the typical metrics that is very relevant and very common in the SaaS industry. And the number one that pops up everywhere is the recurring revenue. And at first, when I read about the recurring revenue that will be there every quarter when I start day one in a quarter, I saw the possibilities of predicting the revenues and also predicting the cash flow as my first priority. But then after studying this phenomenon, it's also very clear that the biggest benefit of the recurring revenue is not really being able to plan them, but the effect that it has on the return on investment on the sales and marketing organization. Every penny that we invest in sales and marketing today is invested in actually increasing the recurring revenue for the next quarter. And the yellow curve that we see here is the development of the annual recurring revenue for SafeJur from the beginning of 2018 up until second quarter this year. It's quite impressive growth. It's a growth of 47% year on year for the last 4 quarters that we have here, if we compare it to the same quarter previous year. What's also interesting to notice that we have a very high percentage of recurring revenues in the company, which means that most of our efforts in the sales team is actually focused on signing deals that will increase our recurring revenues going forward. The second aspect I noticed when joining the company was that how well invested our platform is. It's well invested from a scalability point of view. They have designed the platform in a way that it's very easy to add on a high number of users. And Siemens, I think, is a very good example of that, where we can add on many thousands of new licensees in a very short period of time. And it's also well invested from the point of view where every new user that we add on to our platform is not generating a high cost. It's very cheap for us to add on users, which means that as our growth journey continues, the gross margin in the company will continue to rise to quite impressive levels going forward. Also, when we look at the order stock, it's a very clear trend, and it's a very clear shift beginning of this year that things are starting to happen in the company. It's about this time, beginning of this year, where we started to move focus from selling to a few, a limited number of travelers in the company, and instead trying to target as many, actually all employees in the client companies. And we can see as an effect that we are getting much higher attention on a corporate levels when reaching out to the client companies. We can also see that the number of RFPs that are coming in is increasing. We get loads and loads more requests for RFPs and RFQs. And we can also see that each individual RFP, RFQ has a greater value. And it's very clear that if you look at the order value trend, the green bar is actual orders signed per quarter. And then the yellow is the weighted pipeline going forward. With that said, for those of you who has read the financial reports, we are continuously operating at a loss. And that is due to the fact that we are investing a lot in sales and marketing resources primarily. And we have the intention to continue doing so going forward to really emphasize the sales journey that we've started.
And also, before, I think that time's up, and we'll finish with one slide. When we were here the last time, we said that our financial targets for 2022, they remain the same, even though we have seen a massive intake of new prospects and clients. But you also see that we are at more uncertain times, longer lead times, for example, and maybe some smaller budgets at some times, and a bit of churn the last quarter. We still believe that we will have a 10 million SEK MRR, monthly recurring revenue, and have a revenue of 100 million in 2022 with a 90% gross margin and a profit at 20%. With that said, I will invite you to ask some questions to us.
Thank you, Magnus and Linda. Just a couple of questions from my part. To start off, you mentioned that the churn was a little bit higher in the second quarter this year than usual. Some of your clients were facing insolvency risks. And I was just wondering, how has this developed during July and August? Have you seen a shift in the trend, or can you explain that a bit further?
Yeah, I actually wanted to emphasize before as well that the churn has been historically very low, between 1 to 3% per quarter, and now in Q2 it was up to 8%. And it was due to the fact that we have written down a couple of customer receivables where we do see an insolvency risk. But looking at this quarter, we don't see any signs of churn at all. So we did make a big retake in Q2, evaluated all the customers to see if there were any customers at risk, and those customers we've written down to be on the cautious side. So no, we don't expect any churn in Q3. Hopefully it was a one-off quarter.
And just in terms of COVID-19, you mentioned that you gained a lot of exposure due to your Corona Tracker and Open for Business website.
Yeah.
Have this media exposure translated to more incoming orders?
Absolutely. I mean, I think the last count was a bit more than 400 new test pilots, different companies that have signed up for the service. If we take the Open Up for Business, we made available for anybody to actually embed the map, the Open Up for Business map on their website or the intranet and so on. And that is companies all over the world, and several really big blue chip companies that today turn to this map to actually get the information in order for them to make business trips. Today that is a free service, but we also see that our marketing skills will generate some good business out of that. And it's already seen several orders coming in.
And now with your expanded sales department, do you have the capacity to handling the incoming?
Yeah, I mean, I do believe there are longer lead times now. Even if you have a test pilot and it runs for 30 days, it still takes time because it's harder to get those meetings and get the right people, the decision makers, and also that companies, they have a bit lesser budgets, to be honest. So we see a longer lead times, but a much higher interest. But that is something that is good for the future by broadening the funnel. Another thing that could be worth mentioning is that several of these customers actually originate from the US, and that is something that's pretty new to us. And we see lots of very cool stuff that I will tell more about here the coming quarters.
Just a final question. Another driver of demand for your product could be legislators actually requiring companies to keep better track of their employees. Have you seen any developments there following COVID-19 in terms of legislation?
There's been a very strong duty of care trend for the past couple of years. So you have seen in some markets like the UK and France where they actually have done legislation regarding the responsibility of employers. I think that right now there is lots of talk going on. It could be among the unions, or it could be on the employer side, or even in the government. So we do believe that there will be these shifts. There are these trends, and someone needs to address them because there will be lots of risk otherwise. And we see it already, especially in these days with COVID-19.
Okay, I think that's all the time we have. Thank you, Magnus and Linda, for coming.
Thank you very much. Appreciate it.
Thank you.
Welcome back to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG, and I now have the pleasure to welcome Peter Åsberg, CEO of Midsona. The floor is yours.
Thank you so much. I'm presenting this from down in south of Sweden in our headquarters down in Malmö, and I hope that all the technicalities will work out. It's special in the sense that I cannot see the audience in front of me, but my assumption is that you are a mix of newcomers to the company and people who have followed the company for some time. So what I will try and do is to strike a balance between talking about the company, giving a brief introduction to the company, but also to talk about our current trading and where we're heading. Midsona is about food, and it's about healthy, natural, and primarily organic food. That's the core of our business. And I think we can skip not only one, but 2 pages and go to the introductory page. Yes, thank you so much. This is a brief description of Midsona. And as I said, we're a company focusing on healthy, organic, and natural foods. Also importantly, we are a growth company, so we are very dedicated to growth. And as you can see on the right hand of this slide, we have had some good growth over the last number of years, very strong growth year after year. And this is a mix of actually, driving our own brands in the portfolio, but also a very active M&A agenda. And we come from somewhere between 800 and 900 million Swedish krona in sales in 2012 to 3.1 billion last year. And this year, if we look at the pro forma rate, we are trending at 3.5 to 3.6 billion Swedish krona. So we have created a lot of growth and thereby also a lot of shareholder value. I would like to go to the next picture, which describes our working model. And this is quite a complicated slide, but it's important in order to understand the company, who we are, where we come from, and also where we're heading. And I would like to take you on a journey, because this, I would say, all started in 2011, 2012. I joined the company already as CEO 2007 on a change mandate at that point in time. And the first year I spent restructuring the company, and at about 2011, 2012, we set out on a new strategic journey. And at that point in time, we had started to focus our business on healthy foods. We made some very important observations at that point in time about the Nordic market for health and well-being products. Number one, we saw that there was an increasing interest among consumers for healthy living, eating healthy, to exercise, and this was one of the factors that we were motivated by. The second factor was that this market at that point in time was very fragmented. So there were few strong brands, few strong companies. The market mainly consisted of small and medium-sized family companies. And our hypothesis, but also our objective, was that there will be consolidation in the market, and we would like to be one of the consolidators in the Nordic market. The third thing that we noticed was that the majority of the sales for these type of products that we sold went via the specialty stores, i.e. health food stores, to some extent pharmacies. And it was our thought that if we should really make this big, we need to get it out to what we call the grocery trade, i.e. the big retailers across the Nordics, the big chains, in order to make it more relevant to more people. And this is pretty much the journey that we then worked on in the Nordics from 2012 up until 2017. 1, to drive our own brands. 2, to identify and buy a lot of family companies and integrate them into our business, and gradually having our products both in the specialty stores but also in the grocery trade, the big retailers. And this was a very successful journey, as you saw on the previous page, which made us grow tremendously. Then, around 2017, we realized that there weren't that many obvious acquisition targets left in the Nordics. There still were a few, and there still are a few, but not as many and not as evident as before. And we also had a good platform ourselves. We have strong brands, strong organizations in all the Nordic countries. So we started to look at mainland Europe, and what we saw then was quite exciting and quite interesting and quite motivating for us. Because the situation that we saw in the Nordics back in 2012, we then saw in the rest of Europe, i.e., markets that are fragmented, consumers that are taking increasing interest in health and well-being, and not the least, the majority of the sales went through the specialty stores. So this is our journey now to actually what we did in the Nordics from 2012 to 2017 in terms of consolidating a market. We are now going after Europe, and we have taken the first steps already. We made one major acquisition in Germany in 2018, a company called Detta, and then we acquired a company in France and Spain called Alimentation Santé towards the end of last year. And both of those acquisitions have so far been very good. We have done the integration. Both companies are running very well, so we're very happy about those first steps out into Europe. Let's go to the next page. As I'm sure you can imagine, the markets that we're in and the segments that we're in, healthy natural foods, are growth markets, and there are some strong underlying trends pretty much across Western Europe, but also in the US. Very favorable trends. People are more interested in these segments, and as you've probably seen, the interest in plant-based foods, i.e. we want to eat less meat and more plant-based foods. It's a very strong trend across Europe, and we have a number of brands that answers up to that trend. Organic has seen a lot of growth, and our projection is that organic product will also grow in the future. That is ekologiska produkter in Swedish. The growth might be a little bit slower in the Nordics, but we also have the highest per cap consumption of organic products in the world. Denmark is the market where people eat most organic foods in the world. It's about 13 to 14% of the total food pie, and Sweden is trailing just behind on 11 to 12%. That is in quite sharp contrast to many of the big countries out in Europe. Germany, one of our core markets, organic food is about 5 to 6% of the total food pie, and in France it's about the same. So we see that there is tremendous growth opportunity in those markets, and those markets are also growing faster. We're also into sports nutrition, and that's also a market that has been showing some very healthy growth rates. Let's move to the next one. Thank you. This is what we call the Midsona way, i.e. our strategy. And it first starts with a vision. And that vision is to become one of the leaders in health and well-being in Europe. That's a position that we already have in the Nordics, but now we also want to take this position out in Europe. And we have 4 main strategies to achieve that. One, and most importantly, is to nurture and grow our own prioritized brands. And I will come back to which brands those are. I already talked about our acquisition agenda, and this is also something that we want to continue. We have done a lot of acquisitions in the past, and we will be acquisition driven also in the future. As we are growing, we have increasing opportunities to streamline our whole value chain in terms of our production, in terms of our sourcing, i.e. buying of raw materials, in terms of our internal processes, thereby driving costs down. And this is also something that we have done successfully. Last but not least, we are very committed to sustainability and health. Sustainability might be a buzzword for many companies nowadays, but for us, it's a big part of our overall idea. We need to be sustainable, our brands need to be sustainable, because this is something that both our customers and consumers demand. And we want to create an a healthy internal and external culture. We go to the next page. And now we are at a summary of our brand portfolio. And as you can see on the left-hand side of the slide, around 60% of our portfolio is organic brands. So that's the majority of the portfolio. About 20%, a little bit less actually, is conventional health food brands. And 20% is self-care products, i.e. dietary supplements, natural remedies, and so on. And on the right-hand side, you see our 10 prioritized brands. And depending on what country you are in, you will probably know some of the brands, and some of them might be unknown to you. But those are all iconic, strong brands in the respective markets. Urtekram is a leading organic brand in Denmark and Finland, Kungmarkatta in Sweden, Davert in Germany. We have a brand called Helios in Norway. We have strong brands in France and Spain. We also have some very strong conventional brands. If you live in Sweden, I'm sure that you know about the Friggs brands, which is our conventional health food brand, rice cakes, corn cakes, health teas, dietary supplements, a wide variety of health products. And those are the brands that we focus on, and those are the brands that we've been growing at very healthy rates in the last few years. We move on. Thank you. When I look at Midsona, I think that we have three distinct competitive advantages, something that makes us a little bit special. The first one is our value chain within organic products. We have a good command of the whole value chain, from the growers, through our production, out to the customers and consumers. And we can produce a wide variety of products in our own factories. And I think that this is very key for organic product, because organic products, it's of course very important that you can guarantee that they're organic, that they are safe, that they are really healthy. And actually in this page or slide, you see our employees out in the field together with the growers. You see our production facilities. And the fact that we have so many production facilities means that we can produce a lot of organic produce ourselves, and also what we call product swap, i.e. to produce in one place, but then to sell it under all our different organic brands across Europe. The second competitive edge, if we go to the next page, is our ability to build market-leading brands. We are market-leading when it comes to organic dry products in all the Nordic countries. We have Kungmarkatta in Sweden, Urtekram in Denmark and Finland, and Helios in Norway. So we have a track record of building brands, making them relevant both to consumers and customers, and that's also a key competitive edge of ours. The third competitive edge is our proven M&A model. I half jokingly, but there is a certain truth to it, tend to say that I do spend a lot of time drinking coffee with owners of family companies. And there actually is a certain truth to this. What we're doing is that we are proactively seeking the companies that we're interested in. We establish a relation with them. We tell them about Midsona. We also very openly talk about their interest to acquire the company. And usually after the first meeting, you only get nice getting to know you, but we are not for sale. But then as time go by, we keep the relation. At some point in time, there usually is a trigger for selling the company. It might be a succession question. It might be the fact that they have taken the company to a certain level, but taking it to the next level is more difficult. And then Midsona is the obvious taker of that company because we have already a relation with the company. And this is a model that we have employed. You can see on the left-hand side of this slide that we have done quite a few acquisitions in last years. We also do participate in some bidding process, I should say, so we do both. And principally speaking, we're making two types of acquisitions. What we call platform acquisitions. That's exactly what it sounds like when we establish a new platform. And that might be in a new geographical market, but it also might be in a new product segment. And when doing that, we need to buy a certain amount of critical mass. We cannot buy a company that is too small. We have to have a company with good customer relations, strong brands, strong processes, typically also their own production. And those companies are normally a little bit more expensive. So we buy those companies at somewhere around 10 to 12 times EBITDA usually. And as said, we have done two major platform acquisitions in the last couple of years. Davert in Germany in 2018 and Alimentation Santé with business in France and Spain in 2019. Then what we do is that we do what we call add-on acquisitions. That is to add on smaller companies to the platform. And the beauty of that is that those companies we can usually buy at lower multiples. So they are cheaper because they're not as advanced. Maybe they only have one product line, not the same customer relations. So we get them a little bit cheaper. What we do then is that we integrate them into our platforms and thereby, one, getting synergies on the cost side. And two, typically what we also get is synergies on the sales side in the sense that the platform usually has better customer relations, a better distribution muscle, so a better ability to actually bring the product and the brands to the customers and consumers. So those acquisitions are typically very value-adding. We did our first add-on acquisition in Germany last year, and we hope to follow up with add-on acquisitions in all our three geographical divisions, the Nordic division, the North division, which is basically the DACH region, and the South division with France and Spain. So this is key for us. And if we move to the next page, we can see a summary of our acquisition agenda. In 2017, we made a major analysis together with a consulting firm to look at the European market. And we actually found 1,000 potential acquisition targets in the market, which is a lot, of course. This list might be theoretical. Some companies might be too small, but it clearly shows what I was discussing earlier, that this market for health and well-being is very fragmented. Only in Germany, we found over 300 companies, and we think that this will look different in the future. So we want to be a consolidator in this market, to buy a lot of medium-sized and small family companies, to integrate them into our platforms, and thereby to build a leading position in Europe. We have taken the first steps, and more steps are to come. Let's go to the next page. I've already talked about that to some extent, but the last major acquisition that we made was Alimentation Santé, and we took over in October 2019, so this is relatively new. We are very happy with the development so far. It has been going really, really well. We've been able to increase sales and profits, but also to expand the product from Alimentation Santé into other markets. And one of the most important things is that Alimentation Santé has production capability and competence in plant-based meat alternatives, which is something that is really, really hot right now and something that we want to develop further. We go to the next page. This is a little bit about our financial targets. We have a very ambitious growth target, at least 15% growth in net sales per year. And we're saying that about 5% should come from organic growth and the rest should come from M&A-driven growth. And this is something that we have achieved almost all years in the past. We're targeting for an EBITDA margin of 12%. We are at 11.3% both in Q1 and Q2. A net debt EBITDA gearing of 3 to 4. That might look quite high, but it's a clear signal that we want to continue to do acquisitions. It should also be said that we are really good at converting our profits to cash. So if we should stop to acquire, we would very soon come down in gearing. So that's why we feel very confident that we can have this relatively high gearing and be part of the consolidation move in the European market. And we want to give a dividend of at least 30% of the tax earnings. We continue. That was an introduction to Midsona. I would also like to take the opportunity to reflect on the second quarter and also give a short outlook for 2020. We had a very good second quarter. Net sales grew by over 20% and EBITDA grew by almost 60%. It was a good quarter. To some extent, we had some positive COVID effects, but we also made a lot of progress in some of our major markets. And we're very happy about that. And of course, also very happy about the good margin progression that we're seeing from 8.4 to 11.3%. We move on. This is a summary of how revenue actually split up, how we go from Q2 last year to Q2 this year. And as you can see, exactly in line with our strategy, there is a big part that comes from our M&A activities, over 100 million Swedish krona. But we're also growing our top 10 brand by a healthy 50 million Swedish krona. We have some small negative effects from a contract that we lost and also foreign exchange because the Swedish krona has strengthened. So when we translate our euro sales into Swedish krona, they simply get lower. We also continue to grow the balance of the portfolio. It was up by 13 million Swedish krona, and that's a mix of smaller brands, but we also do some private label, which grew at very healthy rates, and some food service business, which was very depressed during the quarter due to the fact that schools and restaurants were closed in big parts of Europe. But overall, a very good sales progression also in Q2. We go to the next page. Let's talk a little bit about COVID-19. I would say that overall, the effects have been positive, but it has been a little bit of a roller coaster. There have been lots of ups and downs. At the start of COVID-19, people hoarded products. We had very high sales, especially in March. Then came a phase when many countries were in lockdown, which meant that sales continued to be at quite high levels because people were working from home. They didn't go to restaurants. They didn't go to school. So more food was consumed in home and less out of home, which was positive overall for us. When countries started to open up, we have seen some temporary dips, but we think that those are temporary, and we think that long-term people are as interested or even more interested in organics and healthy foods as they have ever been. We go to the next page. We also made good progress with our base business, which has nothing to do with COVID-19 at all. As I talked about earlier, one of the key strategies that we have is to move our products and brands from the specialty stores to also be present in the grocery trade across Europe. And in the second quarter, we got some breakthroughs where we got listings at some major European customers. It's big change out in Europe, which you probably know the names of. And our brand for the grocery trade in France and Spain grew by a spectacular 84%. It should be admitted that it was from a pretty low base, but still a very impressive number. In Germany, we started the rollout with a major customer also, one of the big retail chains in Germany. And we had what we call the pipeline filling, when we filled the warehouses of that retailer. And that made the David brand in Germany grow by a good 38% in the quarter. We continue. When COVID hit, the M&A market was really slowing down. It was very hard to make any acquisitions because there was uncertainty on our side, but also on the seller side. And also for practical reasons, it was very difficult to visit companies, meeting with management, going through production plants. But in the second quarter towards the end, we did one acquisition, the Gainomax brand mainly in Sweden, but also present in Finland, which is a strong brand in sports nutrition. It should be said that it's still a relatively small acquisition for us, but this is something that we're very happy about still, and we took over on September 1. We continue. And this takes us to my last page, which is about the outlook for 2020. And of course, it's very hard to make predictions. I've said that the COVID crisis has been a little bit of a roller coaster. It really has. And of course, there still is major uncertainty in the markets. We think that what we will see is more of a normalization of demand and supply, which means that still people will continue to demand organic and healthy foods because that's a strong general trend in society. I think that the prospects are good for brands and the product categories that we're in. We are very focused on the rollout in the grocery trade in Germany, France, and Spain. We have made some good progress and got some first listings in the second quarter, and we will continue the rollout in the second half year. Our effort to do cost and efficiency savings will continue, and we're very happy to say now that the M&A market starts to get back to normal. So we have started some discussions again. We don't know when we'll make acquisitions, and then we will have to inform about those later, of course, when they happen. But we do see good opportunities for acquisitions now again. That was my presentation, so I open up now for the Q&A session.
Yes, thank you, Peter, for that. Unfortunately, we are out of time. We have to get on with the next presentation, but we thank you a lot for coming, and thank you for your presentation.
Then I hope that the presentation gave all the answers, and I thank you so much also. Thank you.
Okay, and now the time has come to listen to Midsummer. We have Sven Lindström with us, who's the CEO of the company, and he will present the group and your products. So please go ahead, and we'll end up with a bit of a Q&A session.
Thank you. So my name is Sven Lindström. I'm one of the founders and also the CEO of Midsummer. So at Midsummer, we try to solve the world energy problem with solar cells, or PV, photovoltaics. And we've been around for 15 years, and we have some really exciting products I will show you a little bit more about. The core of our business is to make the process and the equipment that produce the solar cells. And we will now focus even more on producing the solar cells and the panels ourselves. And we believe that in order to make PV spread all over the world, we need to produce the energy where it is consumed. That's the most efficient way. PV started off with small installations in remote locations like lighthouses and satellites in space. And the next generation was very large-scale solar parks. And that was great for the business to ramp up and get the economy of scale. And we believe the third generation is to mount solar panels on every single home. And in order to do that, we need to transform the concept of a solar panel. So if you look at this picture, it's actually full of solar panels on the house and also on the garage. But it's hard to see in these distant pictures. But I'll tell you a little bit more about our products in a minute. So one product which we are extremely proud of is the Midsummer Wave. So we make thin film solar cells on a stainless steel substrate. That means we can make the solar panels without glass and without aluminum frame. So our solar panels are extremely thin, only 2 millimeters thick. And they are really lightweight compared to the traditional solar panels. And the exciting thing about this Midsummer Wave is that we have shaped the solar panel to fit the form of a roof tile. So as you can see in this picture, it fit very nicely onto the most common roof tile on the Swedish market. And with this, you can cover your entirely roof with solar panels, and it will generate around 110 watts per square meter. So basically, any modern house will be a zero energy house or even a positive energy house. So you will basically be able to generate all the electricity that you need for heating and for all your appliances inside the house. Another product we have is the Midsummer Slim. So in this case, we have integrated the solar panel into a standard standing seam roof plate. So when we deliver the roof from our factory and install it on the customer's home, he automatically gets a solar installation. So traditionally, these kind of standing seam roofs, they cost around between 80 and 120 euro per square meter if you have a traditional craftsman installing it. And you can install a roof, a standing seam roof with our solar panels for the same price. And then you basically get all the solar panels for free. And also here we have, we can cover the entire roof. We generate about 110 watts per square meter. And also here, the owner can benefit from basically a zero energy house. And finally, we have a product called Midsummer Bold. So these are panels that have the traditional size of 1 by 1.6 meters, basically the same as silicon solar panels. But in this case, instead of putting the panels onto a tin roof or roof tiles, we put it directly on the roof or on the waterproofing membrane. And then these panels act as the tile or the metal roof itself. And we have made our own system to cover the junction boxes and everything. So, and it has basically the same performance as all our other panels. And one additional benefit with all our products is that they generate very little carbon dioxide emission during manufacturing. As we make thin film solar cells, our solar cells are actually only 2 micrometer thin. So we consume very little energy when producing these kind of panels. And since we don't use any glass or aluminum frame, they only generate around 1/10 of the carbon dioxide emission compared to traditional silicon solar panels. And this, we think, will be an increased important feature of the solar panels. This product, Midsummer Bold, is also extremely well suited for large area or for flat large area roofs. And especially like in these pictures from California, where the roof can accept only a limited amount of load. So normally in Sweden, the houses are built to sustain 2 or 3 meters of snow. But in most sunny countries, the roofs are not built that sturdy. And in those cases, they might have a problem when they try to install silicon panels, and they can only cover a small part of the roof with solar panels. So that problem is solved with our this product, Midsummer Bold, where the weight is only a fraction of that of silicon solar panels. And then, of course, we continue our development of new products all the time. And earlier this summer, we developed a product that we called Midsummer Magnum, which is a 500-watt solar panel. So this is one of the most powerful solar panels in the world. And it's meant for these kind of large flat roofs on top of factories and warehouses, etc. Another product development that is difficult to see, but I hope you can understand from this picture, is that we have replaced the traditional wiring and soldering with the so-called bus bars over the cell with a fine mesh of wires. We call it power mesh technology. So with this, you can it's even more discreet than our traditional our standard solar panels, and you don't see these kind of lines on top of the panels, and it looks even more beautiful. So our goal is really to own this kind of market for lightweight, flexible products. And we can do this because traditional silicon panel manufacturers, they are very much focused on their standard product. And their standard product is 1 by 1.6 meter glass module with aluminum frame. And that fits perfect for solar parks. But for the roofing market, which is a little bit different in every single country, we can adapt our product much more easily. And today they consider this market as a niche market and not large enough for them to enter. But this is our main market, and we believe that this will be the main niche in the future. So we're basically switching the niche, and all the rooftops in the world has a much larger potential than large solar parks in remote areas. Because when you're building solar parks in remote areas, you also have to adapt the grid structure and the infrastructure to transport all that electricity to where people consume it. Whereas we install the solar power on top of where it's used. So this is really a huge advantage for us. And we already have a head start to this market, and I'll show you a little bit more why we are ahead of everyone else. So basically, we've been doing this for 15 years, and we didn't start from scratch. We started from manufacturing equipment for CDs and DVDs, and we evolved that technology into manufacturing of thin film solar cells. So actually, our first product was the Duo machine. So this is really how we cracked the code into mass manufacturing of these lightweight solar panels. And this has been our main product for the last 10 years, and we have sold a number of these systems all over the world. For these systems, we charge around $5 million US, and we have a gross margin of 60 to 70%. So this has been a very good cash generator for us to further develop the technology. And these machines are distributed all over the world, and they are producing solar cells 24/7 at a very high efficiency. But not only the equipment, but we also have developed all the material going into this equipment, and also all the process parameters in terms of temperature, sputter pressure, what kind of process gases to use, and what kind of purity of the materials, etc. So this whole value chain is owned by Midsummer. And what we're doing now is that we're using this as a platform when we try to expand into new markets. And if you look at the financial crisis in 2008, what happened then is that the Chinese government, they tried to support these new technologies of manufacturing in PV and wind power, etc. And that's actually the decision that led us to export these machines to China. And we think what's happening now in the world with the virus, even though it has created some problems for us, both in terms of the trade war between China and US, and also in terms of travel restrictions between Asia and the rest of the world. But we think that the outcome of this will be a place where the governments want to focus much more on local production, and they want to have local production. So that's why we have launched a process of starting our own company in Italy, and we're preparing to start a factory in Italy with 50 megawatts capacity. And we are in discussion with governments in local regions and also in Rome, of course, to help us expand with this production. And the market for building integrated photovoltaics or building integrated solar panels, it's growing much faster than the market in general. And that's why we think it's really the time to do this now. And as we get up to speed and increase our volumes, we will also be able to lower the cost of production for our kind of solar panels. And I think before other companies even realize that this is a highly profitable market, we will have a head start and no one will be able to catch us. So as I mentioned, we have been selling these machines all over the world. Earlier this year, we received orders from both Russia and also China and one company in Europe. But from now on and going forward, we will mainly focus on our production and setting up production of solar panels. And I often get the question if we don't compete with our equipment customers. But we actually don't, because we help them and they help us. Because when they buy a machine from us, they want to test the market. And by being able to support them with the solar panels, they can really test the market before they make this $5 or $10 million investment into their own production equipment. And at the same time, the sales we're doing now, we're getting more requests than we can handle, even on the Swedish market. So we're actually buying panels from our customers and reselling them because we don't have enough production capacity. But hopefully, when we get the factory in Italy running, we will have enough production capacity to expand. But we're doing this in line with our equipment customers. And we also think that when we get more and more products out on the market, our equipment sales will again be much easier, because when people see these products and what they can be used for, we think this will really help our equipment sales as well. So thank you. That's everything I had to say today.
Okay, thank you, Sven. So some questions. I think to start off, let's stay on this subject of selling the machines and the panels themselves. Just to get an understanding today of the group, how much is equipment sales and how much is panel sales?
Okay, so if we go back a little bit more than a year, about 1% of our sales was solar panels, and the rest was equipment, mainly around 90%, and the rest was process and services that comes together with when we sell the equipment. If we look back to the first quarter this year, 8% of our sales was solar panels. So we're steadily increasing this. It's a little bit difficult to just put out a percentage, as if we sell a machine or not, it will affect that quarterly number quite heavily. But overall, we're looking at expanding the solar panel production, and that will be a larger part of our revenue for the future.
And you mentioned, some pretty attractive margins in the equipment sales.
Yes.
What sort of margins are you having in the solar panel market?
So in the solar panel market, we look at margins of around 30%. And that's, of course, lower than the equipment business. But it's also a market that we can control ourselves. We can market these panels locally. We can set up sales offices, etc. Whereas in the equipment sales, we do whatever we can, of course, to sell the equipment, but it's such a heavy investment for any company. So to a certain point, we can no longer affect the process in terms of what kind of government subsidies they get and what kind of financing they can arrange themselves. So I think even though it's lower margins, we can expand this market to be much grower.
Yeah. And so you're ramping up production in Italy. Why specifically do you want to be in Italy? And maybe also a bit just on the 50 megawatts of capacity.
Yes.
That's the potential there.
Yes.
How does that compare to your capacity today, and what would that mean in terms of being able to increase sales going forward?
Yes. So Italy is one of the most interesting markets in Europe, together with basically most of the southern European countries, because they have a lot of sunshine, they have high electricity prices, and they really today depend quite a lot on fossil fuels. And we try to, the government, of course, try to shift away from the fossil fuels. So they invest a lot in installing PV. So it's a great market to be in. It's also a possibility where we see the potential of getting help from the local government to establish our business there. And 50 megawatts, that's basically 10 times more capacity than we have today in Sweden, where our machines are running.
And would you also target Italy for sales then as well? So would that factory be targeting selling to Italy or all over Europe?
Well, that factory will foremost target the Italian market, because we believe in manufacturing locally and selling locally. Italians are quite proud of the products made in Italy. So and that market is so much greater than the Swedish market. So I think even a 50 megawatt factory will not be enough.
Yeah. And just in terms of competition, so you're mentioning some big differences between the traditional solar cells, but there are other companies as well who do sort of integrated solar panels and so forth. In terms of the integrated solar panel market, what's the main difference here versus competition, and who is the biggest competition, would you say?
Well, I wouldn't say we really have that much competition when it comes to integrated PV, because most other companies are either using traditional silicon panels and try to integrate them, or they use kind of heavy glass panels which are flat and still have this weight disadvantage compared to our solar panels. And when it comes to thin film solar cells, we are really on top when it comes to efficiency and also manufacturability, because no one else has really been able to crack the code of how to mass manufacture these kind of solar cells that we have. So I think that's really our biggest advantage.
And in terms of protecting this technology, do you have some sort of protection for someone copying this technology, or how do you work with protecting your
I actually
IP?
have a slide on that. I don't know if that's shown, but I can show a little bit. So basically, we own the design of the machine. We own our own process. We own our software in the machine. We know exactly what materials to buy. That's proprietary to Midsummer, and all of this taken together, it's of course a very strong IP. We do have patents approved in Sweden, US, and China, but most of all, we have tried to keep these all this knowledge in-house. And just so you understand the complexity of this production process, one Duo machine consists of over 25,000 parts, and that's designed by us. And then, of course, bolts and washers, etc. So it's quite a complex product, and it's not that easy to copy, as we have dedicated suppliers and a network of suppliers all over the world, from Japan, China, Taiwan, Switzerland, Sweden, US, Germany. So we say that this is like a padlock with many different keys. So
yeah, okay, I understand. I think that's a good time to round it off. That was all the questions I had. So thank you very much, Sven, for coming today and presenting Midsummer.
Thank you. Thank you.
All right, so welcome back. It's time has come to listen to Ferro Amp. We have the CEO, Christer Werner, with us, who will present the group and its products and where it's headed. So without further ado, please go ahead with your presentation.
Okay, thank you very much. It's a pleasure to be here today, meeting all of you, even though it's a little bit strange. I cannot meet you in live, which I actually am looking forward to sometimes in the future, but we have this strange situation. So I'm talking into a camera and feeling a little bit sort of, you know, distance to you. We're not seeing you. I have the pleasure to be here today and presenting Ferro Amp Elektronik, the Swedish company. My name is Christer Werner. I have been the CEO of the company since mid-February this year, when I had the opportunity to join the company. We will make a fast journey through the history of Ferro Amp. We will talk about the market situation, where we are at the moment, looking into the trends that influences us and the possibility for us to go forward, and looking into our products, our ecosystem, and a little bit what we're doing for the moment, the near future as well as a sort of mid-long-term focus. So if anybody had thought about the name Ferro Amp, what does that mean? Does that stand for anything? Ferro Amp, for those of you who knows a little bit of Swedish, knows that our founder today, the CTO of the company, still with us, a great innovator, Björn Järnström. Järn is ferro, and the unit for ström, järnström in Swedish, is amp. Ferro Amp, järnström. So we have the founder with us all the time in the company name. As said, Björn is a fantastic innovator, and he, back in 2010, he created or founded this company. So we are 10 years, we celebrated our 10 years anniversary this spring. The big party will follow in the fall as soon as possible, I would say. Back in 2010, Björn was thinking a lot about how to use the capacity in the three phases in the main fuse you have to a home and to a real estate. And that led to an innovation that the first patent of phase balancing was granted 2013. And it followed with some installations, handling and monitoring and controlling energy and phase balancing in 2015. We say that our first real installation was made 2015. Before that, it was prototype installation. And just to stay a little bit with Björn and the innovation, we have over time been recognized for having an extremely high level of technical competence and innovation skills in our company. So we have a conference room back at our facility in Spånga in Stockholm with a lot of awards and prizes that we have been recognized with over the time. You see some of them here below, and I just wanted to take the opportunity to highlight 3 of them. It's what we call in the global solar industry, the Nobel Prize of solar industry, and we have been awarded that 2016, 18, and now this spring 2020 again. So winning that award or being awarded that 3 times is, I would say, a really achievement, and also put us on the map about what the technology level that we have. Going forward in the history, we are taking us from the R&D phase into more of a commercial phase. We have today approximately 1,600 installations. We installed the first power share installation. And what do I mean by the power share installation? It's several buildings that interacts and balancing the energy and the capacity between them. I will come back to that later on. 2018, we got listed on Nasdaq First North. 2019, we went into what we call a growth phase. 2020 now, we are looking into to leaving the prototype phase into a more commercialized, more industrialized phase, growing from Sweden, where we have most of those 1,600 installations, into primarily the Nordics and Europe. We have been fast growing. You could see that over the rolling 12, we have increased from 10 to 65 million. So we are a fast growing company, and we aim at rolling run rate 400 million. We said that when we did the IPO a year ago, and we keep holding on to that for the future. I see that is definitely in the reach, and the market is there. So how come I'm so confident in that? You all know that we are in a rapidly changing and growing market. I worked in the telecom market back in the 90s and early 20s and saw the shifting from fixed telephony up to via mobile telephony to data and to the smartphones that we have today. I see the big changes coming in energy industry, and you all aware of that. We have a rapid growth in building out of the solar, the renewable energy that puts an extremely pressure on the old structure of the grid that we have today, that all of you are aware of, that we historically produced well-planned in a few power plants, predictable, well-planned energy distributed over a grid into a regional and local grid. Today we are producing renewable energy out in the grid on a local places. It's hard to plan, hard to predict, and it's produced locally. We also have an electrification of the society, especially driven, I would say, capacity-wise, of the electrical vehicle. And for those of you who read the latest statistics, you know that electrical vehicle in Sweden, we are now in Sweden, grow with 60% last year. But still, it's only 3% of the 5 million vehicles in Swedish roads that is electrified. So, and we are in a capacity problematic situation at the moment. So imagine when we have 5, 8, 10% of the vehicle fleet electrified. This creates a pressure also, of course, on the regulatory side and in the European Union, who has said that we are going to take the lead in this changing market over the time. There is a pressure on changing the regulatory situation, which opens up for a great possibility, especially when it comes to, for example, power share and local handled grids, where Ferroamp has its really main situation. I will also highlight the technology development in the society, not only when it comes to renewable energy, when it comes to the energy storage, the development there, but not only that, also in the data handling, the monitoring and the computer capacity to handle that, to machine learning, AI, etc., to balancing this. I said that we are in the changing market right at the moment. For the first time this summer, we could read that in Europe there were more energy produced with renewable sources than from the old sources. So this is not a hypothetical change or something. We are standing in the middle now, or at least in the beginning of the change of the market. This will influence us over time. But it will change us, and it will put extreme requirement on the situation. We need to handle those, especially the capacity challenges. Today already we read in the newspapers there is limitations. There is limitations to build out factories. There is limitations to build out residential areas. There is limitation of electrifying buses and local transportations in the cities. So it's not a market that will happen. It's here and now, and it's happening at the moment. Ferroamp has the solution to solve these problems and to be part of that, which means that we are extremely well positioned when it comes to the shifting market situation. Ferroamp ecosystem is well positioned. So what do we really do then? we have the brain, our energy hub, up at the left corner. This hub collects data. It's connected to the grid. It's connected to all of the other components on a DC, a direct current link. This is the really key thing where we are unique at Ferroamp. We control, we monitor, and we have collects data of all the sources that's on the DC link. And we also handles the usage of the three phases, the phase balancing thing here. The brain, the smart thing is the energy hub, and we connect. Today you see here we have the solar energy production via our solar string optimizer. This is the product actually we won the Intersolar Award for this spring. It's a new version 2 of that one. We have energy storage here represented of one type. We have a couple of different type of energy storage that is connected into and that we could speak on our system. We have EV charger, and everything is held together and controlled by this, and it's presented on a very pedagogical platform, so you visualize the situation all the time and you gather all the data. Coming into the data, this is really a core thing. This is actually a business that we today don't really have as an income or revenue stream for the moment, but it's something we plan for the future. But we still have this. The brain continuously collects an enormous amount of data in real time, where you could monitor. It's a cloud-based software. You could monitor your situation at the moment, and in this screen we see a condominium in Stockholm. You can see the blue thing is the usage of energy, and the yellow is the solar energy production. And we have the classic phenomena that you use a lot of your capacity need is before and after the sun is up. It's in the morning when you have a shower, you make coffee, and in the evening when you are coming home from the office. That's before and after the sun has been there. And in Sweden we pay for the peak usage, which is somewhere here in the picture. But with our system we continuously monitor and analyze this situation, and together with an energy storage we manage to use a lot of the produced solar energy, but we also shave the peaks, as we say. We keep the cost for the grid down, and we keep the capacity level down for this, which is the black you could see here. So we have a lot of upcoming possibilities around all this data collected and all this with the analysis tools and simulations tools that's coming up. So connected it into some summary and some real cases. This is a real estate area in Gothenburg. It's actually a system built by us. I think it competed for the ugliest new built building this year, and it actually won. But I'm not so proud of that. I'm actually proud of that it actually won the most energy efficient building as well. In the basement there is retired Volvo bus batteries, energy storage. And in these buildings we have connected our energy hubs together with chargers and solar energy, as you see here. So the system is very efficient. It's scalable. If you have this, you could start with the energy hub and slowly build out the system with adding on solar panels. So you don't need to do everything from the beginning. This picture shows a couple of different customer solutions. We have parking garage, residential areas, down to small houses. All of these have a very positive investment and if using ferroamp products. Up here we have a parking garage where we solve the EV charging capacity problem. They wanted to build out 100 EV charging spots in that garage. It should, with an ordinary solution, building out the grid, take 36 months and cost almost 5 million SEK. We made this happen over 4 months with a less investment. And we also at the same time saved a lot of grid costs. Different solutions on the residential area. I talked about the power share. This residential solution up here, it consists of a couple of different houses in the residential area, and they could have different capacity needs over the day and the night, and could share their capacity, and by that save both grid costs and energy. How do we reach this market? We are, as I said, working with a couple of a distribution strategy. We are working with energy service providers, energy consultants, supporting them with analysis, as well as integrators. So coming in to finally say, what's the focus for the moment? The focus for the moment for us is to industrialize our products, to scale them, to make them possible to produce in large volumes with a good margin. That has been, we've been working for some time, and we will keep on doing that. We'll find volume production partners in Asia and Europe to support us in this. We will establish services offerings to our customers, and at the same time we are looking into our partner structure to come out on a very effective way in Sweden and in the Nordics, as well as start to establish this in Europe. We have today selected a couple of partners that will bring us out, start of our European journey. In the next step, will come with our next generation of products, the 2.0, adding some functionality, adding what I talked about before, the software business model, software business, and we will grow the partner structure. After establishing that, we will grow that to a bigger part of Europe. Just to give you a brief of our competitive situation, coming back to the fact that we are the world leader when it comes to handling the DC technology and all of these components on the renewable side, the solar energy, the energy storage, and the EV charger is handling on the DC side. We have high resolution data. We have the phase balancing, as well as the power share on the grids as the core thing. That make us unique compared to a lot of our competitors. That's our unique selling points. So as a summary, we will continue grow over the period of time. We will take our products, scale them to large volume products production. We will take them on a structured way from Sweden out to Europe over the coming period. We have the business models for that, and the market is here and now for us. So that was basically all I wanted to go through today. Okay. And thank you very much for listening to me. I hope this fast journey gave you some questions over.
Absolutely, thank you very much. I think to start off, just to understand the dynamics here. So you're mentioning early on, several structural trends, speaking towards the solutions. But in terms of sales today, the sales growth you had, is it driven, for example, by solar PV or EV charging? Does it when I buy an EV charger, do I want to add the energy hub, or how does that dynamic work?
The really good thing with our products is actually that you could build them component by component, so it's very scalable products. Today I would say it's mainly driven by two things. One is the PV, solar energy build out, and the second one is the bottleneck for the EV charging. So it depends a little bit. The small villas, the small houses as a huge PV market rollout for the moment. There we could be a very effective system for the villas, also handling the phase balancing, giving the opportunity to charge an electric vehicle almost 3 times as fast as if you didn't use our system. But it's also driven of more complex businesses like the parking garage I told you, or the residential area that needs to build out some parking lots. We also have some grid support, but basically today the big trends for us is the solar energy as well as the EV charging thing.
Yeah, and obviously you had very high growth last couple of years here, and you're talking now about getting your products up to volume production. Could you just go into a bit more detail what you're doing there and where you are in that process?
Yeah, we have, as said, the good thing is that we have 1,600 systems up and running. So actually, it's technology-wise, it's proven, it's working, it's solving some of these problems that we have. We have industrialize these products as they are today in a step what we call 1.5, making them more stable volume production able, so you could do that, as well as we have of course worked with the bill of material, structured our supplier base, and that's something that we will keep on doing for the near time. So we have been producing a lot of these things internally ourselves, and now we are moving more and more to a partner network with volume production. We have moved the SSO, the solar string optimizer, in step 1 to volume production in China. We have moved our energy storage optimizer to a volume production in Sweden, and we will keep on doing that with our next products, the hub systems. We will move them to production in Europe by partners, in production partners.
Understood. And your goal then of 400 million SEK in sales, is that based on the products reaching like the 1.5 status or the 2.0 status?
Yeah.
Sorry.
We will, they will reach the 1.5 status. Some of them might also reach the 2.0 status, but it will also add the services business to that to some extent, and we will start adding on the software business. But it's based on the product portfolio that we have today, but it's growing outside Sweden to the Nordics and to Europe. That's how we create that, and adding in the services business on that.
Okay, and also to reach this level of 400 million, does that include Sweden, or does it include also selling to other parts of Europe?
It includes growing into Nordics and some of the countries in Europe, yes.
Are there any specific countries in Europe that you find as being more higher potential than others, and why?
Yeah, today we have started up with we have some installations already in the Netherlands. We are looking into the Benelux countries. We of course need to look into where the trends for the moment. It shifts a little bit between the countries, but I would say that the Benelux areas, we will look into Germany and to maybe to Spain and Portugal also for the coming period here.
Yeah, understood. And just to round off with one last question. You mentioned now you have this cloud service. With, you're obtaining a lot of data that could be very useful, and you're currently not really capitalizing on that or selling that as a separate product. What are the plans there, and how do you plan to launch that sort of initiative?
Yeah, today we will work with partners in finding solutions and cooperate with. There will be a lot of facility management systems that needs this kind of data energy management systems. So we will be open to cooperate with a lot of different companies. We will work with open APIs. We will find our way to work with them. Our aim is to build a platform that is possible to add on and work with partners over this going forward.
Yeah, I understand. And I think we have to, due to time, we have to round it off there. But thank you so much, Christer, for coming. And
it's been a pleasure to be
talking
here.
about Från. Thanks.
Yeah. Thank you very much, everybody. Bye.
Good afternoon and welcome to this presentation with Tethys Oil. My name is Carl Fredrik Pedersen and I'm covering Tethys Oil from ABG Sundal Collier. Presenting today for Tethys Oil is the CEO Magnus Nordin, and we'll leave the floor to you, Magnus.
Thank you very much, Carl Fredrik, and thank you very much for listening in, and thank you very much, ABG, for giving us this opportunity to address investors also under these rather, shall we say, peculiar circumstances. But we are Tethys Oil, and we are an oil company. And why are we an oil company? Well, we believe that oil will be around for some time to come. It's one of the most important energy sources for the world still, and we believe it will be for some time. Recent production cuts, the strong discipline within OPEC+, consolidation within US shale industry, and not least the sharply lower investment in new production and exploration that we are seeing will certainly lead to stabilization and also recovery of oil prices in the not too distant future. We certainly believe that one should increase investments when prices are low. We have a contrarian streak here, and Tethys has always gone forward in low price environments. And of course, we hope to be able to reap profits when prices return. We firmly believe that fossil-free fuels are extremely needed, but we don't think that the time has yet come. Oil consumption has continued to increase for about 3% a year for the last 10 years. And we don't believe that trend is necessarily broken. But we certainly welcome all the alternatives. And obviously, there is a limit to how much oil oil companies can produce. And we do hope consumers will realize that in the long run. But as Tethys, we will continue to do what we do best. And that is to explore for and deliver oil to consumers and do this while we maintain a very strong view on ESG and being as sustainable as we possibly can. So that's why we believe we are a good investment case. We offer growth. We just signed a new exploration block in Oman this summer, despite all the adverse situations. We are just about to gear up to drill an exciting exploration well on another block in Oman. We have good cash generation from our star performer, Blocks 3 and 4, where we have done some intelligent deferments of investments while maintaining strong focus, both on finding more oil, but also, of course, maintaining production. In July, we averaged some 10,200 barrels of oil per day, and we just released August numbers at 10,800 barrels of oil per day. Very strong balance sheet. $60 million net cash at the end of June. And we have continued since 2014 to distribute back cash and to shareholders. And more than $120 million has returned to shareholders since 2014. Our Q2 numbers, not our greatest quarter by any means, but certainly not as bad as it could have been. We were still cash flow positive, even after investments, and the operating result was negative, but we continued to generate cash even when we saw the worst quarter for the oil industry that anyone can remember. Our core area is the Sultanate of Oman. We are in this part of the world here, Arabian Peninsula, Saudi Arabia, United Arab Emirates, and Oman. And we now cover actually close to 20% of Oman's surface with our blocks 3 and 4 here, 56, 49 and 58. And 58 is the new addition that we just signed a couple of months ago. We've been active in the country for more than 10 years, and we do believe that we have a good idea of both the workings of the country, but in particular the workings of the geology and the technical opportunities. Oman is very much part of the oil fairway, has been an oil producer since the 60s. A small population, country produced before the recent cuts about 1 million barrels of oil per day. It's not an OPEC member, but a very vivid supporter of the OPEC Plus limitations. Has its own reference crude oil, Oman Blend, which trades, historically has traded a little bit above Brent. It's an EPSA regime, that's to say, we spend money, we get money back from production, and we split the profits with the government. Economically and politically, it's an environment that's also very supportive of oil companies. Oil is by far the most important part of Oman's economy, but also very focused on ESG and understands what oil companies are up against, both from the need of the services they require, but also what they can do to limit environmental damage. And of course, be a very good corporate citizen and do what they can for the local economy, where Tethys, of course, is a strong player. So, our licenses, Blocks 3 and 4, it's a production license that we acquired in 2007. It's been around, we have until 2020, and that's where we have all our production from. 49 in the south, an exploration block that we signed in 2017. We're just about to drill a well here later this year, and it's our first exploration well in that block. Block 56, an addition from last year. We signed it in October of 2019. It's oil is known there. We've tested a few wells. We also see a lot of exploration potential, and it's a clear growth opportunity. 58, our most recent addition, an exploration block. Also, previous operators have identified oil, but so far no one has been able to take it to commerciality. We have high hopes, of course, but it's early days. We just signed it, and we are going to see work over the next couple of years. Turn to Block 49. Decent amounts of seismic from previous operators. Very much of a growth case. We believe oil is present. We believe that the seismic is supportive. We have identified a prospect, the Thameen prospect, and we will drill a well down to some 4,000 meters depth to see if there would be commercial amounts of hydrocarbons, gas or oil. We are in final negotiations with several rig contractors and hope to sign a rig in the not too distant future. We certainly expect to drill before the end of the year. It's an exploration block, ample growth opportunity, but of course it's also a possibility that we won't find anything, in which case we have other opportunities. Block 58, adjacent to 49, similar geology, but also offers exposure to plays that we are familiar with from the Blocks 3 and 4 and 56 situation. We have 100%, we are the operator, also a great growth opportunity for the future. We are currently looking at legacy seismic data collected by other oil companies, and we are building our model, of course incorporating what else we have learned from operating in Oman for a long time. And we expect to have more information, of course, as our model evolves, but see some interesting features so far. 56, another growth opportunity. We have wells that have encountered oil. We just tested 3 wells earlier this year. We have an active petroleum system that is confirmed, crude oil of slightly heavy quality, but with decent viscosity. And the seismic coverage is quite good, indicating a number of other opportunities than the ones that have been discovered so far, including such that we know well from Blocks 3 and 4. As you can see here, 56 is on trend from 3 and 4. Data evaluation is very much ongoing, and we expect to get back with both more information on what we can do with the known tested wells, and of course also how the exploration program will look in the future. But Blocks 3 and 4 remain our main and star performer. This is where we have our production. Before the limitations were introduced in May, we were producing above 13,000 barrels of oil per day. We still have that capability. And as I just said, in August, we achieved 10,800, and we are able to go above that when and if allowed. But we are fully prepared that we will have limitations for at least the rest of 2020 and possibly longer, depending on how OPEC Plus looks upon that, and also what, of course, happens with oil price and supply from other sources. We have a number of fields in production. The first discovery, the Far South field, is still ongoing, has been in production since 2010. And the latest discoveries we did was the Ulfa field in 2017, which was brought on stream in 2019 and is still ramping up production. Good quality oil, average from between the various fields is about 40 degrees API. In 2020, operations right now, of course, very much colored by the COVID-19 situation. We have deferred a number of investments. We have cut down on capital expenditure, but we're still focusing primarily on the production and exploration opportunities. We expect, or our target is to be cash flow neutral after investments for the year, and at current oil prices in about 40 we've seen now for most of so far in the third quarter, which is better than we saw in the second quarter, of course. So our long-term exploration and production ambitions are unaffected. There is still ample growth opportunity. And if we look at this rather complicated but very informative slide, we have highlighted in green here our producing fields, and we have a number of potential oil fields in various degrees of exploration, where we have prospects ready to drill, but also leads that are currently being matured. And we do see ample opportunity for exploration growth, in addition, of course, to continuing our production from Blocks 3 and 4 for several years to come. One of the most important numbers for an oil company, of course, is the asset base. Exploration growth is maybe necessary for the future, but the asset base and the current reserves for us stand at stood, I should say, at just over 26 million barrels in December 2019. And it's from those reserves that we derive our production, which has been on a daily basis between 12 and 13,000 barrels of oil per day for several years. And in the early parts of the year, we were at 13 or thereabouts. Limitations were introduced in May. We dropped down here to above 10,000, and we have been reasonably steady at these levels for June, July, and also August. We have guided that we have limitations, but we should remember that there will be monthly fluctuations, and we do not currently guide for what the exact number is going to be for the rest of the year. But it's from our production that we get our revenue, and our production comes from our reserves. And we have sold and produced over 4 million barrels since 2016. And this is, of course, a tricky part for an oil company. If we produce our reserves, eventually we will no longer exist. It is a depleting resource. So one of the most important numbers to check on the health of an oil company, it is the reserve replacement ratio. And of course the trick here is, in order to continue to grow, that you increase your reserves by more than you produce. And we have been able to do that since 2013. We've always come in above 100% of the production we've had. And in 2019, we did 116%, whereas in 2018, 177%. And that reflects a little bit on what has been the focus. In 18, we were focusing on exploration. We saw development in 19, where we brought some those reserves on stream. And as I've been saying, we see ample growth opportunities still within Blocks 3 and 4, where a discovery can be brought into production very quickly, but also in our exploration blocks 49, 56, and 58. But of course, it's the production that translates into revenue, And in 2019, we sold oil for $150 million. First quarter 2020, we sold oil for $37 million, and that dropped down to 21 in the second quarter. But it's still a substantial number, $20 million worth of revenue, which translates into our cash flow. When oil was in 60 and above, we saw cash flow, EBITDA, I should say, of more than 100, close to 100 in 2019, a healthy $21 million of EBITDA in the first quarter of 20, dropping down to a still substantial 8.7 for 2020, for the second quarter 2020. And then we should remember that that was a very bad quarter for the oil industry. And obviously, the net back from each barrel we sell is very dependent on the oil price. And we see as it has come down, so has this area here. But we're mitigating it to a degree by cutting down on expenditure. So our operating costs dropped from $11.6 per barrel for the first quarter down to 10.8 for the second. And distribution to shareholders has been a very important part for us. And of the cash we have generated, we have been able to distribute through dividends, through a share redemption program, and through buybacks, increasing amounts, cut back a little bit here in 2020, given the situation that we have come into. But as I said, more than $120 million has been returned to shareholders, while we have been able to continue to increase our reserves every year and maintain a slightly increasing production. So with $60 million of cash, and the drop from the first quarter is almost entirely due to the distribution to shareholders that we saw in May after the AGM. So with $60 million of cash, with a still positive cash flow, and with an interesting growth program, we do believe we are very well placed to continue to deliver interesting returns, and in particular also growth to our shareholders. We've just signed a new exploration block. We are ready to drill. We continue to generate cash. Our production stands above 10,000 barrels of oil per day. We have $60 million net cash. We continue to explore, we produce, and we are open for other projects if those should arise. So if you do believe, or if you want to have an oil company in your portfolio, and one that has been able to give a very handsome return to shareholders since 2014, but also offer growth opportunities and potential to find more oil and increase production, I do believe that Tethys Oil could be a good choice. Thank you.
Thank you, Magnus. I, of course, have a few questions based on your presentation. First of all, addressing the continuous growth in the 2P reserves, you being able to more than replace your annual production. How do you look at the potential for yet another year of positive reserves replacement?
Well, it's certainly our goal to continue to maintain more than 100%. And given the deferral of some capital expenditure, I would still say that the exploration part and also the production part is pretty unimpaired. So we obviously no guarantees, but we are hopeful that we will continue to find more oil than we produce, also in Blocks 3 and 4.
Sounds good. And in terms of exploration, and what should be the pace that we're looking for in the years ahead? Of course, this year you're looking at the theme, call it frontier exploration well. Is it so that one frontier well per year is the run rate? And is it so that oil prices and, of course, cash inflow will be dictating the pace of the exploration program?
I think it will be a combination of them all. We hope, I mean, obviously, in Blocks 3 and 4, it's a partnership where we are partners with the operator CCD, with Mitsui and ourselves. And it's a function of both where we are on the production side and also and how quickly we mature prospects, etc. There's not a set number of wells, exploration wells, that we expect to drill. We have historically seen fluctuations where certain years had a more focus on exploration, and then we're focusing on bringing that exploration to market, more on development. So I would say we are certainly hopeful to see several exploration wells a year drilled on blocks 3 and 4. And on top of that, of course, comes our other blocks, 49 and 58, that we operate ourselves, where we will do the work needed to 49. We're now ready to drill a well. 58, we will do the exploratory work and we'll be ready to drill wells probably over the next couple of years. 56, we have 20% there. We would be hopeful to maybe see a development in the somewhat near term from the wells that have tested positively. Of course, it's also a function of oil price and available investments. But also, we will be ready to do more seismic and to firm up additional prospects there. So I think the core area will remain 3 and 4 until we have a large discovery in one of the others, if we ever get one. But with a combination of shall we say, a steady and measured exploration program in 3 and 4, combined with the growth blocks, the exploration blocks 49 and 56 and 58, I do think we will offer a very interesting exposure to finding more reserves over the next couple of years.
Yeah, absolutely. But on blocks 49 and 58, of course, you're 100% owner and the operator. Do you expect to retain 100% stake, or is it natural to assume that you will be farming down as we go along to reduce your, call it, exposure to any single wells and associated costs?
Indeed. I mean, 100% is a lot. We certainly enjoy being the operator. It's perfectly possible. I mean, everything is open for negotiation and for sale, depending on the price and depending on the circumstances. It's possible that we would have a partner at some point in the future. It's also possible, say, that we drill block 49. It's a large discovery. Well, maybe we want to go at it alone, or maybe we will, for a good price, then ask a partner to join us for the development costs if we are successful. So everything is possible here. We will certainly keep you and the market informed of any formal steps that we take. But for now, the portfolio looks as it is, and depending on how the work program evolves and also what happens in the world around us, things can certainly change.
Sounds sensible. And then the last question from me relates to your substantial cash balance. Could you please highlight priorities for use of funds that you have on your balance sheet? Could you rank dividends, frontier exploration, the lower risk organic growth opportunities on blocks 3 and 4, and lastly, further M&A activities? If you could rank those 4.
Okay. Thanks, Gottfried. Lovely. Okay. Shall we say that obviously all 4 are of interest. Start with the last, M&A opportunities. We are constantly screening opportunities, but we are keen to find opportunities where we believe that they actually contribute value. I mean, just say buy somebody else's production to have more production that doesn't really create any value for our shareholders, we are less keen on. And that has translated into taking on more exploration blocks, where we believe that we do have an edge in Oman exploration today, and we believe that we know maybe more than, well, many other oil companies, certainly in the world, about the opportunities there. And we believe that then for the cost of a seismic campaign and the relatively small cost of drilling a well, I mean, we're looking at millions of dollars per well, we can offer a very good risk reward for offering growth. If it's a dry hole, it's a small amount of cash out. If it's a discovery, it could be transformative. So whereas for us to do an M&A deal, it would be something that we would really see would benefit our shareholders greatly. Certainly, there could be some risk in there, but we don't want to jump into something that looks iffy or sketchy. We have enough use for our resources in Oman. And looking at exploration, well, I mean, obviously, as you have seen historically, distribution to shareholders is a very important part. We have a financial goals of keeping zero cash balance for the long term. So certainly, it's a high priority to continue to distribute to shareholders. While, as I pointed out, I mean, if you produce more than you increase your reserves, then you will eventually disappear. And well, sooner or later, that will happen to all our companies. But we believe there is still some years to go. So I say we will certainly prioritize distribution to shareholders, but we will also prioritize being able to maintain our reserve replacement ratios, while long term going for a zero cash balance. I hope that was a reasonable way of ranking.
Yeah, I understood it. It's, of course, a tricky one. We're running out of time. Thank you so much for your presentation, Magnus. Clearly interesting outlook while holding a conservative balance sheet. Looks like a very good business model in the current market environment. So thank you for your presentation.
Thank you very much.